second floor.
We'll see you around the timeline. Feels good to be back.
I think the Rollup is one of the most premier media brands in crypto, and Andy and Robbie are great experts at everything they talk about, and it's my favorite podcast.
Adding it to my library as we speak.
Potentially multi-chain deployments.
We are at DevConnect Day 1 here. I'm with Jesse from Space. JP Morgan, BlackRock, DTCC, Fidelity, the entire thing was just institutions. It's next level. This industry is going to the next level. And guys, I don't know what else to say. I'm bullish.
He said it, he finally said it.
I'm so bullish.
Andy's bullish, I'm bullish, we're bullish. To the top. If we're not already at the top, we're going to the top.
Rollup is my favorite.
From all walks of life, all over the world, all over this industry, come together for the Rollup.
The institutions aren't coming, they're simply here. It's the golden age of crypto, guys. Get right, let's go.
Welcome to the nest. See you on the show.
Welcome to DC, baby. Let's get it.
We are
live,
here
baby.
in
We're live
DC,
at DC
in the
Blockchain
Blazers.
Summit, day 1. First show in Blazers for the guys. We are live here in Washington, DC, the home of Capitol Hill. We are live from Capitol Hill. We're live on Rollup TV, on YouTube, on X. If you guys are watching, we are going to watch the chat on YouTube and X.
It's absolutely incredible energy in here. Think about how much innovation, how much product market fit the regulators have this year.
Yeah.
Think about it. The regulators this year and over this administration have more product market fit with their regulations than a lot of crypto companies.
Wow. Guys, before we get any further, shout out to Chainlink. Shout out to Chainlink. Let me tell you about Chainlink, the world's greatest oracle connecting DeFi and legacy finance for anything. Link everything, capital markets, crypto, DeFi, blockchains, and more. Shout out to Chainlink. Guys, we are going to kick off today's show, talk about today's topics. We've got DC Blockchain Day 1. We've got markets and weather, which we're going to come back to. There's a lot of conversation about the Clarity Act and the market structure bill. And of course, we've got lawyers, policymakers, CEOs joining the show live. Guys, to kick us off, we've got Adam Minehardt, the lead legal counsel at Chainlink Labs, to open up our first day at DC Blockchain Summit. Guys, don't go anywhere. We're gonna take a super quick commercial break, and we'll be right back, guys. Let's get this day started. Alrighty, guys, we are live from DC Blockchain Summit, day 1. Adam, round 2 here,
Yep,
SmartCon, round 1.
Good to see you.
It's good. Yeah, it's great to have you on, man.
I think last time we spoke, it was in New York for
It was in
SmartCon.
New York, and I run into you with the banner outside this morning.
Yep.
So great to be back.
Yeah, man.
Absolutely. I mean, lots happened since SmartCon. Chainlink has been absolutely crushing.
Yep. Chainlink has been good. A lot's happened, but also a lot hasn't happened when it comes to DC. So, really good to see you guys.
So this is your arena. You know, when we were in New York, we were getting a sense of how the institutional capital is starting to come into the space. You've been here. You, as the chief legal for Chainlink, you have made your mark here in DC. We see Sergey in DC quite a bit. You guys are part of the Innovation Council that came out. Tell us what it's been like to make your mark on DC. What has been the trials and tribulations in your personal experience?
Yeah, I was on Capitol Hill for almost 20 years, and initially I went to a large bank. I went to Citigroup. Very, very Wall Street, very traditional, and really wanted to get into crypto. Moved into crypto, and it's been wild. It has been quite a learning curve, I think. For me, learning the industry, I'm 6 years into crypto now, but also the industry learning DC. Very different personalities, expectations for engaging. I think the OGs in crypto are more of a, we break the rules, and I think government is very much like, we make the rules. So I think it's been wild to see kind of this like clash of philosophies.
Yeah. So Adam, perhaps we can set the context here for DC Blockchain Summit with this kind of clash in mind, really this kind of core ethos of digital assets, of crypto, that is kind of simultaneously being combined into now this more grown-up sense. I mean, look at us.
I know, right?
I mean, look at you, man.
Exactly. You look around here, everyone's in suits.
I know.
I don't see one t-shirt.
So what do you expect out of DC Blockchain Summit? What are some of the core topics that you think are most important, and just kind of walk us through why people are gathering here today at this pivotal moment in crypto's regulatory history.
Yeah, I think since President Trump took office, we have seen the crypto industry come to DC hungrier than ever. What's different though is that now TradFi is here doing crypto work as well. So I think the word that comes to mind for me is convergence. Yeah. You're really seeing crypto do crypto things, but you're seeing TradFi do crypto things. And you're seeing crypto do TradFi things. And you see that with the policies that are being pursued, both on Capitol Hill, but really in the regulators now. How can we allow TradFi rails to operate and facilitate crypto transactions? So I think what this is about here is not just crypto, but really about regulated finance. You really see a broadening of the word crypto here to really include Wall Street now. So the playing field's gotten a lot bigger. It's led to a lot of complications though with market structure, but that's the word I would say is convergence.
You're our first guest today. I'd imagine we're going to hear a lot more about market structure and the Clarity Act. We'll give you the first word on where Clarity stands right now, today, March 17th.
Yep. I personally believe it is close. I think we're within a week or two of a deal being announced. Us seeing language on the yield issue, which I think what a lot of people think market structure really is. It's a lot more things, but the ability for an exchange to pay yield on static stablecoins is the issue at hand. I think we're going to get some form of deal in the next week or two. The question is, are the exchanges going to like it? Will crypto writ large like it? And will the banks like it? So it's one thing to put something on paper. It's another thing to get people aligned. But I think we're going to see something in the next week or two on market structure, on the yield issue. The other issues that people talk about, you'll hear talked about all week, Blockchain Regulatory Certainty Act, which protects software developers, Section 505 regarding tokenization. A lot of these issues are being worked out in the background. So if we're able to achieve some sort of deal on yield, I think things could move somewhat quick. I mean, the boy who cried wolf comes like to mind here. We've been at a lot of deadlines, but I think it could move quick if all these things come together, and it feels like a lot is aligned in the next week or so to make that happen.
Yeah. So Adam, as Rob said, we're going to talk a lot about stablecoin yield, Clarity Act, market structure bill. I want to throw kind of a curveball at you. Yesterday, the SEC announced that they are contemplating a proposal to reduce the quarterly filing requirements to biannually, right? So every 6 months rather than every quarter.
Yeah.
Why would they do this? I put out a tweet, I said, this doesn't make any sense to me. Why would you do this? What's your take on this? Why would they do that?
They continue to send signals to traditional finance that it is okay to go further into crypto. And all of these small details matter. They're complicated, they're Byzantine, they're esoteric. You need a computer science degree and a law degree to really understand it. But the SEC and the CFTC are doing the hard work, making changes to the plumbing, if you will, so that TradFi can really enter the digital assets world in a big way. And things like the change they announced yesterday are really important. They sound complicated, but when you drill down to, it's another flashing green light of it's okay to come in and do crypto work if you're a regulated financial institution. Yeah. So bit by bit, they're doing the tough work day by day, complicated as all hell, but they're doing it, and they're really moving the needle on a lot of this stuff.
Yeah. So you really think this quarterly filing change is part of this gradual shift towards kind of this 24/7 trading market, this more blockchain infrastructure oriented way of doing their business?
Definitely. We saw it, something like,
that's huge.
Transfer agents, another like part of the plumbing of all of this, critical part. They made changes there. They're making changes on this. We know the innovation exemption, albeit narrower, is coming as well. And I look forward to hearing Paul Atkins talk about that later today. But really, all these things are just lining up to really make it okay to kind of go further and further in.
Could you help set some expectations for this innovation exemption? Because we heard a bit about this in Denver. Hester Peirce and Paul Atkins gave, or it might have been Mike Celia, but together the two agencies talked about some of the things that we should expect when it came to the innovation exemption. It sounds like there's a carve out where some of these digital assets are not going to be considered securities, not considered commodities. There's this special uniqueness to some of these digital assets. Could you just fill in some of these gaps? What should we expect from Paul Atkins today?
Yep. What we know on the innovation exemption, we have been expecting this for months. We know that there are Wall Street interests that are planning to litigate on this.
Right.
Likely the day it's issued. So the SEC is aware of this, and they have been taking steps to ensure that whatever they put out there is defensible in courts. This is why we've seen a narrowing of it. We expect the exemption to be quite narrow for smaller type projects, but again, to provide a safe harbor so that they can conduct innovative ways to offer tokens to build projects without running afoul of securities law. So I think it's going to be winnowed down. It's an important message though, nevertheless. And really, for the industry, you're surrounded by a lot of big companies now, which is wild. And really what we need to remember that there's a lot of small companies that can benefit from this and can become the next big companies. It's great for the ecosystem.
So leveraging some of your legal background here, also your experience on Capitol Hill, Andy and I's experience in this, our perspective comes from Gary Gensler, issuing enforcement actions against these companies where everyone was in a gray area. Now, we're kind of approaching this from the other side, and we're going to see, the large TradFi companies litigate on this issue that tends to support crypto. How is this going to resemble the Gensler era enforcement action, just coming at it from more of a TradFi angle? Can you draw some of these comparisons, or how should we think about litigation as this innovation exemption comes forward?
It's a great point that you raise, because there are definitely pockets within TradFi and Wall Street that see blockchain as a monolithic competitor to take market share from them. it's really in the market maker space where you're seeing this. The Citadels of the world,
Right.
I think, are likely to see blockchain and DeFi in particular as someone that can take market share, potentially with a different set of rules, and they're going to protect their territory. I'm not going to hit the table. You told me not to hit the table. What I think makes it interesting, though, is you have to look at the TradFi ecosystem in different spheres. So when you look at, say, asset managers, the Fidelities, the BlackRocks, I think you see a lot of alignment there on ETF products, ETNs, where they're not likely to be litigious. It really is these market maker sides. I think the most interesting part of TradFi is really the banks, particularly the large banks, where you have the Citis, the JP Morgans, the Goldman Sachs, who will be competing with crypto interests. We all know their investment banks are book runners for various crypto IPOs.
Right.
We all know that they're going to be working with crypto in various parts of their business. So talk about a challenge. If you're the CEO of a GSIB right now and you have to decide, am I for or against it? It really depends who you talk to in your business. If you're on the retail banking side, you might be against. If you're on the investment banking side and you're taking someone public, you don't want to say anything.
Right.
So I think it's going to break along different lines, but I think there's going to be a lot of litigation. I see it mainly on the market maker side, really focused on DeFi.
Okay, and my last follow-up question on the innovation exemption, within the digital assets and tokenization space, who do you think is most poised to be the main benefactors of this innovation exemption based on your knowledge of how narrow this would be?
Yeah. It's likely to be projects none of us at this table have heard of.
Really?
I think they're going to be smaller cap, newer projects that are looking at doing airdrops, some form of limited fundraising through a token. I expect it to be capped at a certain size. So I don't think it's going to be the name brands that you see at conferences like this. I think it's going to be smaller down the food chain. Could be interesting DePIN type projects. Maybe not at the level of, say, a Helium, but maybe the next type of Helium. Someone in that Helium, but maybe the next type of Helium. Spur innovation.
There are quite a few projects that fall into that category. We've heard of, Meanwhile, Daylight, some of these companies that are using digital assets and tokenization as a funding mechanism to fund the energy, the energy crisis, where we know that with AI we need to finance a lot of this. The main limiting factor is energy and electricity, and so there's digital assets and tokenization are used as a funding mechanism to drive that energy crisis forward. And I could see a lot of alignment within the broader government agenda as a means of kind of rallying around this core base.
Well, when you can take things out of the pure financial world and get into physical infrastructure and non-financial uses, yes, funded by a token, but the actual product is something that is like wireless service or solar or mapping or any of these real things. I think, to me, like, that feels like a natural area where we want to spur innovation. So we're not just talking about financial products, that we're talking about real world use cases. I think that's something I think all of us are starved for. I'm not saying there isn't any, there's a lot of it, but we could use more of it. And I certainly would like to talk more about things like that and less about trading all the time. So that'd be great to have that.
He doesn't own any Hyperliquid, ladies and gentlemen. It's okay. He's got huge Chainlink bags, but that's okay. Doesn't own any hype. Adam, one thing that also kind of came out in the last 2 weeks, I think, was CFTC, SEC coming together. There was this kind of joint MOU that was like, look, we're going to try to reduce regulatory overlap amongst our two agencies, specifically for digital assets, but also just broadly. How realistic is this? Is this just a headline? Is something that we can actually see in practice actually come to fruition? What's your take on that?
I mean, being like a longtime DC guy in the financial services world, the fact that we have a commodities regulator and a securities regulator that are not housed under one entity is insane. There's nowhere else in the world where this exists. You have ESMA in Europe-wide, the member states of the EU, Japan, Asia. It is natural for commodities and securities to be housed under one entity. because there is so much interaction between the two regulators that they need to be within one entity. I think this could be one of the most important things that comes out of this period for all of us, not just crypto, but for all of financial services, to have stronger working relationships between those two agencies. The amount of time and money wasted by companies going back and forth to two regulatory entities that are on different pages is mind-numbing. It's a waste of their time, it's a waste of the industry's time, it doesn't protect investors well. So I think we're at a unique point. Mike Seelig worked for Paul Atkins.
Yep.
There's tight personal alignment there. So I think this is one time that we can actually see. So, you see a lot of these MOUs happen,
Of course.
and they don't mean it, like nothing happens. I'm very bullish on this one,
Good.
just given that you have Seelig and Atkins who know each other very, very well. I think they can really bring a lot of alignment to the industry, to people at both agencies. We've had legendary turf wars between these agencies implementing Dodd-Frank. Some rulemakings took a decade. So it is
That's so
just
funny.
insane the amount of time that is spent on these regulatory inefficiencies. So again, probably not a big deal to people outside of the Beltway, but inside, and to people who have to deal with multiple regulators, big deal. So
Yeah.
I love it.
And would you anticipate that this materially lowers the cost and resistance for institutions, capital allocators, people trying to build on chain? Like, do you see a direct correlation to digital assets regulation, or like just kind of show us what this means for crypto?
100%. I mean, the key issue, we talk a lot about yield because that's occupied a lot of the time in delaying market structure, but really the purpose of market structure is to decide when a digital asset is a security, a commodity, or something else. The Senate uses a concept of ancillary asset, network token. So really the most important thing to the industry is understanding, is my token a security or is it a commodity? So the amount of time that industry spends trying to figure out and get outside opinions on whether you're in one bucket or another bucket, there's very different requirements if you're in each bucket with regard to disclosures, which are very laborious and time consuming. So it's extremely meaningful, both as a signal, but then in practice, where you can go and take one meeting and get the lay of the land of two regulators and maybe have a unified response from them. So it's huge. I think it's really bullish for the industry.
Adam, we're going to be talking to legislatures, regulators, policymakers, government officials from both sides of the aisle. Our understanding of the Democrats' position on a lot of the regulation that's moving forward is primarily around consumer protections. Do you think that the regulation that the SEC, the CFTC, the Clarity Act, the Genius Act, everything that we're seeing come out of this administration, we're opening up a lot of these markets? Do you think that we're doing enough to protect consumers? Should we be doing more? Or is this thoughtfully curated regulation protecting consumers sufficiently?
It's a great question. I'm going to be diplomatic in my answer. We saw a lot of enforcement under Gensler, and it tipped well past, in my view, and obviously most in industries, of what is reasonable as a way to protect consumers through an enforcement-only mechanism. Yeah. I think what Atkins is trying to do is bring that back into balance and really focus on areas where businesses are committing fraud against consumers. Yeah. And I think that's important both from a resource spend at the agency. If consumers are being harmed, by all means, go after the company. Yeah. If someone's committing a paperwork infraction that you think may or may not fall outside of your view on what decentralization is conceptually in the context of the Howey test, let's just leave that alone for now, and let's really focus on areas where consumers are being harmed. And I think that's what Atkins is trying to align. I think it is very important for us in industry that there still is enforcement. We want to see it. Industry does not want bad actors out there harming consumers. It's bad for all of us.
Yep.
So it needs to be in balance, and I think that's where we're going.
It really feels like the mantra of this administration in the SEC, the CFTC, is protect consumers without harming innovation.
Yeah.
And I think that feels like the right balance.
Yeah, it does. It definitely does, and I think Atkins and Selig are like perfectly honed in on that, getting us back to neutral here.
Yeah. Last question for you, Adam, is where does Chainlink fit in?
Yeah.
We're gonna have you on a couple more times throughout the
Yeah.
week. And you guys have made such a significant presence in DC. You've been here on Capitol Hill. So generally, how are you seeing the space, and how is Chainlink making an impact in DC to drive the whole industry forward?
Yep. Chainlink is pretty interesting. Our origin story comes really from DeFi in providing data streams for smart contracts, and they've really built to be a full stack solution for anyone really wanting to interoperate with a blockchain, whether it's TradFi, governments, or DeFi. So I think Chainlink really sits in the middle now. We know where our roots are, but we know where the future is. So I think we're looking at all angles really as a software company that has become critical to the functioning of a lot of the infrastructure. So I think it's a great perch to be in, where we kind of can see all of this evolve without being overly parochial on one particular niche area. So for us, we're trying to engage thoughtfully and really move market structure forward. That's our goal. We want to see this get across the finish line. We think it'll be good for the industry. Clarity is necessary on a lot of fronts, but I'd say foremost to really protect investors. So, and I think protecting investors is bullish for the industry.
Yeah.
I mean, that's how I see it. So I think that's where we go. Chainlink, we get to kind of look at all vantage points given who we're working with.
Yeah.
Incredible.
Kind of a similar question, my last one, and you may have a biased answer. It may just be Chainlink. I put out this tweet: if the tokenization thesis is correct and trillions of dollars of new assets move on chain in the coming years, which company will benefit the most? There's a variety of different answers. Lending markets on chain, so like on chain DeFi protocols, they get a lot of these RWAs, ability to collateralize them, exchanges, oracles. We had kind of like a wide set of issuers, et cetera. Is this right? Like, what's your view on this?
Yeah, there's going to be a lot of winners and losers as assets get tokenized and consumers start to choose the tokenized form over the non-tokenized form. I think, before I get to your answer on that, I think what is incumbent is for the industry who's helping make these tokenized assets to provide consumers and investors with a real tangible reason of why you would actually want it in a tokenized form.
Yeah.
Like, I don't want to lose vision of that. It sounds cool and it can move on, but we have to be focused on why would I prefer to have a stock in tokenized form than the other form. So I think we're getting there, and I think the borrowing lending protocols, being able to move that around as collateral, being able to trade it 24/7, these are real advantages. So I think they're there and they're coming. For us at Chainlink, we like to think we'll be a big beneficiary because we're in the middle on the infrastructure side, but I agree with the list you laid out. I think asset managers, banks, I think exchanges all stand to benefit from this tokenization play. I think the losers are likely to be your incumbents on Wall Street, and that's why we're seeing this tension that you alluded to before. So lots of winners, lots of losers playing out before our eyes.
Yeah, I mean, it's just interesting because this tokenized 24/7 trading, I saw this article on Wall Street Journal that said that institutions are kind of resisting it, and that they anticipate retail to be the early adopters of this as institutions work to kind of restructure their underlying infrastructure to actually provide for instant settlement and provide for 24/7 trading. Like, they're just not built for that.
Yep.
And so there is this kind of headbutting happening.
And underpinning all of that is liquidity. Is you want to be able to execute your trade for the best price, no matter what. So I think that also, in addition to what is the reason you would seek a tokenized asset, also underpinning that is you need deep liquidity regardless of where you're trading. If it's a thin market at 1 a.m., well, you're probably going to wait until 10 a.m. if you can get a better price. So I think these are questions that are open. I think infrastructure clearly is going to be a winner in the near term. But a lot of these crypto native firms that are set up to help transition this over stand to win. We're starting to see it already. So I don't want to name names, but I think we all know the names. We're starting to see flows follow. So I think there's going to be a lot more of that.
Yeah. Plenty more to come.
Ladies and gentlemen,
Adam
Minehardt
you so much
on
for
public
joining
policy.
us. Our first guest today from Chainlink. Thank you so much for sponsoring our week.
Definitely. Love you guys. Chris loves you guys. All of Chainlink loves you guys. So we really appreciate what you're doing. Bringing real live interviews to the masses out there. So thank you for everything you do, and look forward to speaking with you again.
Well, we love you guys
Thanks,
too.
Adam.
Thank you so much for pushing the whole industry forward. We'll see you again
Awesome.
this week.
Thank you
You have
guys.
to come up to our Empire State studio.
Oh man, I'd love to.
It's pretty insane.
I'd love to.
Adam,
Awesome.
thanks, man.
Thanks.
Yeah,
Thanks
see you
guys.
soon.
Good to see you. Yep.
Yeah. All right, guys, that is Adam Minehardt from
There we go.
DC Blockchain Summit.
Getting us
Great
started.
first segment.
Incredible.
Yeah. Key
Man,
takeaways for you, Rob.
I
What do you
think
got for us?
We covered a lot of ground. Adam helped us get up to speed on everything that's happening in the Clarity Act. I mean, a surprising takeaway right off the bat was Adam thinks something's going to happen here in the next 1 to 2 weeks. Obviously, an ambitious timeline, but we're pushing forward at an incredible pace. Hopefully, conferences like this week are helping move this thing forward as we bring together people that need to end up in agreement or compromising.
Yeah,
in
man.
order
I
to
mean,
push
I
this
actually
forward.
saw this tweet from Paul Barron. It's a kind of live show, and he said that 1 to 2 weeks, and the issue is that banks are actually going to win on the stablecoin yield component, and that's why he thinks it's going to be done within 1 to 2 weeks. I don't have confirmation on that. Similar to my Tempo rumor mill yesterday, I don't have confirmation on that, but we are hearing some rumblings here. We'll have to ask the other kind of CLOs and legal counsels that we speak with.
I think we'll hear plenty more from the rest of our guests happening this week. Another great conversation was around the innovation exemption. Another big takeaway there is that this is going to be pretty narrow, but we can expect some litigation from the bigger institutions, bigger banks. It's incredible because now I think we're retargeting who the nemesis of our industry has been for a long time. The
What do you mean,
governments.
banks?
Yeah, for so long, right, it was the governments, right? That it was the Gensler was kind of like the enemy, the villain of the industry.
Yeah.
Now we're reorienting around TradFi and banks, and those are the incumbents that are looking to slow this industry down.
Yeah. Guys, we're going to go through our markets and weather segment as we wait for Salman, the next guest from Plume, the chief legal officer at Plume, guys. So we covered today's topics. So why don't we get to the weather? It's an absolutely beautiful day
It's beautiful here in DC. Absolutely beautiful. Let's go.
It's not exactly beautiful, let's be honest. Let's go ahead and go to the weather flip here. Guys, it's 36 degrees.
Really? It was. I don't know. It was sunny
I don't know.
outside.
I was
Partly
freezing
cloudy.
on the way here.
I think it's
Freezing.
beautiful outside. Look, I was coming from 85 degrees in Florida. It is 36 degrees here in DC.
It's 36 here in DC, guys.
But-
36, windy.
But look, it's sunny outside. Yeah, it's a little breezy.
warm
It's a little
inside.
cold. Bumpy ride getting in here. Andy took the train. I was.
Yeah, that was-
There was some
that was a
turbulence
lot.
on the way in here. Tornado watch yesterday.
Yeah.
All that weather pretty much blew out, left a little bit of a cold front, but we're here in DC having a great time. We got some sunshine coming in through the window.
Yeah,
So
guys.
we're gonna have
And
some
shout out
fun.
to Relay. Powering our weather segment, some of the best cross-chain swaps in the industry. Let's give them some love, guys. Shout out to Relay. Let's go to markets. The markets are green. And before we do that, let's tell you about Frax. Frax is open digital money, the future of
It's open,
stablecoins.
stable, borderless. We're going to be talking a lot more about the Genius Act, of which Frax is Genius compliant stablecoins. You guys
Genius
are going to be hearing a lot more about this.
It's actually not Genius compliant. I got corrected by our boys from M0. It's Genius. What's the other word? It's not compliant. It's Genius. It's not compliant, man. I'm telling you, it's not compliant. Guys, the ad is still running. Shout out to Frax, the future of digital money, open, stable, borderless. Guys, we're live in DC. Great to have you guys. Great to be here. And
Let's
let's
go
go
to
to the
markets.
markets. Bitcoin
Powered by
Dream.
Zama. Happy St. Patrick's Day. It's a green day for all of our
Yes,
friends
happy
out
St.
there.
Patrick's Day.
Bitcoin, Ethereum,
Happy St.
Andy's in his
Patty's Day,
green
guys.
suits. Numbers are going up.
I've got a
Ethereum,
green suit on today. I don't know if you guys can
23.50.
tell, but I got a green suit on.
Andy has a green suit on, in case you guys weren't aware. Chainlink also up today. You guys just heard from Adam. Shout out to our friend Chris over at Chainlink. Those guys are doing incredible work. I think Chainlink personally doesn't get enough credit because think about some of the companies that are pushing forward regulation on behalf of the entire industry. You look at Shane Copeland from Polymarket. You look at Tarek and the Kalshi team. I saw Kalshi out of my way over here. Says their number one priority is banning insider trading.
Yeah, right.
Felt like that was pretty funny, especially here in DC. They're trying to make an impression. And so generally, I think there's a lot of there's key companies that are here and present in this market in the DC area, and they're making an impression. They're really helping to pull the space forward as a whole. So this is incredible work that's being done. Zama is powering our markets today.
Yeah, shout out to Zama. Confidential.
Shout out to Zama.
Guys, Hyperliquid is absolutely on a tear.
We
I
gotta
don't
get
even know how
Hyperliquid added to
to.
our market segment.
Hype's at 40. Little pullback there from 41, guys. Nothing to fret about. Don't you worry.
Yesterday was great. Yesterday, everything was up. ETH was up 10%. Bitcoin was up 5%. Hyperliquid up 10%.
Yeah.
What do you attribute this to? Anything in particular?
I just think that we had a lot of bad news and the market wouldn't go down, so it had to go somewhere, and it went up. And so I think that's all it is. It's literally we had a lot of interesting, weird news, and we went up. So, guys, that's the markets for today. I don't really have any short term.
We're also seeing correlation break between stocks, equities, and crypto.
Yeah, I kind of think that
Equities went down pretty
I kind of think
significantly.
Bitcoin keeps leading the equities markets. Like, it signaled that the equities markets were going to have a pullback.
And
So-
and I'll just on that note, remember back when gold was having the incredible rally, people were saying, okay, once gold pulls back, then it's Bitcoin's time. That was flawed logic. Bitcoin, you're right, Bitcoin always leads because it is the most reflexive. And so it makes sense that gold would have had to come down, stocks would have had to come down. We would have had to have an entire cycle reset in order for the next to start over and for the next push to be made. And so I think, now we're seeing Bitcoin lead once again. Whether this is a sustained rally and we go up from here remains to be seen, but feels like we're at much healthier levels relative to some of the other asset classes out there.
Yep, I agree. I'm glad that we're having a little balance. We'll see how long this lasts. Will be a good test of the current strength of this kind of bear market's bounce, if you will. Guys, let's move on for the markets, and we're going to go into today's news and headlines live from DC. But before we do, let me tell you about somebody. Let me get an applause in the back there. Near is the blockchain for AI, powering the AI revolution on chain, agents, Ironclaw, and more. Guys, go to near.ai to learn more, or near.org to learn more about what Near is doing. Near is the blockchain for AI. All right, guys, moving to today's topics and headlines. Interesting news.
Yeah,
interesting post here.
So I listened to this whole podcast. I'm curious how you're going to react to this.
Well, let's go ahead and listen to this clip because I think this is super interesting.
Let's do it.
And yeah, let's go ahead and play this so our audience can hear it. And I think it's something that's super interesting to hear about because I think that basically what David's saying in this is that the A16Z CEO co-founder, Mark Andreessen, is talking about no introspection required to be a successful man, to be an entrepreneur. And I thought this was super, super interesting. So let's go ahead and play it out.
Move forward. Go. Yeah, I don't know. I found people who dwell on the past get stuck in the past. It's a real problem, and it's a problem at work, and it's a problem at home.
So I've read obviously 400, I think now 10 biographies of history-based entrepreneurs, and that was one of the most surprising things. Like, what's the most surprising thing that you've learned from this? So like, they have little or zero introspection.
Yeah.
Like Sam Walton didn't wake up thinking about his internal self. He just woke up, was like, I like building Walmart. I'm going to keep building Walmart. I'm going to make more Walmarts, and just kept doing it over and over again.
and you probably know if you go back like, before 100 years ago, it never would have occurred to anybody to be introspective. Like it's the whole idea of, I mean, just all of the modern conceptions around introspection and therapy and all the things that kind of result from that are, kind of manufactured in the 1910s, 1920s.
Say more about that.
Great men of history didn't sit around doing that stuff at any prior point, right? It's all a new construct.
Okay.
It was so first Western civilization had to kind of invent the concept of the individual, right, which was like a new concept, several hundred years ago, and then for a long time it was all right, the individual runs, right, and like does all these things and builds things and builds empires and builds companies and builds technology, does all these things, and then kind of this kind of guilt-based whammy, kind of showed up. From Europe, a lot of it from Vienna, 1910s, 1920s, Freud, and all that entire movement, and kind of turned all that inward and basically said, okay, now we need to basically second guess the individual. We need to criticize the individual. The individual needs to self-criticize, right? The individual needs to feel guilt, needs to look backwards, needs to dwell on the past. It never resonated with me.
Okay, so
we had to invent the concept
of
the individual.
I think that's extremely true. I don't know. I kind of went back and forth on this. I listened to the whole pod, and I think, the way in which Mark talks about introspection is quite a bit different than what I think we commonly understand as introspection. When I hear Mark talk about this, it's second guessing. Is mainly what I think he's trying to prevent in the founders that he invests in via A16Z. What we've seen is that those who are introspective are able to learn more about, like, for instance, thinking about thinking is a way in which you can improve your logic, the way in which you think, you can come up with better ideas, end up making better decisions, and ultimately improve your circumstances. And like Mark says, the world around us is much more malleable than it may seem. And so by having the willpower to manipulate the world around you, you can make changes and improve your circumstances. That does not require introspection so much as impacting your will upon the world. But you need a very clear understanding of your will. What is it that you're trying to impress upon the world? What change are you trying to affect? That doesn't require introspection. It just requires knowing oneself. And so I think Mark's definition of introspection diverges from what we would, because you may think, I need to look inside myself. I need to understand what I am, what I want, what changes I'm trying to affect. All of that could be considered introspection. Mark's definition separates from that. I think he's mostly saying, don't be stuck in the past about what you were doing. Don't be second guessing changes that you've made. Be focused on the future and what changes you're trying to affect in the future and will those into existence.
Yeah. Thank you, Rob. Thank you for that, Rob.
What do you think?
I don't know. I'm more on the team Mark. Yeah. I think about things and then I introspect about them and then I write in the journal once in a while.
Oh, so you do introspect?
But I pretty much just floor it. Full steam, New York, 100 miles an hour, just very little thought about what happened an hour ago or a day ago or yesterday or that last week. Just floor it.
Just floor it. It's pretty good. All right, guys.
Let's take a super quick break. Because we got the Constellation founders. They're going to join us next. Our guy Salman from Plume is going to join us a little bit later. I think he's rug pulled us. That's okay though, guys. We'll be right back with the Constellation team.
deep. We get deep. We get deep hard. You know we get deep.
Let's go. We're back. We're live.
All
Benjamin,
right,
welcome
baby.
to the
Let's
show.
go.
Yeah.
Let's go. Let's give Ben some love, guys.
Good energy here, you know.
Let's go, Ben.
I love it. This is awesome. Yeah.
What's your reaction so far? How long have you been in the city, in DC, and making an impact here in the government capital of the world?
Yeah, appreciate that, bud. Yeah, we got in last night. We've been a part of the Digital Chamber for quite a few years. Last year, we were the flagship sponsor. And one of the things we're excited about is that our company was acquired in this last year, so that was a big shift.
Congratulations.
I'm very proud of that
Some
because
love
we
for
believe
that.
that's a good signal for the industry, right? Like that the consolidations are happening. Those that have been following our project, we've been contracting with the DoD doing blockchain solutions for the last 7 years.
Okay.
So we've been very involved in policy shaping, a lot of the stuff that's taken place here on the Hill.
And could you give us a bit more context into what the DoD is using blockchain for? Is it logistics, operations? You know, I think they're probably not tokenizing too many assets.
Sure.
But what are they? Is it supply chain things? What are they using the blockchain for?
Great question, Robbie. Yeah. So what we've been focusing on is really provable guarantees is the crux, right? If you think about immutability with blockchain. The big use case is, say you have to send a secret mission or a top secret mission communication to a contracting partner, so somebody outside of the DoD sort of mothership. When doing so, there's a propensity that it could be stored somewhere, altered, corrupted, changed. But by putting that information, that sensitive information that is cryptographically signed on a blockchain, they have that 100% provable guarantee that it hasn't been altered when they're receiving that message, which is an extremely important thing when you're talking about government defense.
So the DoD trusts blockchain? They trust
Yeah, we
blockchain
were
and
actually
super ledgers?
approved by the DoD Air Force Research Laboratory in October of 2022 as DoD approved, scalable, and secure. So very big deal for us.
And now, how will things change now that you've been acquired?
The big reason that we were acquired was because of the benefits that blockchain brings to AI. I think that AI is going to be the forcing factor when it comes to regulation that, hey, you've got this OpenClaw agent swarm, if you will, that's out there. Do you have a trust layer? Do you have something that's preventing, unwanted prompt injections and stuff like that? So I think it kind of is like the unsexy Robin to the Batman, if you will. Everybody wants to talk about AI, but how do you make sure that you're keeping it trustworthy and enforced by a blockchain?
And in Constellation Network, is there a notion of privacy? Because we can't have, you mentioned the immutability, right? And the secrets, the confidential information, classified information is not to be tampered with. Is it also invisible or private from prying eyes?
I mean, by nature, that's just really how it works. At the same time, when it comes to things like identity access, it's more about having that guarantee of knowing who did what, right? And leaving it up to the, those that have to have the discernment or the decisions to say, This person was not allowed to get in on this conversation. Good example is, I don't know if you guys remember a year ago when that Signal thing happened, where
someone was added to the group chat, and then
that
all
wasn't
of a sudden,
supposed to be. Had they had like signatures requiring for people to access that using blockchain enforcement, that wouldn't have happened. But you know, we're all still humans, and corruption really comes down to the human condition, if you will.
We've heard a lot about the blockchain being a solution for AI deepfakes. People are coining the 2028 election as the election of AI and election deepfakes, thinking that there's going to be propaganda, campaign material, and we're going to have this AI, and we may not know what's real and what's not when we're seeing, you know, what looks to be a very professional, you know, video of a candidate, and they're saying something that sounds ridiculous and wild. We're going to have to use our better judgment unless we use signatures via blockchain to authenticate some of this material. People say that, you know, we could have a candidate include a hash or a digital signature that proves the authenticity of this material. Is this where you see this heading? How much prudence do you give to this claim? And what is this the right way to be thinking about the intersection of blockchain and AI in the next couple of years?
Yeah, great question, Robbie. I'll tell you what, right now we're living that reality that we can't trust what we see. Look at what's going on with this war, right? There's been all this controversy the last few days if certain constituents are alive or dead, and now people are using AI tools to say, is this even a real thing? Which I think points to this sort of like weird moment that we're in as a society that we can't trust anything anymore, right? And so therefore, if like we do have this elixir that is blockchain, and I'm not here just to promote Constellation, I'm here to promote the industry. I think this is good for everyone to have something that allows for that checks and balances, right? Imagine if there was a live feed from CNN doing a debate with two presidential candidates, and they've got a QR code in the bottom right-hand corner that you can scan, and now it's validated on a blockchain at the lat long. These are, you know, the camera, all this stuff gives you at least a semblance of trust and faith in what you're seeing is real. Right now, it's we don't have that, right? We have to take the media's word for what they're producing, and trust is at an all-time low because we've been duped so many times, right? So yes, I do feel like this is going to be a really exciting election season coming up, considering technology has gotten pretty weird.
Yeah, especially as, you know, we see Telegram hacks, more and more news, like market-moving news that nations are dependent upon, comes out on Twitter. Like that needs to be proven. We need to tighten the security
or
of
Reddit.
these things.
Or 4chan.
National
you never know,
issue.
right?
Yeah.
Yeah, man. So it's, you know, it's an exciting time to be alive. At the same time, it's sort of a white knuckle moment for a lot of industries. AI being a big one, right? I have to say the genie's out of the bottle, the toothpaste is out of the tube. You have all these companies that feel this FOMO of like, if we don't use this, we're behind. But we're scared because we don't know if we're going to cook our entire system by allowing access to agents to our sensitive stuff. So I think we should get excited about the fact that we have some stuff that can solve some of these issues that are staring us right down in the face.
Yeah. What does your day-to-day look like? Just kind of a way different question here. Like, what is the company that has acquired Constellation, and what is your day-to-day? What are you guys you know, creating in the world?
Yeah. I mean, right now our big focus, now that we've done sort of a pretty bang-up job when it comes to the federal penetration of America, we incorporated Constellation EU last year. We're expanding into the European Union. I just got back from Berlin, going to Lithuania here soon, and working on some pretty sensitive but very cool projects in which folks are saying, we got to move quickly. So there's that whole side of the business. But then our other side of the business is on that emerging AI. I know everybody's tired of hearing about it. It's like the worst thing to constantly hear about. That said, there's just too much action to not look at it with a hard lens. And so our engineering group, and this has been a big pivot that we've seen in the industry, went from being engineers to orchestrators in a matter of 3 months, which I've never seen anything like that in my career, where they're orchestrating agents versus actually doing coding themselves. And so this year, I think what we're going to see is a massive shift in industry. So our day-to-day is by being very nimble. The work I do is the unsexy, boring stuff that it takes a long time with those sales cycles when you're working with, foreign governments. But anything that's going to create a better trust layer of interoperability where people can securely communicate without worrying about their stuff being, intercepted by adversaries, I think opens up a pretty exciting time because right now, we need more technology, we need a hole in the head is what I always say. What we really need is we need people to come together, and that's largely what this conference is about, so that we can outline those regulations and policies and rules of engagement, if you will. But the forcing factor is here. Everybody in this room has a little stress that's running underneath the current of not knowing what the heck is going on.
There's a lot of blockchain companies, tokenization companies, digital assets that are looking to partner with some of the larger financial institutions of the world. Given that you've partnered with one of the largest institutions in the world, being the Department of Defense and the US government broadly, what does it take to land one of those deals? What is the sales cycle like? Does it start out as you're sort of a trusted advisor, you're educating them on what blockchain is itself, and then you work into the role of a partner and a service provider? Or just generally, how does that sales cycle and that experience work?
Yeah, great question. From my experience, I've come up with my own term that you need the 3 Ps. They have to have a requirement that is outlined, like, hey, we have a problem, that's the first P. Second is you have to have the people that actually can absorb the solution and operationalize it. And then you need the purse strings. They have to have funding set aside. And if you don't have that grand trine kind of aligned, it's gonna be really hard to break in. But the way you do it is through relationships. That's largely what these types of things are about, right? Finding the right people and educating them at where they're at versus trying to get them to speed up. I use a lot of analogies with 4-star generals, Medusa's at the scene, it turns the data to stone, like trying to talk about immutability. And they'll be like, I get it, let's move forward. And then of course, when it comes to the operators, the people that have the hands-on systems, those are the ones you really have to prove it with. But these sales cycles, like for us to break into the government, we started out with what is known as the Small Business Innovation Research, which protects small businesses from the major primes, because we're not going to compete against a Lockheed Martin. We don't have their resources or their relationships. So they have these programs to bring innovative tech in and let it gestate through those channels. But it took us, you're looking at at least an 18-month to 2-year sales cycle to break into the government.
Are those primes, are they thinking about blockchain? I think they're probably thinking about AI at this point, but typically the faster-paced technologies, the AIs and the blockchains are fit for the disruptors and not the primes. Do you see that similarly when you're working at the scale of the government, or is it that now that this technology has become adapted and scalable enough, the prime contractors are also thinking about blockchain and thinking about AI?
Well, they're always going to say they can do everything. Okay. And often when they're talking about what is known as a needs statement from the federal government, hey, we need this thing, they may not say blockchain specifically, but all the different things lead up to like, hey, this is the only thing that can match those requirements.
Got it.
That said, like the National Science Foundation, other groups have true open topics specific to distributed ledger technologies. Even as Niche is saying, we need this to be a directed acyclic graph blockchain.
Wow.
We know that we need this to work at the edge, low or no connectivity environments, and we need it to be able to scale to upwards of 80 to 90,000 transactions per second.
Yeah.
And so when you're getting that niche, that really shortlists a few companies that actually can participate in that sort of a bid. So having those relationships of folks that are sniffing those out and walking us in really matter. And I'd say my biggest pride in the last 7 years is having so many letters of support all the way up to the Secretary of Defense office that allows me to go into a room and be like, I don't just trust me. We've got other people on board to support this. But last thing I'll say on that topic is we're here to represent blockchain, not just Constellation. We do not believe there's one blockchain to rule them all, that there's so much opportunity for everybody in this room to get involved because the pie is absolutely massive.
Benjamin, thank you for being a part of the DC Blockchain Live Summit show, for a successful exit for 7 years, building on the American defense scaling industry. Best of luck on the travels to Lithuania. That should be a lot of fun. Thanks for joining us, man.
Yeah, you guys are doing great, and cheers to the roll-up. Let's kick some ass.
Thanks, Ben. Cheers, buddy.
Yeah, thanks, guys.
Yeah,
that
so
was
much,
great.
Benjamin. Yeah,
sweet.
pleasure.
Well,
Alrighty, guys.
We'll see you next time.
We continue the DC blockchain coverage. We had the chat going crazy on that. You guys got to chill out over there.
Department of
Chat
Defense
is going crazy on
contracts
Constellation.
over here. We've got our next guest. I don't think we're going standby or anything.
We got our next guest, Alex, the CEO of Chiliz.
From Chiliz Group.
Yes, sir.
Which is doing some interesting things in the sports and blockchain convergence as well. So we can have Alex come on over.
Yeah.
Probably. Yep.
There you go.
Yep, there we go. Alex is making his way in. We have a
Guys,
name.
everyone is wearing suits here.
Yeah,
There
it's
is
incredible.
not a single non-suit in sight. There are ties everywhere. People are absolutely fired up for blockchain and for digital assets. And nonetheless, we've got Alexandre Dreyfus, the founder of Chiliz, one of the most, if not the most prominent sports and entertainment blockchain company in the world, powering the likes of Juventus, FC Barcelona, and many others. Today, we're going to talk about the transition into the United States, the push towards RWAs, tokenization, and more. But first, Alex, great to meet you.
Nice to meet you.
Welcome to the Rollup.
Thanks for the invitation. Happy to be here. First time that actually I do a live podcast like this, so it's pretty cool. So
Here we
yes,
go.
Yeah, it's cool. Well, just a bit of an introduction about us. We are 8 years old. Look a little bit older. We are in Europe, 200 people, focusing on just one thing: tokenization of sports. That's it. We are not here to change the world. We are not here to change stablecoin, finance industry, whatsoever. We do sports. And for the last 8 years, we've been the company, so it's called Chiliz, of course. We are a layer one, dedicated to sports. We have a consumer-facing app called socials.com, which is more or less a wallet with all the utility of the fan tokens. And the fan tokens are the digital asset that we invented, fungibles, they are not NFTs, that give you more or less right to vote on decision of the club, being kind of a super fan or a super member of the teams. And we work with more than 80 sports teams all over the world. So as you said, FC Barcelona, Arsenal, Man City, PSG, Atletico Madrid, Inter Milan, Juventus, and all that stuff. We do that all over the world, in Brazil, in Turkey, in Japan, in Malaysia, in Indonesia. And we are looking to come to the US.
Incredible. And so, 8 years ago, this industry was very new. Tokenization, blockchain, for the most part, when people first interact with this technology, they say, okay, this is a good application for money, financial instruments, these kinds of things. When you saw blockchain, tokenization, what made you think, oh, we should apply this to sports?
So for us, it's become, we actually came from the sports space. We came from the online poker space, actually. I've been an online bookmaker for 10, 12 years, 2004, something like that. And online sports betting, online poker, online casino. So we worked for 15 years in that space and then ended up going into crypto. But we went into crypto because of sports, not the other way around. And we tried, we always say, we're trying to find problems that crypto can solve. Well, for us, it was the other way around. Finally, there is a problem. Sports teams all over the world have fans, and they don't know how to engage and monetize their fan base. So what can you create that is both valuable for a fan and scalable for a team? And that's where we invented this concept of fan tokens, this concept of giving a voice to the fans by giving them a way to be part of being a member, a super fan, as I said. When you're in Japan or in Korea and you're a fan of Manchester City or Paris Saint-Germain, what can you do? You can follow them on Twitter. That's a one-way relationship. We thought that instead of just being a spectator, you can become an actor of the teams you support. And that's where we believe technology can bring value.
And you guys are bringing this into the U.S. Is that what I understand? Is there a broader kind of strategy here from the Chiliz side now that we're seeing more regulatory clarity, more positive regulatory enforcements? How are you guys approaching your entry into the United States?
Positive is the right word. Clarity, I hope it will be as well.
There we go.
So we, to give you an idea, in 21-22, Chiliz or socials.com or a consumer-facing app, we did sign 27 NBA teams, 13 NFL teams, the whole MLS, few NHL, UFC, and few other stuff. We signed all of these teams, which was 88 teams, I think, with a vision that, okay, guys, we're going to sponsor you first. And in our agreement is if/when there will be a regulatory framework that allows us to launch a token, we'll do it together. Then November 22, FTX happened. Then there was the Gensler/Biden war against crypto. So we had to exit. We lost $80 million into this. So the money we spent by promoting and working with all of these teams, we paid everybody, which has been very painful till today. But we get a very good relationship. And now it's the opposite. We have a very pro administration. We have a president who launched its own token. We have regulators that are here. I mean, this kind of event would not have existed 2 or 3 years ago. So that's great. But when you work, for us, can we launch a token in the US tomorrow? The answer is yes. There is enough clarity for me or guidance to do it. Is it enough for a $6 billion franchise to do it? The answer is no. So we do need to have this regulatory clarity. Either it's the Clarity Act, it's a SEC giving guidance, launching this innovation exemptions format or whatever, but we need a piece of paper that says, yes, you can do that. Once we get this, us or the industry as a whole, then we will be able to launch teams we've kept very close contact and relationship and that are ready to go live.
So there's actual MLB, NHL, NBA teams that you believe will have a desire to launch their own kind of like franchise token?
I have major league teams that are ready to go public, that they're waiting for a regulatory clearance to launch their token.
And for fans of these teams, can you just help us understand what this is going to change to the fan experience?
So, again, in most of stadium, I'm not sure in US, but let's say in US you have 50 to 80,000 people in a stadium, something like that probably. That's great. But all of these teams has 50 to 100 million fans globally. In the US, of course, but also globally. I could be a fan of the Lakers, like everybody else in the rest of the world, or the Bulls, or the Celtics, etc. The original idea of what we do, it's we call that fan token, but as a fun fact for you, the original idea on the first white paper in 2018, in early 2018, we used to call that a voice token. Why? Because we are giving a voice to the fans. But then what happened is people thought we were going to launch a new Skype, so we had to stop because they thought we were going in telecommunication business. So we created the fan token. What is a fan token? It's a fungible token, like kind of a membership program, loyalty card, where when you own one token, you can vote on decision of the club. Not to buy the players, not to decide what to do. That's the job of the owner. And if you want to be an owner, that's the next conversation we're going to have about real world assets. Yeah. But in the meantime, what we've done for the last 8 years is we've given access to fans from all over the world to be able to vote on what's going to be the design of the jersey next season. What is the music in the stadium every time we score a goal. All of these kind of real things that never been asked to their fans.
Yeah, of course.
And you know what? This is valuable. It should not be a free Twitter survey or something like that, because otherwise it's going to be hijacked. Back in the years on Twitter, you used to have, was it Liverpool, that used to ask on the Twitter something like, which thing do you prefer between A, B, C, D? And you had the fans of other teams that were hijacking that because it's free. So of course you need to have an entry barrier. And that's where token is perfect. And that's where blockchain proved that it's transparent about who voted, not who as a person, but that's the fans who own the tokens. They didn't vote twice. There are no big whale that can vote for everybody else, etc., etc. So for us, it's about it's really like becoming a super fan. I like this kind of energy. There is the casual fans, but you know what? I want to be closer to my team. I put my money where my mouth is. I can buy a jersey. But when I'm in Asia, I'm going to buy a fake jersey, and I'm still a fan. Yeah. So give me access to something that is digital, that is safe, not an NFT, but something that gives me rights, and the rights are for fan tokens.
How important is the World Cup to this America launch?
Yeah, it's in New York, it's in Atlanta, it's all over the US.
It's all over the country, and you're making a push into the United States.
Yes.
Yeah, tell us about how the World Cup is going to fit into the rest of the Chiliz.
So that's our third World Cup actually since we exist. 1998, and then the World Cup in Qatar as well. So for us, this time it feels different because it's in the US, market is opening one way or another, there is regulation clarity for sure. The World Cup is an event for us to talk, and you are talking to me because there is the World Cup, and that's great. I appreciate that, guys. But I always like to say that the day the World Cup will end, we're still gonna work, and we're still gonna doing our stuff for the next 5 years, 10 years, 20 years. The World Cup, though, is an opportunity for us to highlight that we are working with national team. We work with Argentina, Portugal, Italy. We're going to announce more teams. So these teams have tokens. And these tokens have a trading life without the World Cup, of course, but especially during the World Cup. They trade like a meme coin-ish. It's a meme coin with utility. And I cannot talk about price and stuff like this, but I invite the audience to look at Argentina during the last World Cup, which they won, to see the trading activity during the last World Cup. And that's what 4 years ago. For us, this World Cup is just a way to accelerate our narrative, to talk about what we are doing, to explain what is SportsFi, GameFi, DeFi, SportFi. That's the narrative we want to push. But it's just, at the end, no offense to it, it's just a 1 month event in a 20 years project.
Yeah. May I ask why you are here?
For the weather, obviously. So we are here as the main sponsor of the Digital Chamber Blockchain Summit.
Awesome.
We've been partnered for a year with them. We are here because everything that we do is about education. It's about education of sports team. That was layer one. We need to convince the sports team to have access to the IP. Education of fans. We've been working on that everywhere in the world outside of the US. Education of media. What are we doing? What is this thing? That's very important. And education of regulators. Regulators being being regulators or lawmakers, two different things. And this has been key for us. I've been very lucky to be at the White House, to be the SEC last year. Gonna do that again this year. And here, it's an opportunity for us as a company, as a foreigner especially, to be able to have access to everybody under the same roof, and to explain, hey, this is a real use case. There is real users. We've been doing that for 8 years. We are legit. There is a track record. It's a concrete project that's not gonna disrupt the bank industry, the yield, or whatever you guys want to fight about. For us, it's a very simple project.
So I put out this tweet asking about tokenization, and I'm just going to pull it up because I'm curious your answer for it. If the tokenization thesis is correct and trillions of dollars of new assets move on chain in the coming years, which company will benefit the most?
Hopefully us as a platform and an ecosystem for sure. So I have an 8-year-old kid. He's spending all my money on Roblox. This generation is going to focus on investing in digital assets. They will never buy traditional stocks as we know them. Sure, there will be tokenized stocks if you want, but there will be still company stocks. I believe, and we've been believing for 8 years, that people who are above 15, whatever, Generation Z or something, these people will spend their money where their mouth is. And their mouth is not about tokenization of a building. Can you tokenize this? Yes, great, cool, but who cares? I mean, if I can have access to 0.001% of my favorite team, and it gives me benefits and merch and stuff like this, this is priceless. Why? Especially because it's never been done before. So we are a very strong believer that outside of the US for now, because that's where we will start, tokenization of sports equity will be a massive thing, and that's $1 trillion industry. And just to give you an idea, the sum of all the big franchises in the world, it's currently today at $600 billion, and because it grows 5-6% every year for the next 10 years, it's $1 trillion plus. And our job is to try to tokenize what, 2, 3, 4, 5, 6% of this. It's already more than enough.
Yeah, and so there's already sports organizations in the United States. The one that comes to mind is the Green Bay Packers.
Exactly.
Right? This is a community-owned sports team. Like, the city of Green Bay and the citizens and the residents in this city are the equity holders of this sports organization. So there's already a precedent for this in the NFL. When you're looking at expanding that proposition and doing it in a tokenized format across the NFL, the NBA, other sports leagues, what is the path? What is the, like, do you need regulation? Do you need buy-in? What is the path, the sequence that you see What are some of the steps that you're going on now?
Our roadmap for that is the following. So two things about Green Bay. First, Green Bay, everybody thinks that indeed fans are owners. It's actually not true. It's fake shares. So yes, of course, they are represented, but they actually don't own any equity. It's not real equity. It's fake, quote unquote, equity. Okay. The second thing is this exists already in the rest of the world. In Brazil, in Spain, everybody knows Real Madrid and FC Barcelona, right? These teams are not owned by billionaires or private equity. They are owned by their socios, which in Spanish means members, associates. And so that's why we're called socios.com as a consumer-facing product. And so Real Madrid and Barcelona are owned by 150,000 members. And these are not equity. It's a bit of an equivalent, but it's not equity. They cannot sell. It goes from family to family, etc., etc. So this model kind of concept exists originally, and that exists in many countries all over the world. Now, the way we see it is we will start in acquiring us. We will start to acquire minority shares of some of the teams we are working with already in Europe because these are already equipped to do that. We could buy tomorrow with teams we are working with because we already have their existing fan tokens. We have relationship. We've generated thousands of millions of dollars for them for the last 8 years. These teams are open-minded to sell maybe 1%, 2%, and we tokenize this. That's step one. Step two, and then eventually, potentially, merging the kind of utility token to this new generation of token that I don't know how to talk, where there will be equity/hybrid model. We need to invent a law for that, a law or a regulatory framework, but that's what we need to do. The second generation or the second step will be US. So beside Green Bay Packers, which is very unique, NBA and NFL rules prevent retail access to ownership. So there is, for example, no listed company really, except in New York for a very specific reason. But you and I we cannot create a fund. We cannot take $1 billion and we cannot buy 2% of or 5% of. It's illegal. I mean, it's illegal. It's against the rules of the leagues. So my personal bet as an owner of this business is that in the next 2 to 4 years, there will be a change of rules in the NFL and NBA where they will give access to a retail branded vehicle that will eventually be tokenized and that will give access to the fans. But this will not come easy. It's much better than a listed company because nobody wants to list. If you're a billionaire, why should I list my vehicle? I don't want that. But can I give access to my fans to a piece of ownership? 100%. And that's where tokenization is the perfect use case. Yes.
Look at the basic example of stable coins. They had to first accumulate the treasuries in order to back the stable coins that they can then issue. Similarly, we're seeing this in the private credit market. You have companies like Dinari and Plume and X stocks that are looking first. They buy the shares of the companies, they put them in an SPV in the Cayman Islands somewhere, and then they issue tokenized versions of those stocks. So we're seeing this happen in the tokenized equities market as well, and the private credit market is the same. And so it makes complete sense what you're talking about, the model. The model is that you're going to accumulate equity in these sports teams, you're going to put them in some sort of special purpose vehicle, and then you're going to issue these tokens, maybe they're member tokens or Socios tokens, come up with a new name, and you end up issuing those shares of those sports teams to a retail audience.
Yep. So that's exactly that. The way we see it to make it work is to create SPV either for each teams and or like a SPV per leagues or stuff like this, and tokenizing this. It's still too early today. Yeah. Everybody will always talk about it. Hundreds of people tried before, to be clear. But because we have this legacy, we have this track record, we understand sports, and that's the thing, not sports as the game. I don't understand anything about the game, but we understand the sports industry, the sports businessman, the owners. I've met NBA owners, NFL owners for the last 5 years, and that's where we think we bring value.
Last question I have, maybe Andy has another. How much revenue, when you're selling these tokens or the shares in these companies, even putting aside the member tokens or the owner tokens for a moment, how much revenue can you generate for some of these sports teams when you're selling fan tokens?
The official number I've made public is that we've generated more than $700 million for the sports industry since we launched.
Incredible.
So
and what can we expect from the launch in America for some of these?
It will be hundreds of millions of dollars.
Hundreds of millions.
Yes.
Yeah.
It will be spread because you have how many, let's say on the 3 major leagues or 4 major leagues, you have already 80 teams.
Yeah.
Or 100 teams more or less. So it is definitely few millions per teams, not the first year, but over 2, 3, 4, 5 years. And if it's 100 teams, it's already $500 million roughly.
Yeah.
So it is, but it's not that because you launch a new product from scratch that suddenly people are craving it and wants to buy it. It took us 8 years to be here today, and yet nobody knows about us.
Yeah.
So it's going to take us another 5, 10 years to do what we want to do, and that's fine. We have time. But yes, it is in hundreds of millions of dollars.
I think it's somewhat misunderstood the way that the sports companies work. You know, when these owners are able to generate more revenue via products like fan tokens, they can pay their athletes more.
So it's
right?
exactly that.
And it all flows. It means that more people can be professional athletes. Like this all ends up flowing to the entire organization.
So what made us successful in Europe is COVID. When COVID happened in 2020 and 2021 especially, the stadiums were empty. So suddenly, football teams say, shit, we have 100% of our fans that are not in our stadium.
Yeah.
How can we monetize our fans that are not in our stadium, that are still our friends? And that's how we really picked up everywhere. And that became very successful. Here it's a bit the same. The conversation, for example, I had with an NBA team recently was, we want your product because the, how do you call that, the cap of salary is going to increase, I don't know when, but there is an increase of salary cap, and therefore we need to make more revenue. And therefore we need new partners and new product. Yeah. And that's as simple as that. At the end, these guys compete against each other on the sports field, but they need the best players.
Awesome. Well, really appreciate you joining the show today. Best of luck in the launch in America, and let's stay in touch. Really great to have you on today. Yeah.
Thanks. Welcome to the US, man. Thank you for joining us. Guys, sports fans around the world.
Love it.
We will soon be buying fan tokens.
Look, I mean, we know that accredited investor laws are going to change. We're going to have more, conversations about this. We're going to be opening up and democratizing access. Yeah, you might, yeah. Go around, yeah. Okay. Alex is actually staying in our hotel. I ran into him last night. Yeah.
We got Alex Topscott. He's coming up next. Friend of the show. He's got his book in hand.
There we go.
Great to see the guy, fellow Canadian as well. Alex,
hey, Chance, how you doing?
Great to see you in person, man.
Yeah, good to see you.
Welcome to the show.
I brought you guys a little present here.
Wow,
beautiful.
Thank you.
Put that up right there.
Yeah, let's do it.
Yeah, thanks, Alex.
Tell us about it. Web3. This is the book.
Yeah, this is the book. The book that, in many ways, is kind of the sequel to the first book. We wrote Blockchain Revolution, 2016. Now, that first book came out at a time when the whole crypto market was about $10 billion in size, and most people didn't really know anything about it. So we felt that the market was due for a bit of an update on everything that's happening. So this book tackles some of the big topics that are being featured at this event, tokenization, stablecoins, DeFi, market structure, all the rest of it, but also looks at the cultural and social impact of this technology, how it's democratizing not just access to financial services, but also to new ways of connecting globally, building wealth, scaling businesses using this technology, and it even actually delves into the opportunity for AI and blockchain to come together. So the book's over a year old, so it was a little bit ahead of its time in that respect.
Speaking of democratizing access, we just had the CEO of Chiliz come on the show and talk about democratizing ownership in sports teams. So we're also seeing this in equities markets. We think that accredited investor laws are going to be ripe for a shakeup. And so ultimately this is opening up markets, opening up asset classes for a much wider range of investors.
Yeah.
How are you reacting to this? What are some of the greatest opportunities that you're seeing?
Well, I mean, my thesis has been for a long time that this technology is ushering in a new era of the internet. That for decades we had an internet of information, and now we have an internet of value. And in the same way that the first era of the internet made it easy for anyone to access information, to publish information online, to communicate, to connect, that blockchains do the same thing for money and for assets. That it gives anyone anywhere in the world a way to move, store, and manage assets, a way to build wealth, a way to launch new businesses, and a way to connect with people around the world on a sort of deeper and more fundamentally economic level. And to me, that's really, really exciting. I think that for a lot of the early days when we were explaining this technology to people, we had to imagine some of the potential killer apps and use cases. Bitcoin is interesting as a store of value asset, but some people just don't buy into that thesis in the same way that some people don't buy into owning gold as an investment. So what we needed was ways in which people were using blockchains as a rail to move money and assets around the world. And so I really believe that stablecoins became one of the best and easiest things that we could point to in explaining the potential of this asset. That now anyone, anywhere in the world can move money peer-to-peer just as easily as you can send a WhatsApp message. And there's product market fit for digital dollars, but there's probably product market fit for dozens of other assets, and we're starting to see that with the explosion of RWAs and other applications.
Stablecoins really are the tip of the iceberg. We're also seeing things happen in the rest of the RWA market. We're seeing private credit, we're seeing tokenization move high quality assets like treasuries, like equities on chain. We think that once these things land on chain, we have high quality assets on chain, they end up in DeFi. You get better liquidity, you get composability across what is currently disparate venues.
Yeah.
And then you can get some really, really interesting products and innovations like vaults. We're hearing from asset managers, vaults are really particularly interesting. And then you have the entire AI wave. AI managed vaults is really, really creative and unique thing that can happen as a result of coming with stablecoins and high quality assets on chain. Do you think that this is the progression? Does it all start with stablecoins and the rest of this is all downhill from there? Is that right? The right way to think about this?
Yeah, absolutely. And I think the discussion around AI is probably the most important one that we can have today, which is that AI agents, it's pretty clear at this point, are going to be a big part of our world, right? They're going to be doing all sorts of important knowledge work in the economy. AI agents building marketing plans, AI agents, doing accounting and filing tax documents, agents diagnosing disease, agents that teach and so forth. And these agents, this software is going to need a way to transact and to do business. Now we've heard a lot, Circle as a company, for example, a company that we featured in our original book way back in 2016, is a company that's demonstrating that agents prefer to use stablecoins when doing transactions because they're machines, right? They're digital, it's digital, it's a machine-readable form of money, and it's faster than what else is is available. But there's a deeper and more fundamental story here, which is that agents need not just a way to move money, they need a way to enter into agreements. They need a way to work with each other. They need a way to store value. They need a way to resolve conflicts. And all of the things that you and I and the three of us, we all rely on for that, we take for granted as people, is not available to agents. Agents can't open a bank account. They can't sign a check. They cannot incorporate a business. They can't sue. Right? They can't sue in court because they don't have legal standing because they're not people. They can't enter into a legal agreement, a contract, but they can send a stablecoin, they can have a vault, they can sign a smart contract, they can do on-chain dispute resolution. So it's not just about moving money, it's about a whole economic toolkit that needs to be completely developed from the ground up. And to me, this is the most exciting thing. Again, in the 10 years that I've been in this industry, 2016 was all about building for people, right? Now it's building for agents. 2016 was learn to code. Now it's learn to coordinate, learn to conduct, learn to organize agents. And I think that if you look at the sharing economy of old has now become the agentic economy. So building for agents is the most exciting thing. There's lots of really great stuff happening in the world of AI that people should be paying attention to. But how agents do business and the way they transact is, to me, still an underrepresented story. I think crypto Twitter and some companies are really focused on this, but the rest of the world doesn't really understand its potential yet.
On a very kind of digital asset specific note, there's been a large run in BitTensor as of late, as well as the subnets, and I know that you're on the fringe amongst of your many areas of focus here, and this is something that people are saying could be a top 10 asset. They are very excited about BitTensor as this idea of decentralized intelligence and kind of creating this decentralized intelligence layer that powers all these subnets and all these kind of individual agents. Do you buy into the BitTensor thesis? Do you agree with it? Do you like it? Do you dislike it? What's your take on what's happening there as what people are calling the Bitcoin of AI?
Well, I love it. I mean, I think
Okay.
BitTensor is one of the most exciting and ambitious projects. Whether it will be successful, I can't say for sure. But to me, the idea of proof of useful work as an inherent concept, that if you're going to be using all this computing power to secure transactions in a network and maintain this ledger, that you could direct that computing power towards inference or towards other forms of compute, that is a brilliant idea. Like, that's an incredible idea. And so it's not surprising to me that it's had the kind of success that it has. What's interesting is before this, we were talking about the way AI and crypto kind of interact, right? And we were looking at it at the agent level. But the agent is like the top of the pyramid, right? At the bottom are the models and the data itself. And right now, all of these models are being trained on in data centers owned by a handful of large companies.
Right. Yeah.
And there's nothing inherently wrong with that, because these big companies have created products and services that are very valuable, and that's created a lot of upside. But I think we need an alternative. Like, we need to have an antidote to a world where the big get bigger, and these superscalers become even more powerful. And so the idea of like decentralizing the compute layer of the AI stack, I think is an incredibly important idea. So I love what BitTensor is doing. I think it's an amazing project.
Yeah. Yeah, I mean, that was kind of like the earlier iterations of this intersection, was the decentralized inference, the decentralized compute. Now we've kind of moved into agentic finance as kind of like the hot topic and narrative. But just kind of wanted to get your take on BitTensor there. I also put a separate tweet that said, if the tokenization thesis is correct and trillions of dollars of assets are going to move on chain in the coming years, which company will benefit the most? What's your kind of like take on how the tokenization, the shift of assets on chain affects the existing players and the incumbents in the traditional market as well as in the digital asset market? Who is set to be the biggest winner here of the tokenization?
It's the most important question right now.
We're doing a big survey here today on the show.
Well, I think that there's sort of two ways to look at it, right? What is going to be the company that benefits, and what will be the protocol that benefits the most? Because the fact that we're even talking about what company will benefit, I think, is almost a sign of the times, that we're now thinking about how this industry's maturing, and there are going to be big corporations that are going to be
nice suit, man.
The big winners. This is a sport coat. Not a suit.
Got a long ways to go here, guys, on the roll-up.
Just to be clear, not a suit, a sport coat. No. So, yeah, like, I think that protocol-wise, I think Ethereum and Solana are going to be the big beneficiaries of this for a couple of reasons. Like, I think Solana is internet capital markets. It's the blockchain that can handle the transaction volume of equities, fixed income, and Forex combined. So if you really believe that all assets are going to move on chain, well, you actually need platforms that can support and handle that kind of transaction throughput and are almost designed for it. And so I think Solana is really well positioned. But Ethereum to this day, despite the fact that it has, in some ways it's deficient compared to some of these other newer platforms, it's still where most developers go to start. It's where most big enterprises go to start. It's where the majority of RWAs and TVL and DeFi are still located on chain on Ethereum. And it's sort of like in the old days, you didn't get fired for hiring IBM, right? Like as a systems manager at a big company. And in a way, it's like there's sort of your vendor lock-in, but also you're going with a trusted partner and someone who's been at it for a long time. And I feel like people view Ethereum in a similar way. It's like you don't get. There's nothing wrong with starting on Ethereum. And if you look at a lot of RWA projects, like Biddle, for example, BlackRock's project, it's now deployed across 20 blockchains or 15 blockchains or something like that. Most of the volume's on Solana and Ethereum. But where did they start? They started on Ethereum. So I think like those protocols like that stand to benefit a lot. In terms of companies, it's such an interesting question because there are clearly some leaders. Circle, I think, would be the most obvious, and Tether. Don't go too far afield. Like, what are RWAs? Assets represented on chain as tokens. Okay, what are the two biggest things? USDT and USDC. So shouldn't those two companies be the leaders, right? And wouldn't they be the ones that could benefit the most? as this continues to scale. I think USDC, as a U.S. domiciled company that's in good standing, that's publicly listed, like we can see in real time how the market is pricing in tokenization as a concept at a moment when a lot of crypto assets are nowhere near their all-time highs. Like Circle is performing incredibly well, and I think that suggests that the traditional market and TradFi investors see the potential there. But at the same time, like where are we in the whole life cycle? Is this are they the Amazon and the Google and the Facebook, or are they sort of the first iteration of projects? Are they the Yahoo or the eBay? Still valuable companies that went on to do really interesting things, but actually didn't become the juggernauts of the Internet of Information. I don't know. But I think right now, like, they clearly have a head start, and they've got great, terrific people, and they've done a lot of really interesting work.
So you've talked about this transition from MAG 7 to DAG 7.
Yeah.
We've talked about this in the context of like this Neo Finance 7,
Yeah.
N7 index. Could you tell us about DAG 7, we'll tell you about N7.
Yeah, I mean, the DAG 7 is a way of thinking about what protocols, what blockchains are going to become valuable over time. So the MAG 7 is short for Magnificent 7, and these are the handful of big internet companies that went on to dominate the first era of the web. And they did so by becoming a monopoly in each of the core industry verticals. So for search, you had Google. For online retail, e-commerce, there was Amazon. For social media, there was Facebook, and so on and so forth. And these companies are huge. Each of them has got a market cap of more than $1 trillion. In some cases, $3 or $4 trillion. Which, to put that into context, the entire value of like the Toronto Stock Exchange, or like the Hong Kong Stock Exchange, or the German Stock Exchange, are less than the value of a single Mag 7 stock.
Yeah, it's nuts.
Like, it's ridiculous. And those are big markets, right? But it just gives you a sense of how significant these companies are. So our view is that this next era of the internet is going to have its own set of winners. But it's not going to be companies necessarily. To my earlier point, it's going to be protocols. And it's not going to be the MAG 7, it's going to be what we are calling the DAG 7, the Digital Asset Group of 7. These are the 7 protocols that we believe will capture the lion's share of the value from this new blockchain-enabled internet. And the reason we think it's going to be about 7 is that typically in industries, when things first start off, there are dozens, sometimes even hundreds of players all competing and vying for the same market. But over time, those markets consolidate, and ultimately there's a handful of winners that end up capturing most of the value. It's called the power law. So, in the early days of the automobile, there were like hundreds of car companies, and then there were only the big 3 and some others in Europe. In the tech world, there was hundreds of .coms, but we ended up with a handful of like huge technology companies. The same is true in the PC world, the mini computer world, railways, you name it. So I think that power law is going to apply again to blockchains, where there will be lots of blockchains and lots of tokens you can buy that will have value, but the majority of the value is going to accrue to a handful of projects. And so that's the DAG 7.
All right, you left us hanging. What's in the DAG 7, man?
Well, so you mentioned
what the hell?
Ethereum
Thanks,
and
man.
Solana earlier.
Thank you, Alex, for the power law class lesson, guys. First time hearing that here on the show.
Yeah.
All right, what's the DAG 7?
Well, I think some of them are pretty clear, and others are not, right?
Okay.
So the way that we look at it is actually by industry vertical. So I walked through some of those industry verticals for the Internet of Information. The Internet of Value has different verticals. So one of them is digital gold, a digital store of value. Well, Bitcoin, I think, is the obvious candidate for that, and at this point is the likely winner. An open application ecosystem. So the old web had closed application ecosystems like the Apple ecosystem or the Google ecosystem. With blockchains, it's an open ecosystem. Well, where's the most fertile, active ecosystem? Ethereum.
Yep.
But then you need blockchains that can handle the throughput and the capacity for transactions in financial markets. Well, that's Solana, right? So what we call internet capital markets or on-chain finance. Then there's blockchain for the enterprise. I think that a lot of big companies are going to want to launch their own chains. They're going to want to have some sort of sovereignty over who gets access to those networks. And I think that at this point, there are some really interesting candidates for who could win that. Canton is one, and Avalanche is another. Blockchain and AI, what we just talked about, BitTensor. I think that's probably one of the earlier like most sort of in development kind of verticals, but I think like BitTensor is clearly the winner there. And then there's another one we call the Everything Exchange, right? So Amazon was the Everything Store, a place where you can go buy any good, any physical item, but also as a launch pad for businesses to sell their things to others. We think there's going to be an Everything Exchange, which I think I came up with that, but then Coinbase started using this more recently. So anyway, imitation is the highest form of flattery. But and Coinbase, the company, might be the Everything Exchange. But I also think that there's blockchains that can become the Everything Exchange. BND or Hype, for example. You know, like Hyperliquid, I think like over a third of all their volumes recently have been tokenized real-world assets, right? Commodity futures. And boy, isn't that interesting?
Yeah.
You know, like this is like a big deal. People, I think, it's a sign of the times that we're like, oh, isn't that interesting? And moving right along. But there's a lot of alpha to be captured on these 24/7 markets,
Yes.
where like, you know, oil's trading 24/7 on the weekend, Facebook stock is trading 24/7 on the weekend. People haven't really caught up to that yet, and so I just think like there's a potential for these protocols to absorb huge functions of the financial industry, huge aspects of how we exchange value, and so on and so forth. So that's how we think about it, is really thematically.
Nice. Alex Tapscott, thank you for joining us and sharing your insights on the DAG 7.
Yes.
Bringing a book. Could you sign this for us?
Yeah, this is for you guys.
Thank you, man.
We're gonna add it to our
I sign it to
collection.
the
Let's go. Let's
Yeah,
give him
please
some
do,
love.
to the roll-up. We're gonna have it in our Empire State Building studio.
I gotta get a photo with you guys.
Yes,
Absolutely.
man. Hey, quick pick, please. Hold the book. Let's go. To the roll-up, baby.
Beautiful.
All right.
Let's hold it
Here,
up.
you hold it up.
The boys are winning. Thanks, guys.
Thanks a lot.
All
Can I
right.
get that photo?
Yes,
I wanna-
for sure.
we'll-
From
We'll
Broderick.
get it for you.
Yeah. Enjoy.
Thanks, Alex.
Thank you so much, Alex.
Guys, if you're looking for a new book, Web3, charting the internet's next economic and cultural frontier.
Cultural frontier,
Bang.
which you heard Alex talk quite a bit about today.
Guys, what a segment. I don't know how I feel about the DAG 7. Kind of bullish on it. He almost mentioned Hyperliquid.
I think he did mention Hyperliquid. The Everything
Kinda.
Exchange.
He's also sleeping on Near as the blockchain for AI.
Yes, he is.
Bitcoin, ETH, Solana, obvious
Mentioned Canton.
ones.
Also, I think lending
Canton he
and borrowing
mentioned.
is a primary vertical of the upcoming wave. Look, there is some overlap, not the most overlap with the Neo Finance 7, the N7.
Certainly not, but there are some.
There is some. Guys,
Ladies
we're
and
gonna
gentlemen, we're gonna be right back.
we're gonna be right back.
We're gonna put this book up, all right?
We get deep, we get deep. You know we get deep. We get deep, we get deep. You know we get deep. Deep, you know we get deep, we get deep. Deep, you know we get deep. Deep, you know we get deep, we get deep. Deep, you know we get deep. Deep, you know we get deep, we get deep. Deep, you know we get deep. We get deep, we get deep, we get deep, you know we get deep. We get deep, we get deep, you know we get deep. We get deep, you know we get deep. deep. We get deep. We get deep. Hot. You know we get deep. 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 Hot. You know we get deep. 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 Hot. You know we get deep. We get deep.
All right, guys, we are back live at the DC Blockchain Summit. It's day one. We've got Yoshi Yokokawa, the co-founder of Alpaca, coming to join us next live. Rob, 2 hours in. As I said, everyone here is wearing suits. It's very, very, very put together conference. What's your initial reactions here?
My initial reaction is that there's a lot of energy, not a bear market here. Very similar to SmartCon in New York City.
To New York
also,
in general.
What we're seeing in the Empire State Building studio. This is the result of a secular bull market, and this is part of the neo-finance thesis. I've been talking about this. Crypto as we know it is dead, but the exports of crypto are very much alive. Tokenization, which we're going to be talking about here, digital assets, blockchain. The Department of Defense is working with blockchains. The government at almost every level is accepting of this technology.
Yep.
And so there's quite a bit happening underneath the surface. Even the market is starting to reflect that as well. We've got our next guest,
Yep.
Yoshi Yokokawa. Thank you so much for joining us.
No, thank you for having me.
And we're going to be talking more about tokenized equities. Yeah, maybe you could just start with a bit about how you're reacting to the energy in this room. You came from Wall Street. Give us a sense of what it's been like and a bit more of your background as you've transitioned into digital assets and tokenized equities.
Yeah, sure. I started my career at the Lehman Brothers subprime structuring, so it has been a pretty interesting experience. But we started Alpaca in 2017, so we built a self-clearing SEC FINRA DTCC member clearing firm. And then obviously, we saw like a lot of change in the crypto segment, so we started offering crypto as well 4 years ago. So until since last year, we saw whole two things getting converging, and then we saw a lot of tokenization demands coming to our platform. So we saw a lot of tokenization players want to use our custodian layer to mint and issue the tokens. So that's really something that we started seeing.
What was this like before you came into the industry? Was there any inkling? Obviously, digital assets wasn't the canonical term while you were at Lehman, but even back then, did you know that eventually we were going to have to transition into a more digitized version of that financial world?
Yeah, I think if you think about it, 1970s, right? Everything was paper. And then we started using Excel, MS-DOS, and then it's getting computerized. So I think that similar transitions are happening from just really computerized system to real digital finance on chain. So I think that's the kind of narrative that I always think about.
So let's talk about tokenized equities. You guys are doing great things at Alpaca. Our understanding is that there's sort of three ways that we can bucket the current tokenization of equities format. The most aggressive is the native tokenization. Securitize and Superstate are working on this. It requires a lot of restructuring, and so it's not the quickest path to market, but it might be the cleanest and the most native. Then we've got all the way on the other side of the barbell. The quickest path to market is sort of this SPV sort of format. A buyer might buy a lot of shares, put them in the SPV, and then issue some tokenized shares against those equities. And then you've got kind of this hybrid format in the middle, where there's some more companies that are making progress on this to try to complement and balance, tokenization done well with a quick path to market. Give us a sense of how Alpaca thinks about this from the custodian perspective. Do you prefer any particular form of tokenization? Does it make more sense at this current time?
I always kind of step back when talking about those things, because I think what we are talking about is bringing whole financial system on chain. Right. So it's a huge thing, right? It's a $350 trillion in the custody. We're trying to bring everything on chain. And if you think about the money movements, we're trying to bring everything on chain. So I don't think there is only one correct way that's going to happen. I think all of us in the industry, including all of us here, 3 people, have to be a part of it to make sure that we push that efforts, right? So thinking about that, you mentioned about native blockchain, tokenization to more of the SPV structure. And then, we used to see those Luna coin. I don't know if you remember, those algo side of it. So, of course, it doesn't happen anymore. What we see is definitely the product market fit problem. like even though there's a way that, okay, this is how it should work, I think we should also think about where is the real demands. So if you see like trading volume, what are the real demands of the tokenized stocks that people are seeing? We also see a little bit different view too, right? We see like a lot of volume seen like X stocks, on those tokens as well. So we definitely see like a lot of adoption there. And there's a real like native blockchain base of the things. But reality is there are a lot of hurdles if you think about the regulatory framework. It's still a lot of structuring that has to be sorted out so that it's really legal and clear. And I think we still need some time. But like we have to keep pushing whatever it takes to bring it on chain because there's a lot of benefits. So that's how I see it from my view.
Yeah, so there was this Wall Street Journal article that went out, and it was talking about how institutions are kind of resisting the 24/7 infrastructure required to bring tokenized equities trading to the market live. What is your take on this? Who is going to be the early adopters of tokenized equity trading? And what is like the very short and easy to understand pitch for why this matters?
So I think that we always think about, of course, like United States center economy, and then it is, fact, right? We are the center of the United States, Washington, D.C., but the reality is, there are so much more people and actually so much more GDP outside of the United States. And then, US dollar and then US stocks, access to the US capital markets is even more needed by the people from outside the United States. And when you think about that, accessibility to those assets is not that easy. Like if you are here, you just like open the Robinhood app and just like have things traded. But that's not the case if you go to like emerging countries, Africa or LATAM or Southeast Asia. And because of that reason, accessibility becomes much easier when things don't become on chain. And then there are a lot of people like who are dealing with the local currency fluctuation. They have a lot of cash and money in the USDC, USDT, and they need to be able to access to the fiat capital markets risk, which has been very difficult. So I think if we kind of step back and looking whole Earth instead of just United States, we start seeing why this matters more.
Yeah. Okay, so you guys have about 500 million in AUM in tokenized equities. Is that correct?
Yeah, we have much more now, but yeah.
Okay.
Yeah. I
Where
think
are we at now?
latest numbers probably close to $1 billion. Yeah.
Okay, so $1 billion in tokenized equities.
I'm just curious, where did the additional 500 million come from in recent weeks?
You're talking about assets under custody for that, right?
Yeah, like recent partnerships. Yeah.
Yeah. So we have multiple tokenization partners who continue to mint new tokens, and then every time those tokens are minted, there's actual fiat collaterals or custody on our custodian platform. So that's how we continue to increase that assets under custody.
So we're here in DC, and obviously the Clarity Act is still kind of coming together, being in this kind of evolving, changing goalpost. What is the biggest regulatory blocker or regulatory obstacle for platforms like Alpaca to really scale and become this on-chain brokerage? What needs to happen from the regulatory side for you guys to be able to really scale?
I think there are many things, in my opinion. Because even with the Genius Act, real kind of regulatory frameworks are not there yet, right? Because there's an act, but there's still actual laws have to come out based on the SEC and FINRA, so it's still not there. So I think it's moving, and I think it's moving fastest compared to any other world or any history of the United States. So I think everyone's doing an amazing job, but still, I think we're still continue to make progress. We always have to think about how long it took from the paper-based financial system to the computer financial system. It took around 50 years, right? 1970 to 2020. So we're moving really fast, I think. But there are still lots of things to do.
Yeah. Speaking of things to do, you guys are at $1 billion now. How do you get to 10 billion? Do you work with the traditional players in the equity space and you help them move on chain, or do you work with more of the digital asset and tokenization companies and help expose them to higher quality assets like equities? Which direction are you pushing on?
That's a great question. We definitely see both of the directions of pulling, but our job is that in order to bring the assets on chain, we have to firstly connect all the fiat assets into one platform, right? Because like right now, most of that stock tokenization is happening on the United States issued DTCC stocks.
Yeah.
Right, but we need to have all the other asset classes like European stocks, to Hong Kong stocks, Japan stocks, everything into one platform, and not even only the public listed stocks, private securities, alternatives, even futures and fixed income. Everything should be able to be tokenized as easy as other U.S. stocks. So I think that's the really thing that we're focusing on.
A bit more of a technical question.
Yeah.
Right now, and correct me if I'm wrong here, but the DTCC custodies the physical stock certificates of 90%, 99% of the US equity market. With more of these assets being tokenized and moving on chain, they would end up, would they still be in the DTCC with these physical stock certificates, or once they're tokenized, do they end up with custody providers like Alpaca?
I think that's the conversation always comes up, but the reality is if you think about even today's kind of computerized system, we still see actual paper certificate that they exist. So it's not completely everything is just a ledger of the DTCC, for example. So if you think about that, we have multiple ways of the tokenization that's happening, right? There's X stocks, there's Ondo, there's Canton network, and DTCs is involved, Nasdaq trying to do something, and then NYSE is trying to do something. So there are many ways of the tokenization that's going to continue to happen, and most of the times it still has to cooperate with the DTCC's source of the truth ledger. So everything usually happens. Okay, there's the basically ledger that's archived in the DTCC, and when the DTCC becomes actually on chain, then that's going to be also the DTCC management as well, right? So I think in the real ideal world, I understand okay, there's a SEC approved blockchain DTCC equivalent, but I don't know that's when or if it's going to happen, because if you think about our ideal of the crypto, we're talking about decentralized finance, but reality is it's always centralized exchange, right? So
there was an announcement from the DTCC. This goes back a couple of months.
Yeah.
December of 2025, where they said that this is DTCC.com. DTCC authorized to offer new tokenization service, paving the way to tokenize DTC custodied assets.
Yeah.
My understanding is that they were working with the consortium model, kind of like the Hyperledger. It was going to be their own L1. On the other side of the world, you have BlackRock talking about how they're going to tokenize every single ETF in the next 3 to 12 months. Matt from Bitwise came on, he said this is a foregone conclusion. They are tokenizing all of their ETFs. That's billions of dollars that ends up on chain. You got Larry Fink from BlackRock saying that there's one blockchain to rule them all. People think he's talking about Ethereum. Is he actually talking about the DTCC Hyperledger L1?
So it becomes more of the kind of religion conversation, but I really think that, okay, the ideal is that we should have one currency, right? If you think about the most utility-wise, but we don't.
Right.
And we should have one nation that should have the exact same rule everywhere in the world, because that's going to be probably easy to deal with, but we don't.
Right.
That's how I think about it. I understand the ideal, sets one, network, but reality, I don't think that will be the case. That's the reason why there's more business opportunities, right? There's players that have to kind of bridge each of the layers and networks, and there's more businesses that would happen. And I think there's ideal, and there's an actual practical situation that we have to deal with as a human life. So that's I always kind of question myself, right?
I'm curious kind of what you think the edge is in the tokenized equity growth that you guys have had, and just kind of generally the types of companies that are really going to benefit. If this tokenization thesis is correct, what are the companies that are going to benefit the most from this massive transfer of assets on chain?
Right.
Give our audience, give our community a sense of thinking about from the investor's perspective, how to position and think about investing in this era of all these assets coming on chain. What types of protocols, companies, entities are ripe for the biggest growth?
I think about two fundamental benefits of this whole thing. Why it will move there, as just like gravity. One thing is just basically it's going to be a much less systemic risk, because like when things move on chain, settlement timing and speed becomes almost atomic, right? Which means that like you don't have to worry about, okay, you have to put a collateral here because it's a T+1 settlement. That problem will be gone, which means that we'll have like so much less systemic risk as a financial system, which means that it's going to be good for the end customers and the individuals like us. We don't have to deal with like global financial system crisis, right? So that's one thing. And second benefit is a capital efficiency. So we're talking about tokenization, of course, stocks, but tokenization of the real world assets like real estate. We don't have like those assets right now on the same wallet or same network right now. Once everything go on chain, we're gonna have all those weird different asset classes into the same one layer, which means that we can start like doing the cross collateralization, which means that we can utilize much better capital efficiency. We can borrow against real estate or like some trade certificates to buy Nvidia stocks. And those things become like so much easier. So which means like much capital efficiency, more leverage. So that will be the benefit. So it's like those are two foundational reasons and benefits why just things go move on chain.
We hold a very similar thesis. The adage in the industry around this is that if FTX was on chain, it never would have happened. We would have seen the fraud, we would have seen the risk much clearer on chain before it ever happened. So we're also seeing that play out. Custody risk, settlement risk, all of this is mitigated, and that's money that is held up because we had someone on the show recently talk about over the weekend the repo market doesn't work. This was Eric from Canton. He mentioned how on Fridays these banks and these payment providers, they require more money. They take on more risk. They take on more money because they aren't able to access that overnight capital over the weekend. And so all of this is an efficiency that can be saving money and improving the top line revenue. And this is ultimately what companies want. I'm just curious, like when you're helping, the traditional players and the institutions overcome some of these knowledge gaps, do they ever have a light bulb moment? Like, what do you say to some of these institutions that helps them understand the value proposition?
It's not easy. I think that people get it when people get it. And then there's definitely that's kind of information gap, right? Because we work with the financial institutions in 45 different countries. And each country has a different perspective in this on-chain financial system or even the world of crypto or tokenization, which means I have to be very careful about how we communicate and which word we use so that they don't become allergic to certain terminology that we use, right? That's how sensitive that we have to be to even explain the benefits even before doing that. And at the same time, I think another important point is that I think you mentioned a little bit is, we have to also utilize what we have established as a, compliance and regulatory framework and investor protections, because that's for us to protect our, customers and investors and also the financial system as a whole. So, and that comes from the 100 years of the knowledge from 1933 of the Securities Act. So we have to utilize that into this on-chain financial system instead of just, okay, it's going to happen, out of air in the on-chain only. So I think those are the kind of couple things that I would always emphasize so that people become comfortable hearing my pitch of why this is going to move there.
Yep.
Yeah. Can I ask you which of the institutions or countries are most susceptible to actually moving into digital asset world? Like from your experience, has there been a spectrum of difficulty from a country or institution-wide perspective as far as their interest and their speed? Give us a bit of a spectrum here of which countries and institutions that you've spoken with are very, very warm and are moving quickly, and which ones are moving a bit slower?
I think it's also usage as well, though. Instead of only country, I always also want to think about movement as well, instead of point to point, but also the connecting, right? So the reason why I talk about this is that if you think about actual stable coin funding usage in the United States domestically, I think it's going to be much less than 1%. If you think about cross-border, I see it close to 5%. I know it's not still very small number, but that's a big difference. If you compare it, it's probably the more than 50x difference. So those are the things that I see. If you think about cross-border usage, I see more adoption speed. And if I see more outside United States persons and countries trying to connect to the United States assets, I see definitely more adoption and excitement and acceptance there.
Earlier we had Adam from Chainlink come on the show, and he was talking about how, it's still important to keep in mind that we have very clear reasons and use cases as to why these assets should be tokenized. Is it your opinion that every equity should be tokenized? Is there a particular, corporate reason as to why some equities shouldn't be tokenized?
So there are two ways of thinking about this. I think one way is that everything will be tokenized anyway. So I think everything should be tokenized. That's the one way of thinking about it. And second thing that we should be thinking about is what's actual practical demands. Yeah. In my opinion, there's ideal. That's how it should be. But at the same time, as a startup company as well, we always think about product market fit. So why would you do something that there's no demand?
Right.
We wouldn't do that, right? So definitely we see what's actually getting the traction because there's a reason why. So we focus on that.
And so it's probably the case that we have this initial early on wave of tokenization that has a lot of product market fit and demand. We end up with a lot of liquidity in tokenized equities, and then maybe there's a follow-on wave of equities that doesn't really matter if they're tokenized, doesn't really matter because people don't really care to trade them on chain, but they're going to be tokenized anyway because they're going to follow what the bigger players with product market fit and on-chain demand are doing.
Yeah, because even you look at this fiat TradFi exchange, there are a lot of stock that has almost no liquidity that's already public listed, right? So I think it's going to be the same thing.
Okay.
Yoshi, last thing for you from me. What do you think is the biggest edge for a tokenization company? Is it partners, distribution, liquidity? Where are you guys finding a monetizable moat for Alpaca? What is your monetizable moat? Why are you guys better or different than other tokenization platforms?
So we are really the custodian for the tokenization platforms such as Xstocks or Ondo. So our job is to make sure that we are connected to a lot of different asset classes that is tokenizable by the tokenization platforms. So that's our job. How can we quickly add a lot of different asset classes? A lot of different stablecoin funding is doable, and then also support the minting, burning in the same the same account on the same layer, so that the market makers don't have to take this settlement risk. So that's something that we do to create a moat. But in terms of tokenization platforms, in my opinion, it still comes down to product market fit, regardless of how you structure it. Even though how you say this is a correct way of doing it, if you don't have product market fit, I don't think it matters. So I think that's the most important thing in my opinion.
Yoshi, I got one more question for you, and it's a little bit different from what we've been talking about. It's the other side of the spectrum. It's companies that have tokens, they've been a DAO, or they've lived in a crypto native world, and now they're looking to go public. And take the case of Across, right? Recently, put up a DAO proposal about buying up all of their tokens and converting it to equity. How should we be thinking? This is a pretty new paradigm. Even tokenized equities as we currently know it are, we have a better understanding because they're not as new as some of this model. How should we be thinking about this model? What is the right process for a company to take their token out of circulation and go public or take it private?
I think which means that we're putting all those things into the TradFi model, right?
Yeah.
I think it's actually simpler because in the TradFi model, there are so many use cases of how the incentive structure works based on what are the shareholder rights, what is the board director rights, what are the preference stack of the investments and all those things. So we just need to put those existing models into what the DAO was trying to do and make the agreements from the participants and holders of the tokens, right? Yeah. So I think it's going to be a little bit easy in that sense, but I don't know, it's the right thing to do or no, but again, it goes back to the product market fit. What are the more people wants to see? I think that's where it's going to go there anyway.
Yeah.
Yoshi, man, thank you for joining us,
Thank you, I appreciate it. It's super fun.
Enjoy the rest of your time in DC.
Yeah, definitely.
It's a great conference.
Yeah.
Enjoy it, man.
Yeah, thank you, I appreciate it.
We'll see you next time. Thanks,
See you.
Yoshi.
Alrighty, guys, that's tokenized stocks, tokenized equities. Another really, really important part of this kind of new stack of this regime shift that we talked about on that first episode, Rob, which continues to kind of come up time and time again in our conversations throughout our work. And so Yeah, guys, I mean, we are live here from the DC Blockchain Summit. We've got Salman up next, the General Counsel at Plume.
Oh, yeah.
We are obviously live out of Plume's office in the Empire State Building.
Yes, we are.
I've heard quite a bit about Salman, so excited to chat with him. More tokenization, more Clarity Act, market structure. It's time to get into it, I think,
Yeah,
Rob.
I
We've
mean,
kind
look,
of...
Salman is boots on the ground at Plume. He knows how to tokenize these things, what traditional institutions are looking for, what product market fit looks like when it comes to tokenizing private credit and yield solutions from outside the industry. Remember, we were part of DeFi Summer and 2021. We saw endogenous yield sources from emissions, token inflation. It was very unsustainable. Now, exogenous yield sources like private credit, real estate, energy, all of these things are bringing new, fresh capital and yield into the industry and passing that along to shareholders. Salman is a great person to speak on exactly this, what it takes to tokenize yield, bring it on chain, and ultimately pass it along to shareholders and token holders.
Most definitely, and I think like we've kind of circulated around the Clarity Act conversation and the market structure bill conversation, but I think it's time to get into it and get some real boots on the ground opinions about it from Salman. Guys, we're live here at DC Blockchain Summit. It's a beautiful day in Washington, DC. We're wearing suits. This is the first time I think Robbie and I have been in a blazer on the show since, I don't know, since maybe a different conference.
I bought this suit yesterday.
I did not buy this suit yesterday, but I am rocking it for Happy St. Patty's Day.
Happy St.
It's got a
Patty's Day.
light tint of green.
It does, yeah.
Little light tint of green.
I don't have to pinch you.
Good luck for today for everybody out there celebrating St. Patrick's Day.
I'm wearing some
Let's get
socks with
Salman
some
up.
green.
Let's chat all things Clarity, market structure, and more. Salman is the General Counsel at Plume.
Salman, good to see you. Welcome to the show. Pleasure.
And Salman,
you're missing
RW.
the nest.
Yeah, right.
Yeah, we've
the
got
Nest
it.
logo.
We've got it up.
See, he knows. He
Empire
knows.
State Building, yep.
The Nest. Salman, man, you've got quite the voice on X. You have a lot of takes around the way that the market is evolving from tokenization, wrappers, etc. We're going to get into all of it, but Salman, tell us about how you got started on the Hill. What has your previous career been pre-Plume, and just kind of give us a bit of a walkthrough here.
Yeah, so I got started here in DC at the CFTC. So after the financial crisis, CFTC implemented the reforms, the Dodd-Frank Act, and got a chance to work with Gary Gensler. I worked for one of the other commissioners while Gary was the chair. And that got me into the derivative space. Worked in TradFi for 8 years at a company called IHS Markit. Got acquired by S&P Global. And while I was there, I was working a lot on blockchain, related projects. And from there, I met the team over at Chainalysis, and that was kind of my full entry into the crypto space. And at Chainalysis, we were asked a lot by lawmakers and policymakers about how do you regulate DeFi? How do we think about illicit finance in DeFi? How do we manage the risks? Chainalysis obviously had a set of tools, but I wanted to hear the perspective from folks in DeFi. So that got me introduced to the folks at Uniswap. They were looking for a policy person, so I went over and worked at Uniswap for almost 2 years. And then while I was at Uniswap, while there was an open investigation, I got a call from the SEC saying, hey, we got this position open, I think you'd be great for it. And you get to work on supervising exchanges and ATSs, as well as working on DeFi policy. So went over to the SEC, was there for about a year and a half. The election happened, and I got approached by folks at Plume. I thought they had a really interesting business model, very much in line with the way I thought about how tokenization was going to happen. And so, I've had the good fortune of working with Chris and Teddy and the team, and trying to make tokenization a thing. And we've hit some pretty solid metrics so far, and we got a lot more in the pipeline.
I'd love to hear more about the way you think tokenization should work. Like you said, Plume came to you while you were at the SEC and sort of talked to you about how they thought tokenization should work. It aligned with your perspective. What's currently wrong with tokenization, and why does Plume and the current model fix a lot of that?
Yeah, so the goal with tokenization should be that the product is better than the off-chain version.
Yeah.
And it should be composable. so that the owner of the asset gets the full benefits associated with the asset. That's not currently the case with off-chain assets. So, for example, your broker is making money on you holding securities they lend it out, in the securities lending market. You're not getting that. Some of the brokers are offering that, but they're also taking a spread on that. So what we'd like to see is that composability unlocked, and for those benefits to be distributed to the investors. And so when we look at the landscape, we're and thinking about, well, what is a better product to tokenize? We look at, and this was the provocative post that I had on Twitter or X.com a couple days ago, which is tokenized equities, at least in their current form, are inferior to the off-chain equivalents. These are generally, the ones that trade the most are, wrapped versions of the public equities. They introduce, instead of getting rid of intermediaries, they actually introduce a new type of intermediary. They're seen, quite, understandably by the SEC staff that I worked with as undermining the purpose of regulation NMS. So regulation NMS is kind of the very fine-tuned, very complicated regulatory architecture for public equities in the US. And it's really designed for a world where you have these chain of intermediaries, routing orders to different trading centers and trying to get best execution, national best bidder offer, and making sure that trades execute, at or better than that price. And so it's very prescriptive rules, quite incompatible with DeFi. So for example, DeFi, you trade in pairs. Well, how do you trade, how do you compare liquidity pool with like Tesla stock versus Ethereum versus USD versus, Bitcoin versus, how do you get best, so the calculations that would be involved and the pools that you'd have to screen across and all the delays that would come inevitably from accessing those oracles makes it challenging. And you'd have to either come up with a Reg NMS just for DeFi or water down Reg NMS for the currently well-functioning public equities markets. So equities isn't really a focus of ours, although there are firms that are offering equities products in the Plume ecosystem, like Dinari. Our focus is really on asset management products and yield-bearing debt securities, those types of securities. And so we're in the process of getting all the right licenses in the U.S. to be able to offer those to a U.S. audience. We have currently an offshore vehicles offered through the Nest protocol, which is an on-chain asset management or vault protocol. We're also in the process of getting regulatory upgrades there in order to provide our institutional, our regulated centralized exchange partners, our regulated asset management partners comfortable with the management of risk associated with those vaults. So, we met recently with the SEC Crypto Task Force team, and they said, your strategy at Plume is really the tip of the spear in trying to make tokenization and real-world assets come on-chain, but doing it in a way that's consistent with U.S. securities regulation. And so we're really proud of that.
Yeah. And I mean, we've kind of learned that there's obviously quite a few different models for tokenization. There's like this direct tokenization on the far left side of the spectrum all the way to like perpetual futures where you're literally just speculating on the asset. Is there a evolution that you expect to get to this direct tokenization model that Superstate and Securitize, kind of those two are really pioneering that? Like, what is the evolution here that you've seen from your side, specifically from the regulatory side, that is going to lead to this less structurally flawed version of tokenized assets? Like, what does that actually look like from a regulatory perspective and from a,
So we've been recommending that the SEC encourage direct ownership models.
So like full shareholder rights.
Full shareholder rights, nothing in between the issuer and the investor. And that's really the only way that the investor gets the full benefits of their, I mean, right now, people don't realize, when you own an equity right now in the US, you're really owning a claim that a broker-dealer has, and that in turn represents a claim on Seed & Co., which in turn has a claim on database entry at DTC. So there's this chain of intermediaries between you and the actual equity.
Yeah.
If I can summarize, our view of, so I talked about equities, but when it comes to bonds, which actually a lot of people aren't focused on, but is actually at an institutional level and at a regulatory level where a lot of promise, we've seen a lot of promise in terms of tokenization, and this is actually being actively promoted in Singapore and Hong Kong. Hong Kong actually has a subsidy program for corporate issuers to go in. I think they get $200,000 or $300,000 subsidy to tokenize their bonds, because Hong Kong has found that you get better liquidity, better volume, better secondary trading, more investors because you can fractionalize these bonds, which generally have a very large face amount. You get better liquidity in terms of bid-ask spreads as a consequence, and as they are trying to develop their competitive capital markets, they're looking to actively promote bond tokenization. So my message for U.S. policymakers is bring back bearer bonds. So bearer bonds actually come under really punitive, they're all but banned in the U.S. And this came out of concerns around money laundering and tax evasion back in the 1970s and early 80s. There's a law called TEFRA. But that was in a world where people had bearer bonds, piece of paper that represented a claim against an issuer that they could then redeem, in person to get their, their bond and the coupon back. So the way that legislation is drafted is very broad, and we've been calling on lawmakers in the U.S. to revise TEFRA. That's the law from I think 1982, which all but banned these bearer bonds. And so what we'd like to see at the minimum in the U.S. is this legislation, this antiquated legislation, being revised to reflect on-chain realities, where you can ensure tax and AML compliance at a token level, at a bearer bond level. And then when it comes to asset management, our approach is it's a win-win situation. Right now, asset management products, 40 Act funds in the U.S. Generally limited in terms of their distribution networks inside the U.S. And there's a lot of interest for them to use on-chain global rails in order to increase their AUM by accessing global capital markets. Right now, it's really hard, if you're a middle-income individual outside the U.S. to get exposure to U.S. capital markets, and asset management products are the best way to do it.
Yeah, I mean, that kind of democratization of access, first point. Second point, thank you for the history education here on the bearer bonds. I can understand how with the direct
Let's bring them back.
Yeah.
And who would that be up to? Would it be the SEC? Would it be regulators in Congress? Who makes the decision on the regulation to ban that or bring back?
the bearer bonds, revising TEFRA, that would be Congress.
Well, we haven't talked that much about the Clarity Act today. We've kind of talked a bit about it, but only the people that are here in the Hill full time. That's you. You're one of them. What is your perspective on the state of this conjunction? Where are we at? Are we really 1 to 2 weeks out? People are saying, are we months out still? And has there been any sort of compromise? Where are we at?
So there's really three big issues at varying levels of closeness. Closeness to being closed. Issue number one is this issue around third-party rewards and stablecoins. So this has turned out to be primarily a battle between Coinbase and to a lesser extent the rest of the crypto industry on one side, and the banks on the other. Particularly the community banks. And I'm pretty confident, or I should say hopeful, maybe not confident, somewhere between hopeful and confident, that we're going to get a compromise that both sides won't be totally happy with, but should be enough. And I'm hearing this week, actually, is when we should be getting a deal brokered by the White House. The second issue is around DeFi, primarily Title III of the Senate Clarity Act bill. and to what extent DeFi is pulled in. DeFi interfaces, for example, how broad the protections for DeFi protocol developers are. And that one, I think, is close, but not quite as close as the rewards issue. And then the third issue, which is probably the most intractable, is the ethics issue. So, a lot of people, publicly Democrats and privately some Republicans too, have concerns about the business relationship that members of the current administration have with different crypto projects. And so, handling that, I think, is going to be quite sensitive. And what it would take to get a lot of Democrats on board will probably get the White House off board. So that one, I think, is going to be a challenge. Whether Democrats are willing to hold this arrow and put it back in the quiver for when they take over Congress, which all the polls seem to indicate they will after the next elections. Remains to be seen. So, yeah. I mean, when you multiply the probabilities across all those three different smaller and smaller hoops, I give the bill about a 25% chance of making it through. So, not great.
Like just as with no timeline, just 25% chance of going through.
25%. I think before May, and I think if we get to Memorial Day and there's not a deal, we're in election season, and I don't think Congress will be able to get around to it.
Wow. And so the ethics part of the bill is something that is far less discussed, but it's actually the part of the bill that you think is going to require the most work because of President Trump's affiliation with World Liberty Finance, meme coins, etc., as well as other people within the House and the Senate and the Congress that have different relationships with different digital assets companies.
I think that's right, I think that one is going to be really hard, and it's going to, one of the reasons why it's also the most difficult one to get through is depending on the political reality at the moment that this bill is, being marked up, for example, going through the banking committee, is it gives Democrats a convenient way of getting out of the negotiations and voting no on the bill.
In what way?
Because it gives them cover.
Okay.
To say, hey, we like this bill, but we don't like the fact that ethics isn't being covered, and we're worried it's going to grow this market to the benefit of
the president, basically.
of the president who has some questionable ties to some crypto companies.
So literally, Trump's crypto projects could prohibit the industry from moving forward.
It's kind of ironic because Trump has been
He's a crypto president, I thought.
That's right. Yeah. So it's
a little too much so.
Yeah.
Fuck, man, that's not good.
But the one hand giveth, the other hand taketh away.
Yeah.
And are ethics part of every bill in general, Congress, the House? Is there always an ethics part that kind of talks about what conflict of interest there are with this, or is this specifically for digital assets?
That's actually a good point. What a lot of people are saying is let's draft ethics language that is just general. And right now there's a lot of controversy around potentially members of Congress doing insider trading. So there's famously the Nancy Pelosi ETF or her trading strategy that's out there. I don't know. There's different vehicles of getting that exposure. Dan Crenshaw, Republican congressman in Texas, lost his primary recently, in large part because of a perception that he also had one of the highest performing portfolios in Congress, and so there was rumors of him, and it cost him politically. That he was, using his position in Congress. So it's a serious thing, and the current laws clearly, either aren't being enforced enough or aren't specific enough to prevent this type of thing, and it really erodes confidence in markets as well as Congress. So, my personal view, we should have very strong ethics rules for public servants. So that they don't, abuse or be in a position where there's a perception of abusing their position. And that should extend across digital assets and TradFi assets and, any type of commercial dealing.
And so how are you advising, Plume to navigate this in light of the 25% probability that Clarity Act passes? Are there steps that you guys need to take in order to sidestep the lack of regulation that could be coming?
Yeah, so, the SEC, CFTC, the other financial regulators still have a lot of authority, and they're still making a lot of progress within their existing authority. A lot of people are looking at the forbearance, the lack of enforcement focus right now on digital assets as good enough for them. Because we're in the real-world asset space, and because so many real-world assets could be seen as securities, or as regulated securities, it's our view that we should take advantage of this moment where the regulators want to work with us and bring us within the regulatory perimeter and are showing themselves to be creative in terms of getting to the same or better outcomes with new approaches to compliance, and getting the registrations in place so that we can future-proof our business as the political winds shift. That's actually been my advice to other firms that are working in the tokenization space or in the DeFi space, is try to get regulatory certainty while you can, because this forbearance, it's probably going to go away. One can even imagine, even under a Republican future president like a Marco Rubio, will Marco Rubio be as pro-crypto as the Trump administration? I don't know. He's a national security hawk, and national security hawks don't love DeFi. They don't love permissionless networks. So right now is the time to come up with ideas to get to the same or better outcomes. For example, on illicit finance and anti-money laundering, which Genius actually shows you can do. Stable coins, unlike physical cash or cash intermediated by banks, particularly offshore banks, you can shut it off. The second an illicit actor has your stablecoin in their wallet, you can shut them off right away, and then you can hand and this has happened. I mentioned I was at Chainalysis. Something like 27% of all the illicit funds identified by Chainalysis, I think this was 2022 or 2021, had been seized by law enforcement. And estimates in the real world, not the digital world, are that seizure rates are like 0.1%, if even that. So when you look at asset seizure rates, and you can see why, because you have this freeze and seize capability, built into the smart contracts for different products, particularly stablecoins. You can see why you can get to better outcomes when it comes to combating illicit finance through on-chain compliance infrastructure. And so a lot of what we do is educating the policymakers that, hey, you can actually get to better outcomes by leveraging this technology as opposed to trying to fight it.
Salman, you brought up a really good point, kind of separate from Plume and more into the insider trading. There's I think, Rob, you said you saw a Yoshi ad in DC today talking about
the number one priority is to ban insider trading.
Yeah, what has been the chatter on the Hill about insider trading in prediction markets? What's been those developments? Because the core feature of prediction markets is kind of this democratization of access to information to act on it. Like if I have a friend who works behind the scenes in the Oscars and he shoots me a quick text before the Oscars, it's insider trading, but it's way more accessible with prediction markets because of any scenario similar to that. And that scales across all culture, weather, industries, sports, etc. Give us a sense of where that conversation is at.
So there's nothing new here. It's really the CFTC in this case reinforcing the fact that the markets that they supervise should be clean from this type of thing. So there's a couple requirements that futures exchanges are subject to that apply here. Number one is that the contracts that they offer shouldn't be readily susceptible to manipulation. So the CFTC can interpret that narrowly or broadly to make sure that it isn't easy to manipulate the contract. If it is potentially susceptible to manipulation, then making sure, and this is where the second duty that the futures exchanges are subject to applies, having a very robust market surveillance system. So knowing who is trading, who's engaging in suspicious trading, and then engaging in investigations and enforcement actions when somebody is for example, always conveniently buying a big position ahead of the announcement that settles the contract. Getting for example, trading ahead on the Oscars announcement in that case. So CFTC is just saying, hey, reminding the futures exchanges that they need to enforce these requirements that they're subject to.
Yeah, for a while they were almost like they weren't regulated by anyone. They were just like this new class of market. And then I remember there was that photo with all the CFTC and SEC reps, and then there was the Polymarket CEO and the Counsel CEO, and they were just going at each other's throats almost. So.
There was an interesting podcast.
On this issue, though, I think both of them share an interest in making sure that there's confidence in these markets, that it's not seen as an insider game, that retail loses out.
Yeah. Recently, there was an interesting podcast where Mike Seelig and Paul Atkins joined the All In Summit. They were talking through the All In podcast. They were talking through this prediction markets, and essentially, it seemed as if the CFTC is just passing on to Kalshi and the exchanges and letting them police themselves according to the laws that you talked about. This is very different from the previous SEC, CFTC. Even in future administrations, what should it be?
So I actually worked at the CFTC on these issues. So futures exchanges, designated contract markets, are self-regulatory organizations. So they have to comply with those two requirements that I mentioned. Contracts not being readily susceptible to manipulation, and then having a robust market surveillance program to detect and deter this type of insider trading abuse. And then overseeing the exchanges and their compliance is the CFTC. And part of my job at the CFTC was actually conducting independent surveillance as well. So the CFTC has its own surveillance resources, and it can find its own anomalous trading activity and tell the exchange, hey, we're noticing this. Are you guys doing anything on this? And I was involved in a lot of those conversations with the futures exchanges. So there's two layers actually of oversight here. There's the SRO, the futures exchange, and then there's the CFTC overseeing them. Now, one thing that's happened, in the last couple of years is the CFTC's lost a lot of people. And so, some people are saying that the CFTC needs more resources in terms of staff, and I would say especially technology, in order to be able to provide effective oversight of the SROs and of the markets.
Why are they losing so many people?
Remember Doge and the chainsaw?
Yes.
Yeah.
Elon.
Yeah, that's what happened. Yeah.
Salman, man, thank you for joining us. Thanks for being a part of this Plume and the Rollup journey as well. The Empire State Office, you got to come up.
For
Check
sure.
it out.
Yeah.
The studio's insane.
Yeah.
I'm sure you've been seeing clips and videos of it.
Yeah.
So yeah, I was super stoked on that. Great to be here.
Well, we're excited to be partnering with you on this, and next time we'll have the Nest logo in the back.
Thanks, Salman.
All right, thanks.
Cheers, man.
See you next time. Thank you.
Take care.
Alrighty, guys. Very interesting segment there on the end with regards to prediction markets and the impact there on those markets. Kind of how these markets started as kind of non-regulated, kind of these random markets, and now they're being regulated as if they're a futures exchange or very similar. Guys, we've got Evan Cheng, CEO of Mysten Labs, coming up.
Mysten Labs
takes from Salman.
Look, Salman is extremely well versed in a lot of these topics.
Yeah.
I think the way he articulates the Clarity Act is very, very eloquent. Like, he's able to understand not just the odds of the thing passing in general, but each of the segments of the act passing as well. He puts, and this could be why we're seeing a pop in the market now, which is we anticipate a decision in the yield conversation, as soon as the next week or two. And then, following through from there, things might decrease in the probability that we succeed in getting the bill passed due to the ethical considerations. But ultimately, this is very, very positive. Next, we've got Evan
Let's give him some love. Here we go, baby.
Yeah, from
Evan,
Mysten Labs.
live from DC Blockchain Summit. Evan, good to see you here.
Thank you for coming on the show.
Yeah,
Absolute pleasure to have you on, man. What's your first reaction? Everyone's here in suits.
Yeah.
You're wearing a suit. Are you wearing a
know.
sport coat? All right.
I'm wearing a sports coat, right? I gotta wear it once in a while, so might as well.
Yeah, man. Well, welcome to the Rollup. It's your first time on. I think we're obviously quite familiar with your work, as is our audience. So let's just get right into it, Evan. What are you doing here? Why are you here?
Well, apart from the great weather and seeing so many people in suits, no, it's important. Regulation, especially around DeFi, around kind of we all kind of wondering where we are with the Clarity Bill and all that market structure, all these. So it's important to talk to folks, to share our perspective, to make sure people understand what we are building for.
Yeah, definitely. And I feel like this space has evolved so much in terms of it's the era of the professional. Obviously, folks are very focused on their institutional strategy and positioning, tokenization, stablecoins, perps, vaults. Very clean tunnel vision here on very specific use cases for blockchain. So much so that a reductionary view could say it's just finance. Is that true? Is blockchain just for finance? Or are we just in this kind of intermediary period here where we're evolving through it?
It's not just for finance, right? You think about, you generalize everything. What is tokenization of means? What does it look like? Tokenize can apply to a lot of other kind of data, information, other things that doesn't have perceived value as what we think about a tokenized asset today. So clearly this is a generalized infrastructure that say this is where the interests are, because people are always interested in the finance. The world is always interested in finance, and so it's not a surprise. This is where a lot of the energy is focused on right now.
And so what is Sui most focused on? You guys have a lot of product market fit with USD Sui at 580 million in TVL. This is one of the main exports of this ecosystem. How do you start to build more products around this core infrastructure? Does it start with finance? You build out from there? Where are you seeing the most traction?
So if you've been following Sui's sort of history,
we
build the layer one, we say this is the coordination layer, you can build other things on top. And we've done that. We build Wars, we build Seal, we build, Deep Book, the on-chain order book and all that. So the way we think about it, we've been building the core underlying infrastructure. Now we're building the building blocks that make it easier to build products on top of, right? If you think about the complexity of anybody who's outside of Web3 and coming in have to deal with all the blockchain terminologies and how do you deal with the interoperability of all this sort of thing. It is very, very a lot to handle. So we sort of are moving up the stack in a lot of ways. So we're building a lot of products ourselves. We actually have a few on the launch pads we're launching pretty soon. But these products are also going to be sort of building blocks that you can integrate into other surfaces. Could be integrated into your favorite TradFi integration surfaces to solve a lot of distribution. So that's what we've been building. We're kind of building up the layer. Yes, a lot of focus is on finance right now, but we always have our eyes on what's happening. The overall trend is everything in the world is going towards automation. Humans are sort of coordinating, right? You start hearing the word orchestration and coordination when people talk about AI as well. So the trend is very obvious. Everything is being automated, including some part of your financial, world. Let's get used to it.
Yeah, definitely. So you guys will know this question already, and I've asked quite a few people. You have an interesting perspective here as the CEO and co-founder of a very successful blockchain. The question is, if the tokenization thesis is correct, and trillions of dollars of assets are going to move on chain in the coming years. Which company will benefit the most?
Which company will benefit the most? That's an impossible question to answer. Like we're already seeing, depends on your horizon, right? In the near term, you see the hyperliquid, in very short amount of time benefit tremendously. You see Robinhood really embracing and benefiting from tokenization, things happening on chain, trading cryptocurrencies. You're going to see other fintech that build better product, maybe in payment, and payment is very broad, cross-border payments, all that. But I would like to think everybody could benefit, because ultimately consumers should benefit from it. It's all about which business adopt it quickly, which one adopt it best, understand how to take advantage of technology advancement to build better product for the customer. Maybe there's a world where you don't think about separating out finance and other kinds of product. It's all integrated, right? So what I hope for is consumer benefit from it.
Yeah. Rob, I'd like to just build on something that you asked earlier and that you answered, Evan, which was around this USD SWI asset growing in total TVL. And then you kind of answered with this verticalization thesis, almost like we're going to go dog food our tech, build our own applications on our blockchain. And I feel like this is part of this bigger regime shift of building applications on chain now, is we originally started with like, let me build this credible neutral blockchain, this decentralized set of nodes, and let me invite builders to come build on our blockchain. We'll do grants, we'll do special ecosystem programs, we'll have a head of ecosystem, and we'll kind of leave it to builders to build on our fertile lands. But that's changing. These blockchain from the top down are trying to go and start to build a lot of their own products because they're trying to generate revenue to basically come back to the token to create a business model for the chain that's not just reliant on transaction fees. Is this thesis right? Is this verticalization regime shift thesis right? How is this happening?
It's not or, it's and.
Okay.
So attracting developer, helping them build credible product, help them build successful business, it's going to be ongoing. But if you look at, this is a unique sort of industry. If you look at successful platforms, what comes to mind? You think about iOS, you think about Microsoft Windows platform, you think about Android, you think about all the other platforms, you think about Roblox. Almost all of them go top down. They started by launching successful product and then see other demanding want to build on top of what they build and becomes a platform. So because the nature of business, you kind of have to build the infrastructure first and open up for other builders. Doesn't mean that's the only strategy to building a platform. So the question is, how do you go about building this product go top down? What you're gonna see is our product are more product infrastructure that others can integrate or using as a building block. DeepBook is a very good example. We had that for almost at the beginning of SWI. And people has been building other kinds of product, either a front end for trading or integrating it for liquidity and all that. So that's the way we approach it. So it's not, we're going to take all the opportunity and build it ourselves. That's insane. That's never going to work.
Okay, so you don't want to compete with your own ecosystem, but you realize that you want to be building applications and business lines that are complementary to the ecosystem.
Yes, because we have the insight, right? As you build, you work with others, you have insight what is needed. And there's also the recognizing the difficulty of builders. So especially now you're seeing different kinds of builders. They may not be as comfortable dealing with all the blockchain complexity. They want solutions. So you build solutions for them so they are integrated into other types of products.
I'm curious how you're incorporating AI into the stack. This is something that a lot of teams are starting to incorporate. Both, it could be AI managed wallets, could be managed vaults, more in the financial world. SUI is one of the most scalable blockchains available. And so as greater throughput becomes available, more use cases become pragmatic and feasible. How are you starting to see AI playing into some of the applications that could be built on top of the SUI base layer?
So I think AI is going to be everywhere, right? So we recognized a while ago there's no such a thing of developer that don't think about AI. So it's about what you can integrate into that world. Development is going to look very different. People are not thinking about what stack I'm going to be using when they start a new project. They're going to talk to their AI or using whatever tool they use to kind of turn the idea into a product, right? So you kind of have to be part of that. So for us, we are thinking less around how do we use AI to make our product better right now. We're thinking about what can we do to integrate with AI to help address some of the shortcomings of AI or the limitation of AI. Anything from, everybody's talking about agentic commerce, you want to give the agents a wallet, a payment rail, and all that. So these are very obvious, right? I think we all at the industry at a point where doing the obvious, everybody's doing the obvious. You got to think a little bit deeper.
Yeah. I mean, this agentic finance kind of conference, so much so that there are narrative peddlers out there. Finance, are we just overhyping the next era of slightly incremental higher TPS blockchains, or do we really need a step function in performance to facilitate agentic commerce?
Well, so on one hand, it's not wrong. If you look at Sui's thesis at the beginning, it should be you don't want to talk about cap intrinsic capacity, right? You will grow with the demand. That's true. So in a very, very long-term time horizon, the number, the requirement, the need is going to be as high as it's going to be. We don't know, right? If you look at the internet, sort of think of internet as the layer for moving data and blockchains on top of it for moving assets. You'll say, well, they probably will grow to eventually roughly equivalent in terms of capacity needs. So it's true, but what that will look like, or is it one blockchain, or is it interconnecting a lot of different blockchain, or is a blockchain only one building block for this? I'm going to bet on the latter, right? It's going to be a blockchain like Sui that's built with growing with the increasing capacity with demand in mind. There's going to be layer on top to enable these sort of massive amount of sort of transaction going through, transfer asset going through. So I think hyping and say, well, we need this today, people are rightfully skeptical. But in the future, yeah, it's probably going to be true.
I'm curious what you're most excited about as far as the regulation that's coming out of DC.
We're in DC.
The regulation that's coming out is extremely promising for the entire industry. The SEC and CFTC are now working closely together. Congress is working on some exciting acts as well. What are you most looking forward to? We've talked about the Clarity Act. We've talked about the innovation exemption. What does some of this regulation mean for Sui?
I think what we were all looking for is clarity, right? Not just the clarity bill.
Right.
It's clarity what the rules are. Because if with that being clear, we can build for it, right? We can build with it. Without, you kind of have to guess. If you have to guess, you're going to perhaps not taking the step you need to do. So we're going to see innovation, the pace of innovation move, not just grow tremendously when we have that level of clarity. Now, obviously, we are here to make sure, the wrong kind of regulation, the one that really choke innovation or shift the liability onto developer that innovate, don't happen, because that can be really, really bad for us. But on the other, you kind of know, because the whole space is moving, technology is ever evolving, you're not going to get it perfectly right? Regulation usually always trail technology development. We recognize that. But having some of the really important questions answered will be a tremendous boom for the industry.
Yeah. So Evan, regulatory clarity is amazing for the spurring the next era of innovation, but part of me worries about a lot of the existing protocols, companies in the space being held to the same standard as the rest of the market inside of the digital assets market and outside. Notably, this new administration came in, kind of reduced the need for what we call on the show decentralization theater, or this kind of Fugazi DAO governance. Trump came in and was like, look guys, you know, like let's just operate under maximum efficiency, launched a meme coin, done all this crazy stuff. Then Hyperliquid comes in, launches their token and says, hey, we're gonna just buy back our token with maximum amount of daily revenues and just do it. And you're either gonna compete with this or you're gonna have to come up with a better reason for other people to own your asset. And so I guess like the circle that I'm coming to here is, how does Sui and Mysten Labs plan to adjust to this new environment where investors are looking at you with a PDE ratio? They're asking you about your business lines, and they're asking you about how you plan to grow this thing to create buybacks, buy pressure, and create a kind of flywheel here. I'm not asking about token price. I'm not asking about what you're going to do in that regard. Broadly, where does the industry go from here as it's kind of at the big boy table now? It's no longer what it used to be.
Well, if you look at our strategy, our aspiration has always been pretty grand, right? We believe everything needs this layer on top to facilitate, all these exchange of information, assets, to coordinate. And you start to see that will be true. So we've been playing a very long game. Not that we don't care about short term, but we're not sacrificing our future for short-term benefits. So there are things we could do to compete directly with a Hyperliquid, which ultimately is about trading all the asset, right? It has one purpose. It has a tremendously great business model. It's capturing a lot of attention or a lot of benefit today. If we shift all that, do we give away some of the opportunity for the future that may be greater, right? If you ever seen the long-term success, that chart always look like flat, flat, flat until it goes like that. Where is that point for us? That's what we're focusing on right now. So maybe early on, relative to Hyperliquid, you're saying it was a little flat, but relative to some other, we're doing quite well.
Correct.
So we're finding that balance, right? We care about the near term because we're a company. We have to be successful. We have to be able to continue to grow and innovate and invest in new opportunities. But at the same time, we're not giving up the future when this goes vertical like this, because we want to build something that's generalized enough for that 100x bigger market down the road. And if you are sort of building for just what we need now, we may not have that opportunity. So these are the balancing act, right? As a business owner, a leader, we have to think about. We think we are doing the right thing.
Okay.
We, as a startup that have now just one cycle under the belt with Default Live, we have market recognition, we have community, we have some success, some not successful experience. We're learning from that, we're adopting. We are really so excited about what we're building right now. A lot of them are just around the corner. We're going to launch. We're going to see how it goes. But the gap between Hyperliquid and Sui today is not as big as you think. That's what we believe. Just like you rewind a year ago, Hyperliquid was just starting out, and Sui was doing quite well at that point in time. And very suddenly they pass us. These things move very quick.
Yeah, no, and I don't mean to grill you, but I'm going to ask you another one here. Okay, so there was a point in time where the L1 or the base layer construct was the transaction fees, like the gas fees or transaction fees. You would multiply that over a 365 annualized day kind of like forecast, and you get like this like revenue generating network. It's not a business, it's like a network. Fees across all chains have significantly decreased. Bear market, very, very classic. Speculative activity slows down.
Also, scaling the chain reduces the fees.
Right, and so like there's kind of weird incentives with base layers where like you don't really want to have a lot of fees because you want to compete with other chains and etc. But I guess like the crux of the question here is like, is that part of like the business model for Sui? Is that still in your mind as like a part of the business model?
No.
Okay, no.
No. I mean, if you any business, any software business, you know, right? If you are selling a commodity, the price drive down to the as low as possible, you're going to get a lot of market share. But ultimately, you're not making money. You're not moving your business forward. The business model has never been that, and will always shift, right? So you do that early because you want to sort of have this lock-in. You want to have more people using that. But over time, it's not about jacking up the price. It's about other ways to make money. So the why we have $3 USD, well, the yield, right? The more USD being minted, the yield comes back into the ecosystem, and that's another sort of way to grow the ecosystem. So all these things, right? We already have we're planning for the transition into a different business model. So a lot of these things can sort of overcome the challenge of the fees going lower and lower. Yeah.
I appreciate these answers. This is like an investor update here. So thank you for bearing with me here.
I've got a bit of a different question, Evan. You left Facebook when you were 50 years old. I'm curious, do you ever think that with the administration we have in office now, the Libra project would have been able to launch flawlessly, successfully? Do you ever think about that? How do you think about this?
I don't really think about it, right? Because back then when I left, it's not just because Libra wasn't happening, right? Because I want to do something a little bit more broader and more general.
Yeah.
It's like our thesis is, if you build a chain just for payment, primary payment, your design is going to lock you down to that use case. And it's really, really hard to loosen up and generalize it later. We'd rather go the other direction, much more generalized platform that we believe in, and then we can easily build rails on top for payments and other, right? We'll see if that thesis play out, right? We talk about this difficulty of like going bottom up versus top down. Yeah, on one hand, yes, I completely agree with you. It's like Libra 2.0 is picking up here and there. Tempo and other are basically following the same playbook and learning from that experience. It would have been great that Libra had launched back then and had been tremendously successful, but I still am very happy that 3 exists today, and that's sort of to our kind of vision what it looked like. We just have a lot of more work to do to prove our final thesis.
So you made the right decision. Now I'm curious, today, do you think Facebook tries to relaunch something similar?
I did hear something about that.
I think Facebook is too busy with other stuff.
Yeah.
Honestly,
with
right?
AI.
Yeah, I think it's not like the company to go back and revisit past project.
Yeah.
But if you look at what they focus now, right, it's elsewhere. Right. I think they will absolutely at some point in time make use of stablecoin for payment. Whatever will make the business more efficient, move faster, they will adopt it. It's a very smart company, just like every other company out there. Doesn't matter if it's big or small. Whether they do something like a Libra again, I doubt it. Yeah, I really, really don't see a reason for them to reboot that.
Yeah, I'm not sure that they will either. Evan, I know we gotta let you go here. Last thing here about this kind of like fees and valuations and business model stuff. Like when you're speaking to institutional allocators, whether that's on the tokenization side, the equity side, RWAs in general, like what do these conversations look like from the base layer perspective? Like what kind of investment appetite is there into SWI, the asset? What type of allocation appetite is there to bring tokenized assets onto SWI? Like where are you guys at with that conversation, and how is that developing?
I think there's tremendous amount of interest in SWI, as well as basically the possibility of building on top of SWI. We in particular has had tremendous sort of interest from Asia. For whatever the reason, this is where we are the strongest. There's going to be a lot of things coming there. If you look at it, like we are the only blockchain, they have relationship with the big three of China, right? The ByteDance parent company, the Alibaba, the Tencent. I think we have a relationship with all of them. We have a lot of other interests from institutions in Asia. I think in U.S., Wall Street, there's a lot of interest. Obviously, everybody's thinking about it. Everybody's talking about it. Everybody's energy is here too, focus here. There's a lot of competition. We see a lot of good feedback. A lot of folks understand, a lot of these institutions understand what we build are differentiated, right? But I think right now what we're seeing is US and Wall Street are a little bit slower moving in terms of adoption. They are looking for more turnkey solution. So you will see a lot of exploration, a lot of POC being built, a lot of sort of these tests being done with us, with other broader adoption. I think it's going to happen. When that will happen, less clear. But we're going where the demands are. Right now it's Asia. That's just going through the roof.
Interesting.
So, yeah.
Interesting.
Awesome.
Evan, thank you for your time, sir.
Thank you very much.
Enjoy your time here in DC, all right?
All right.
And
We'll see you next time.
Tell Trump that we say hi
All right.
if you speak to him, all right? Thanks, Evan.
care.
Thanks, Evan.
Alrighty, guys. Pretty
Here
great
we
episode,
go.
man.
Yeah, Evan's great.
That was solid.
Yeah. Friends at Mysten. Look, these guys are building an L1.
Yeah, man. I mean, a base layer for finance. So, guys, up next we've got Chaz, the CLO and co-founder of Dinari. Dinari fits right into the conversation that we've been having today and for the last couple of weeks on the Rollup. Tokenized equities, doing it in a unique way, and bringing this market to scale.
Yep.
Right. And so, very, very interested to hear about their strategy, what's coming up, and really just kind of like, again, let's get into some of the nitty gritty of what's happening here in DC and how that affects that specific market. So,
yeah, let's
Chaz,
do it.
Come
Let's
on
bring
up, man.
let's bring up Chaz.
We've got him
We're
here.
talking
We're on a
more about
marathon right now.
tokenization.
We're absolutely ripping.
Yeah.
Guys are wearing the
It's been
suits.
nonstop. There we go.
Chaz, good to see you,
Welcome to
buddy.
the show.
Which one's Andy? Which one's Robbie?
This is
Andy,
Andy.
Rob.
I'm Robbie.
I thought I was just wanted to double check.
Good to see you. Great.
Chaz, doing well, man.
Right on.
How's the conference treating you?
So far, so good. I have to say. I mean, I got in yesterday, so I was there for the fun.
There you go.
I will be honest. It was. I was checking out. I was grabbing a late dinner, and I'm like, seeing the warnings on TV. I'm like, I need to get back to my hotel room before I get blown away. It was
You need
crazy.
a beer.
Yeah.
or
it
two
got
of
pretty-
it.
Coming from
windy
Seattle,
last
I
night.
expected it to be less rainy here. I'm not gonna lie.
Well, we're glad you're here. We're glad you're on the show. We've been talking a lot about tokenization, tokenized equities.
A lot. It's like
before
everything tokenization.
everything is
the thing.
tokenization.
It's
It, really,
everything.
it is the thing. Before we get into some of the things that we've heard and policies that we've had, would love to just get your raw, unfiltered approach to tokenization, how you're implementing it at Dinari.
Well, I mean, there's a reason why tokenization is kind of the buzzword right now. You can't think about the future sometimes without looking at the past. And it was 50 years ago that we were trading stocks on paper.
It's crazy,
It was 50
man.
years ago that they shut down the market every Wednesday so they could sort pieces of paper in filing cabinets, right? It was 30 years ago that we finally went to T+3, and only 2 years ago we went to T+1.
Yep.
The only way, in my view, that we can see a future that is more like atomic settlement, that allows for what I would call kind of like the security, the rigidity of future financial rails, I don't see a way that you do it without involving blockchain in a fundamental way. And not just in a free-for-all way, just to be clear. Like, I'm a lawyer by trade, but I'm at fintech, right, at heart. And there's got to be a way for us to blend the security and regulatory, what you call like infrastructure, with the technology in the future, and do it in a way that they can both coexist until we can maybe flip that switch.
Yeah, and Chaz, you have a very unique background from different industries.
That's true.
I'm blanking on the name of the document sign company.
I was at LegalZoom.
LegalZoom,
Yeah,
yes.
for
And then they
18
exited.
years.
Yes, and then they exited, and then you kind of parlayed that into finding fintech? Or?
Yeah, so it's honestly, it goes back a little further than that. My original job. I was actually a Navy pilot for 8 years, and
Oh, wow.
I never ever thought I would be a lawyer, right? I thought I'd probably be an airline pilot or a corporate pilot, but as I got out of the military, I was really thinking about what my future would look like, and I was really interested in the legal system. Just because my dad ran a small business, and the legal system didn't do a very good job for him. And my job at LegalZoom, this is where the intersection comes down. The job at LegalZoom was real interesting because it's a heavily regulated industry, the provision of legal services, right? You have to have law degrees and pass bars, and you have to have expertise, you have to have commitments to your client, you have to have all these rails around knowing who your client is. And what we were doing is we were introducing a technology, which was in the 2000s, right, the internet, into the concept of the traditional practice of law, and there was no room for it. And what we decided to do is we decided that we needed to make a stand, and we needed to take a position that you could operate a legal and regulated kind of version of the practice of law on the internet, and eventually even roll in the provision of lawyers. And so when I left there, just to be straight, my goal was to maybe just kind of coast for a bit, but it was not, I had not even left a month. And I got a call from my co-founder, Gabe, who got introduced through a mutual friend. And he started explaining this concept of tokenization and how, guess what? It's a heavily regulated industry with no clear path toward doing it. But the idea that there should be a company out there that tries to do it right and shows regulators what regulation could look like.
Yep.
And after we talked for about an hour, he just said, I want you to come on board. And honestly, I won't pretend like I jumped right away because I was a part of me that really wanted to just chill. But after I really started seeing the future of this, I thought, why not? I mean, the wide open field that we have in front of us is very similar to 25 years ago.
Yeah, man. I mean, a man with a passion for disrupting industries with little clear path ahead.
Right.
And I think something that the market needs to know is that Dinari actually created a standard of tokenization that is the right way, or you put it in parentheses, the right way. Explain that. What happened?
Right. So just to be clear, and I'm with you on this one. I don't like to call it the right way. I like to call it a right way.
Okay,
right.
Sure.
And just to be clear, what I mean by that is there is no right way yet. The regulators haven't spoken. The government hasn't spoken. The legislators haven't spoken. But they need to start speaking. And as a matter of fact, part of this conference is getting them to actually speak. What we've seen from the legislature and from the current administration, from the crypto task force, has been nothing short of amazing. And what Dinari did, even before that happened, was we set out to do exactly that, which is how do we take this new technology and build it not to replace the infrastructure, but in order to ride on top of it or alongside of the current infrastructure without breaking it. So, and again, I'll try to draw an analogy. If you think about like the days when we used to watch movies on tape, and then we started streaming them. Well, when streaming came out, all of a sudden, video cassette recorders didn't explode. Right? You had a choice. You could still do it the old way, or you could do it the new way, right? And eventually, though, the new way did kind of take over. And good luck finding a VCR today, right? Maybe at a thrift shop. And I think that we've got the same thing happening here in the same way. Just to be clear, like I'm not dogging out the current system. I mean, to a certain extent, you have to. I mean, to a certain extent, you do have to.
Right.
But what Dinari is trying to do is to try and say, look, the current system, it's already evolved before. Let's keep evolving. Right. And just to be clear, I think that entities like DTCC that really brought that paper, they took the paper out and put it on, put it on computers. They're looking for this as well. They want to see tokenization happen too. I think the big difference is that innovation and that is that standard going to come from inside an entity that's currently operating and doing a really great job? Or is it going to come from outside and then be adopted by those people inside? Yeah. And so what Dinari's done is we've created this standardization that we think is agnostic and we see as agnostic. It's cross-chain, it's cross-traditional, and the future of markets that's going to allow tokenization to be more easily and widely adopted both now and in the future.
Yeah. There is demand for these tokenized forms. There's demand for 24/7 trading. We're seeing hyperliquid, how price discovery is happening there over the weekends.
Yeah.
And we've also heard, and I think this is a passion for the administration because we can bring some one of the greatest exports of America, which is our financial system.
100%.
Our currency, our equities, we can export this around the world. What does it look like to bring tokenized forms of U.S. equities around the world?
Right.
And then how different is that for customers that might already have access to these things or citizens of the U.S.?
Yeah.
Do they need tokenized forms? It's primarily for, outside the U.S.
Yeah, and so there's a real interesting way of looking at this, and you look at it, the way I like to look at it is, you look at kind of what is and what has been for about the past couple of years, and that is Dinari using a tokenization standard to bring the benefits of U.S. equities to individuals in now 80 countries, over tens of thousands of customers, 150 assets, and we are people who right now, I can't say no one has access. That's not true. You can find international brokers, right? You can go and you can go through the process of trying to open up a U.S. bank account if you live in Peru or if you live in some other remote area.
Tricky, man.
But it's not crazy easy.
Right.
And so in order to do this, in a better way, in a smaller, and the other thing is, it also means like if you just wanted to trade $20 or $30 or $50, sometimes that juice isn't worth the squeeze.
Right.
But if you can make this a little bit easier by making the rails a little more simple, right? Allowing people to hook up a wallet, get a verification through a KYC, an AML, like we do all these checks, right? The stuff that's required of most international and legitimate systems, then you can start trading almost immediately with just a few dollars. And also, when you take a look at some of the countries, and again, I don't want to name anyone by names, but there are places where their currency is being devalued at a regular pace.
Yeah. Yeah.
Some of them they prefer to get paid in stablecoin. They prefer to get paid in US-backed or Euro-backed assets. And so for them to be able to then try and find out a way to get that money into the US system and buy a US equity directly, sometimes it's just easier and it's a little bit more beneficial on that smaller scale to grab a token, which Dinari offers through what we call D shares.
Yeah. And so that's a very clear value proposition to everyone outside of the U.S.
100%.
What is the value proposition of tokenized equities to the U.S. citizens?
I think, as I stated here in the very beginning, that idea of T3 to T1 to T snap, right?
Soon.
Atomic settlement. I don't see a way that we can do atomic settlement without tokenization, right? How do you do what I call kind of like right now, if you're a high net worth individual and you've got assets in the 7 figures or 8 figures or more, it's very easy for you to do things like get margin loans, for you to have lines of credit, for you to like collateralize those assets, right? But if you don't have those, if they're in small amounts in the markets of 401ks, yeah, you can pull loans out of there. It's a little bit tricky. But the idea of being able to do spot lending, to be able to do atomic settlement, the one thing that I'm really interested in and what I'd like to see happen is instead of having a stock, selling that stock into fiat and then buying another stock, what if we just were able to swap stock for stock, right? And not actually take it off the rails of the system. And how about not recognizing a loss or a gain at that time? Because you actually haven't done anything to trigger a tax, right? So I think those are things that we all should be talking about right now. In the same way that if you're in a mutual fund and they swap out assets, you don't get taxed on gains, right? If you are, investing in a property and you want to swap it into another property, you don't get taxed on that gain because why? You've kept your money in the system. And we need to be able to encourage the retail investor, the small investor, to invest in the same ways and with the same protections that large and institutional investors and qualified buyers and purchasers can.
Yeah, man.
I wonder how much of that is a technical hurdle versus a regulatory one.
I think it's both.
Yeah.
It's absolutely both. Like you can't give someone regulatory approval if you can't have a way to implement it.
Exactly.
And you can't have a way to implement it until there's some regulatory approval.
Yeah.
So there's a little chicken egg going on here, but I really feel like we're right at that spot where the chicken and the egg are happening at the same time.
Yeah.
It's really cool.
So the core idea here is like do more with your stocks. Like
Yeah.
get your stocks and be able to do more. I mean,
Yes.
there's collateralization that's possible. There's borrowing, lending. There's a swap concept they've
Absolutely.
introduced today.
We can all open up an app. We can open up Robinhood or our Schwab app, and we can say it's going up, it's going down. Where's the fun in that, right? What's more fun is like, what can I do with this money while it's sitting there?
Yeah.
I mean, right now, you can earn a 0.1% of interest from your bank account, or maybe you can get a better yield in treasuries. But what we're talking about is being able to take that money that's kind of sitting there earning and use it for the benefit of your own family and your legacy.
It also turns asset management into more of a skill game. Whereas right now, you can pick that, you can pick this. You do your own research. You kind of, and then once you're in that position, it's going to go up or it's going to go down.
Yeah.
Once you have more mechanisms at your disposal, there's more you can do with it. You can get more creative. You can implement more unique strategies and use cases. And then it becomes. What's up?
With AI coming to you, there's just
Yeah, 100%. So think of it this way. Right now, if you want to, you can find an ETF, right? You can find something that tracks whether it's the S&P or it can track gold, it can track certain things. But what if you're a relatively smart investor and you want to track 17 unique stocks, but there's no ETF for it? It'd be relatively easy to take that and create a token out of just those 17 stocks that you personally could invest dollars into every month, every week when you get your check, and do it in sort of like, we call it like an alloy fashion, right? Where you can create your own material that allows you to invest in a way you want to. It's personalized, it's individualized.
We've talked about the N7 index. We believe in this thesis of neo-finance, which is the convergence of a lot of these things: high quality assets, exogenous yield sources, AI, asset management, and putting these things into vaults like you're talking about, or alloys. I can imagine how we have, and people have actually asked us, okay, we have the N7, like the Mag 7.
Yeah, right.
Put that into an index. People have asked us, where can I get exposure to this?
Exactly, and that's where it becomes difficult. Now even branch it out further. What if you wanted access to 3 of the M7, but you also wanted the top 5 coins? Right. Now, well, wait a minute. How do we do that? Well, it's actually not as difficult, right? As long as those things are trading and there's a price and there's an NBBO, there's a place to bid for them, a place to understand what the pricing is. We can put that into a token, and you can buy just $1 of it, $4 of it, $17 of it.
Just a quick follow-up on this, and I want to give our sponsor for the week shout out, Chainlink. They're powering price feeds. I'm just curious how these things ultimately get implemented. All you need is a price feed that pulls together an equity price and a coin price, and then you can create or tokenize assets and indices as a result of that, or is there more going on?
Well, there's more, but it's all behind the scenes, right? What the customer sees is exactly what you said. I just chose them. I picked the percentages. I know what my exposure is. I'm willing to take care of that. I'm willing to put in, like I said, 50, 100, 10,000, whatever, how many dollars I feel comfortable investing in. I do want to kind of touch on that idea of accredited investors and kind of how that is a little antiquated. But behind the scenes, right, there's a lot more than that, right? There's the acquisition of those assets, because issuing a token and saying it's backed is different than issuing a token and it actually being one-to-one backed. You've got to still integrate with the rails that can currently acquire those assets, hold those assets, sell those assets when the time has come, and do so at the price that's going to be the kind of national best bid. That's going to be that market price. And so again, it's the iceberg syndrome, right? Where all you see is the really cool stuff on top, but the really interesting things that are going on behind, you don't need to worry about the sausage getting made there.
Chaz, I really love your energy and the bullishness and just kind of like general passion for tokenization and seeing how this is going to disrupt the market. But I'm going to ask you some hard questions here.
Oh boy.
What is Dinari's monetizable moat? You guys got a U.S. broker-dealer license that's super solid and is a regulatory moat. But why is Dinari going to win in the slew of other tokenization platforms? Why will D-Shares and Dinari's tokenized equities win? What's your moat?
It's a great question, and I think that if you could ask any company that's kind of just starting out, and we're 4 years old, almost 5 years old now, are we going to win? I think that most of the companies that have won, they'll say the same thing. Of course we're going to win, right? The how is the interesting thing, and really what the how comes down to is it's not your product, it's your team, it's your execution, right? We've got a great team of people. We've got Gaybot's proven entrepreneur, proven already in different space. Just be clear, I'll toot my own horn here. I've done a pretty good job, right? When it comes to execution and making things happen in a difficult regulatory landscape. It's great technology, but the other thing is building relationships. You got to build relationships with the SEC, with FINRA. You have to, if we're here in the United States, you got to do it with the regulators that are in the EU, out in the UAE, right there, in Singapore, like all across Asia, in South America. we have to come up with a standard that's going to be as interoperable as possible with as many different regimes and as many different companies, as many countries, as many different regulatory schemes as possible. And in order to do that, you've got to reach out across the aisle. The first thing you have to do is you have to say, I'm not here to break your system, I'm here to make it better. When we're ready, so let's make it ready together. That's number one. Number two is you need to reach out to the people who are already in the thick of it, but they want to see things better, right? The institutions of the world, the neobanks of the world, the wallet providers, right? They're saying, how do I make this, how do I confer more of a benefit to the people who own my wallet? I know what I can do. I can get them stocks. I'm a neobank. How do I add more investment opportunities to this? I know what I'll do. We can add D shares and stocks. But the overwhelming thing right now is, and you can ask any venture capitalist this, execution and team above product and idea every time. Yeah. The product is here, the idea is here, the need is there. The big question is who's the team that's going to execute on it, and I put my money on Dinari, and I have.
Yeah, I love it. And I understand you guys have a unique international model as far as distribution, right? Key partners and strategic regions that allow you guys to scale without having to necessarily go into those regions on your own and navigate their individual legal structures.
Right.
That's a unique edge as well. And I mean, something else that's quite interesting is that Kraken just got this Fedwire access.
Yeah, I heard about that.
So maybe this is another hard question.
Yeah.
Like, that competitive edge on the regulatory and the liquidity side for them is significant. Do you expect Fedwire to be accessible by other digital assets companies? How do you guys compete with a company that has Fedwire access?
Yeah, well, I mean, there's always going to be someone that's out there doing it different and someone that's maybe out there doing it first. I believe Dinari, we've pushed it out there and we've done a lot of things first as well, right? This idea of tokenizing and getting securities outside the United States. But yes, like just to be clear, sometimes you do have to fast follow. Sometimes, and again, once there's a path, whether it's to charter a bank, whether it's to partner with a bank for things like for lending and settlement, et cetera, partnering with clearing agencies, clearing firms, partnering with other, like I said, neobanks or institutions or exchanges or wallet providers out. We're gonna have to keep moving quickly, right? That's the whole. You are right. Even a company as nimble as Dinari, if you sit and just stare too long at your own problem, you miss all the other problems that are passing you by and other people are solving. So we're going to have to continue to keep innovating and keep pushing forward. And honestly, what you mentioned, the regulatory issue is a big one, right? You can rely on partners for a while, but you also, at the same time, need to be learning those regulatory structures. You got to be complying with those structures. You need to be making sure that you're kind of hand in hand with those partners. And also, you got to be ready. What happens if that partner decides to exit, right? The partnership, right? You got to be ready either with someone else to fill it in, or you got to be able to backfill it yourself. So, we're always taking a look at what it would look like, what it would cost, what the kind of runway is for us to go direct as well, because I think that's the end goal. But just to be really clear, the next main thing that we're really focused on is right here in the United States, right here in this district, right?
Coming soon.
We've got to find a way to give the U.S. investor, whether they are someone who's been investing for years or someone who's thinking about it tomorrow, that ability, that clarity to, and wow, what a great name, right? Clarity, the clarity to actually do this.
I know, it's a play on words of it.
So before we let you go,
sure thing.
I want to get a chance for you to comment on this next wave of investors that may not be accredited, right? This is a big problem that a lot of people are trying to solve, but with the regulatory landscape the way it is, it's got this gatekeeping effect.
It does.
The current administration is very open-minded to changing some of these rules, so now feels like the right time to address this. Tell us how you feel about the current accredited investor laws. Right. Where do you think we should go?
They're one size fits some, right? They're not one size fit all. Very few people have a couple $100,000 of just income flowing in every year. Very few people have millions of dollars worth of assets just sitting that they can be exposed to risk. I'm not going to pretend like I came up with this. I've heard other people, other podcasts talking about the fact I think we need to relax the rules that allow people to invest, but do it in a smart way, right? In an adaptive way. We've got so much coming online right now in the form of information, intellect, artificial. We should be able to either test people or give them some sort of a primer course that tells them, like, you need to take this, right? We make a lot of people go to, we make them learn how to drive before we put them on the roads, right? Why can't we have something like that for people who want to invest? And sure, maybe for some people we say, you know what, your limit every year is going to be 5,000 or 10,000 or 100,000 or maybe 2,000. Right. But at least you can get in there and you can get access to some of the things that other people have had access to for decades. And if we allow that to happen, that's going to be kind of step one, is really, like I said, you've got to relax it, because you can't get away with it altogether, because then people will get burned, right? People have gotten burned. Institutional investors have gotten burned, right? So we've got to balance what it is. We've got to balance the risk with the opportunity. And the problem right now is that the accredited investor law, it's just all risk and all opportunity, and it's only for the wealthy. Right. And as long as it's only for the wealthy benefit. Yeah. And we've got to be able to pull that in, and it's got to be more than just, rolling up on Robinhood and putting $16 into Bitcoin or whatever, right? You got to do more than that.
And just to point out how uncommon sense this is and how we can improve upon it. The example that I've heard is, imagine an heir to some inheritance, right, that has no financial education whatsoever, but inherits $10 million. All of a sudden they can participate.
Whatever they want.
But someone who has AI at their fingertips, the wealth of information in the internet, studies up on a particular stock, but they don't make $2 million in the last year, they can't go and buy this asset for exposure?
Exactly. Yeah. So from the legal standpoint, the way I look at this, and by the way, this is very much in line with what happened at LegalZoom, right? Yeah. People used to come up and say, these are legal rights. You can't just allow people to have them, right? What if they mess it up? What if they do something stupid? Yeah. And I'm like, you give people far too few credit. Right. When you provide them with really great information, when you provide them with really great tools, when you provide them with really great backdrops, right? So for instance, what if alongside of this, you have the ability, if you're a little worried, to talk really quickly to a financial advisor, someone who can just answer that quick question, right? Right, which is what LegalZoom did with lawyers. You're worried about this question? Yep. Why don't you grab a phone real quick, hop on with a lawyer, they'll talk to you about this, right? Yep. They'll make sure that it's right for you. So you've got that part of it. You got to make sure that we do this the right way, and make sure that it continues to move forward. We can't constantly be babysitting everyone. And it's interesting. Back when I was in my old job at LegalZoom, I met with an attorney general who was a part of the consumer affairs, consumer protection department. And I said, well, some of these laws, they're like really, really stop people from benefiting themselves. And this person, I'm not going to name the state or when, looked at me and said, my job is not to protect the citizens of my state. My job is to protect the stupidest citizen of my state. And I'm like, but then all the people who are actually smart also get hurt by that. Yeah. And it kind of is like, and again, that's that idea of government overprotecting versus properly protecting. Right. And it's not what I call Wild West. And I used to say this a lot in legal. It's not deregulation, it's right regulation. Right. Yeah. This industry needs right regulation. Right now, it's just got right now regulation. And it actually has yesterday regulation. We need future regulation.
Yeah, we absolutely do.
Chaz, man, thank you for joining us.
Appreciate it. Absolutely wonderful, guys.
Really appreciate it.
Yeah, you take care.
You have a great podcast voice. I'm not sure if you've heard that before.
I actually did a radio show, a call-in legal talk show for about 5 years back in the early 2000s. So.
Nice, man. I might need to shoot you a message for some tips as we go on this broadcasting journey. We have an office in the Empire State Building. We're doing the show.
I love it. I have to get out there and see you guys again soon.
Absolutely.
Take care, guys. Cheers.
Great to have you.
Bye-bye. All right, guys, we're going to take
I swear I've heard that guy on a podcast before.
Must have, right?
On our radio.
Quick break. I'm going to be stepping out for this next one. We've got award-winning TechCrunch journalist Jacquelyn Melinek that's going to be joining our host Andy for the next one.
Quick break, boys.
Quick break, girls. And we will be right back. Don't go anywhere. with our friend Jacquelyn Melinek, award-winning TechCrunch reporter. Welcome to the show, Jacquelyn.
Wow, guys, thank you for such a kind intro. I haven't been at TechCrunch in 2 years, but I appreciate it.
You got on the podcast, though.
I know. They brought me back.
Podcast.
They brought me back. I am the external crypto expert now for them.
Sign of the times.
I think so. Yeah.
Jackie, do you own any Hyperliquid?
I don't, but I should.
Oh my gosh.
I should buy some Hyperliquid.
You haven't been listening to the
Is this
Rollup.
like the intro question you ask all your guests?
Wow. She hasn't been listening to the show for the last year and a half.
I saw the episodes. I saw it. I guess, and honestly, this is a shout out to them. So I had Hyperliquid Strategy CEO David Shamus on my podcast.
Yeah. Yes.
And after I sat down with him, and I never expressed this to him, but if he's listening, this is a nice anecdote. I literally was like, I should go buy some of their stock because of like his thesis, the team, just everything about it felt so elite. And like very rarely do I feel that way after an interview where I'm like, wow, I want to go buy this like asset token, etc. But when you do that, like you're winning, essentially. So
It's a very compelling thesis. The entire
you guys have
Hyperliquid
it?
Thesis. We
The per
have
stock, I
owned.
do, yeah.
Yeah,
So
it is
dumb.
per.
It's called per.
That's why I didn't say it.
It's so silly.
It's just like Hyperliquid Strategies. Yeah.
Yeah, Jackie, I mean, look at us. We're wearing sport jackets.
I
Rob's
know.
got a suit. You
I
look
wore
great.
my suit jacket for you guys
Yeah, you
today.
look great.
I'm usually more casual.
It's a
but
sign of
yes.
the times.
It is, yeah.
Yeah.
I mean, this whole room is filled with suits right now, and I was going to tweet this out, but essentially it's just like everyone here is networking. They're listening to the panels. It's more serious than like past conferences, and this is like a trend I just continue to see over and over.
Yep.
Where it's like the room is filled with these serious people, opposed to like that degen energy that we're so used to in like past cycles.
That degen energy, there used to be so much innovation and engineering and innovation that would take place like on the actual technology. The actual technology is less innovative than the policy these days, which is insane because how slow the policy moves. But it's almost like the technology's there. Like we have fast, affordable, secure blockchains. There's not really a lot more to do there. Now, all of the I just find more entertaining, more interesting conversations coming from the policy.
Really?
Yes. Dude, have you heard?
I mean, you're at the wrong place if you're not entertained. Yeah.
When you've heard, people talk from like the L1s or the technology side of the world, like there are good improvements that we can make to the technology, especially the financial side of things. But like when you hear some of those things, have you heard any like really powerful updates when it comes to the technology?
I mean, yeah, sure, a bit, but I see what you mean. Like there's actual progress happening on the policy side.
And it feels like more of the moat that these companies have is regulatory. Like you mentioned, like the Kraken has the FedWire account. Some of these companies
Dinari has a
broker-dealer license.
Yeah.
And
Also,
so,
the drive of this OCC charters as well, that's a really big trend as well that we're going to start seeing too, is like either they're trying to get it, they're filing for it, or they already actively have it. Like I spoke to Diogo Monica, who is on the board for Erebor, Palmer Lucky's new stablecoin turned bank situation. And it's just so interesting because like the OCC charters historically have been so hard to get, and now under this administration it's like it's not easy, but it's more accessible, I would say. And so we're going to start to see these crypto companies have them, and it's really going to be kind of this like convergence of like the traditional markets with DeFi. And I think a lot of it comes down to education too, because I was talking with the Euler CEO, and they were talking about how they're really trying to build credit markets for the internet, on-chain, all these different things, and that like a lot of these different like retail investors are now looking into more exotic assets, opposed to just like, I'm going to buy Tesla stock, like something vanilla. I don't even know if Tesla stock's vanilla. I think it's kind of vanilla.
It's just a plain stock,
Whereas like now people might be like, okay, I'm going to get this like tokenized money market on chain, or I'm going to get this like DeFi swap through this protocol, and like it's all coming through like DeFi.
Yeah. And we were just talking about how there's so many more financial mechanisms for tokenized versions of those equities. Yeah, like Tesla stock, plain and simple, is just a vanilla stock.
Yeah.
But once you put the Tesla stock into an Aave Horizon or an Euler, then you can issue credit against it. You can take that, you can lever up on it, do all kinds of very fun and like creative things to the plain and vanilla stock to get more exposure or to create more complex strategies where someone can get, like what I said earlier was that it's like turning the stock picking game into a skill game where you have all of these, like a lot more financial mechanisms.
And then you also could use like AI agents or AI tools to literally become a financial professional with no prior experience. Obviously, do your own research. Like, I'm not saying like go and use them. Like they are literally like an investment advisor, but it opens up the door where you no longer have to be someone working in this industry to get ahead. You could just use the tools that are at your disposal.
Yeah, you know what's interesting? I had Yuki on the show yesterday, and he was like, there's going to be a world, or we're entering a world where people's first interaction with blockchains is not going to be to buy a crypto asset. Like they're just going to buy like a tokenized gold or a tokenized equity on chain, likely without even knowing it. And that's going to be their first interaction. Whereas like for all of us, the first interaction was obviously buying Bitcoin or Litecoin or Ethereum or whatever it was. I thought that was interesting too. Like all of these are signs of the times.
Yeah.
This kind of regime shift happening, this convergence between these two asset classes happening at scale. And then, you know, here in DC, you throw in the policy mix into the whole conversation, and it's like, it's a really interesting kind of concoction being stirred up here.
Yeah. And I mean, it used to be like, how do you guys operate within the securities laws frameworks, the existing frameworks? And now it's like, we're actually kind of paving the way for digital asset specific frameworks that allow us to create technology, whether it's in a sandbox or in something that is dedicated for this industry. Not like trying to fit digital assets and blockchain technology into like old school laws.
I believe Paul Atkins is on the stage later today with Michael Seelig, and Adam earlier today said that they're going to be talking about this innovation exemption, which is exactly what you're talking about, a carve out that is a different asset class. It's not securities, it's not commodities. This is a particular asset class, it's digital assets. Adam said that early on it's going to be quite narrow as far as what this pertains to. And then we also heard how Citadel and other market makers in the traditional space, as well as JP Morgan, are planning on litigating the CFTC and the SEC for putting together this exemption. So the big financial institutions are not particularly happy that digital assets and crypto are getting this carve out. It kind of shows that now, you know, we've kind of conquered the regulatory villain, if you will, of our industry. Now we're kind of getting back to our roots and we're fighting this traditional financial villain once again.
But I think there has to come a point where everyone kind of not gets along, but works together. Like we're going to have the JP Morgans, we see BlackRock, for example, we're going to have the JP Morgans, the Bank of Americas, the Goldman Sachs of the world having to interact with these DeFi protocols that historically have only engaged really with crypto users. Yeah. And there has to be some bridge between the two where it's like we're bringing institutions on chain, but on the flip side, these on-chain protocols, DeFi apps, whatever it may be, are now coming to them. And there is like this middle piece that connects the two. But I think a lot of it comes down to education.
Absolutely, it comes down to education. Yeah. Even within, and this is another point that Adam from Chainlink made, even within particular organizations, you've got an asset management business and a trading business inside of a company like BlackRock or JP Morgan, and you hear two very, very different things. One side could be very pro digital assets, pro tokenization. The other sees it as a threat to their business. Mm-hmm. And if I'm a CEO and I'm looking over both of these departments, who am I going to pick? Like, how do you pick which child you love more? Like, which one is it? So there's some really difficult decisions to be made.
We hope that you don't have to
You always
choose,
have
Rob.
a favorite child, though. I'm my parents' favorite child.
She's the only child.
You're the only child. No siblings.
That's the kicker, right? No, I have two siblings. They're wonderful, but you know. Okay. It's the Jackie show, right? Yeah.
Sure. But I think you're right though, Rob. Like there is that clear market-making dynamic issue with these types of assets where they're kind of like at ends with this 24/7 tokenized trading idea, but then the allocators in the asset management business sees it as a way, like the thing with the Dinari co-founder is that if they get that right, they will be able to offer, because they have a US broker-dealer, they will be able to offer any RIA, any registered investment advisor, the ability for their clients to just borrow against their stocks and get yield on their stocks, do all these intricate things. And the RIA is going to be seen like they are a genius. Yeah. They're going to be like, wow, like their clients are going to be like, how do you offer this? Like, what crazy technology have you built that allows you to get more capital efficiency out of my equity holdings? Yeah. And they won't even realize that they're using something like Dinari. And it's very, very weird.
And Jackie, this is a part of the thesis that we've been talking about a lot on the show. Obviously, there's this convergence between the two worlds. We're also talking about this evolution. where it starts with stable coins and tokenization, specifically tokenization of high quality assets. High quality assets could be treasuries, could be bonds, but it's also speculative high quality assets like equities. First you tokenize them, they end up on chain, then you put them inside of the DeFi protocols that are now resilient and secure and unlock all of this liquidity and composability. That allows you to create really, really interesting, complex, and capital efficient products like vaults. We've heard, I think you've had Matt from Bitwise on. He's very excited about vaults.
Yeah.
I think we have Teddy from Bitwise coming in just a little bit. And so vaults are something that every asset manager's dream is to have all of this creativity when they're structuring the product. Vaults provides that. The final frontier is AI managed vaults where you can sort of rebalance these things, put in new collateral, take things out, have different parameters, all AI managed. And so there's this evolution. It all starts with tokenization, but as we progress through this, we end up with more assets on chain, and this ends up into our protocols, it ends up into our assets that are more crypto native. And this is the evolution perspective of what we're seeing, which is also this neo-finance thesis and this convergence.
Yeah, I think also too, at the base level, it starts with that T+1, T+2 settlement, and explaining to them how it doesn't need to be like that.
Right. Yeah.
Because if they don't really care for things on chain, then it's okay, well, what you do care about is speed, and also the 24/7 markets. And even with the NASDAQ, we're seeing them do, I think it's 24/5 right now.
Yes.
Maybe 24/6. They're not giving us the 7 days yet, but you know what is 7 days?
Hyperliquid.
Hyperliquid, yes.
Yes, Jackie, she's gonna get on board.
Oh my God.
15 minutes on the show. All right, guys, we're gonna take a super quick break. Then we've got James, a NASDAQ-listed public company, talking tokenization and more, guys. Quick break. Jackie's gonna co-host this one with me, and we will be right back, guys. Don't we get deep.
We get deep. We get deep hard. You know we get deep.
All right, guys, we are back at DC Blockchain Summit Day 1. We've got James Cheng, the CFO at Canaan, talking Bitcoin mining, infra, energy, here with my special co-host, Jacquelyn, Melinek,
Always a pleasure.
and James.
Yeah, nice to meet you.
Yeah, same
And
here.
it's good to have this session with you, Andy and Jacquelyn.
Awesome, man. Well, welcome to Washington, D.C.
Yeah, it's I've been here several times, but the weather here is lovely today.
There you
It's
go.
not a tornado today. That's
Yeah.
good.
Yeah, it's not snowing, no
Yeah.
snowstorm. Yeah, very good.
There you go. Well, James, Canaan is a publicly traded company in this Bitcoin mining field, but also into the energy and the infrastructure for data centers, for power. I'm going to start off with a straight question. Are Bitcoin miners pivoting to AI already? What is happening? I am hearing so many rumors of Bitcoin mining companies and firms shifting to AI to power compute for the ongoing AI kind of super cycle. What's actually happening on the ground floor? Is that a trend that you expect to continue?
Yeah, I think the two business, Bitcoin mining and AI cloud computing, actually is quite similar. We use the energy properly to generate value, different value. One is for cryptocurrency, Bitcoin, and the other is for the food for AI. It's just like agriculture for AI, it's cloud computing. So same thing. And I think the difference here is the two infrastructure is a little bit different because use different machines, different hardwares, and also the level of requirement is different. Usually, data center needs like 150 megawatts to start a big data center. But Bitcoin mining is more flexible with small energy sources. So usually the investment starts from Bitcoin mining. We see a lot of public companies, they shift to AI. But on the other hand, a lot of small companies, entrepreneurs, they are entering the sector to buy more Bitcoin machines because they can get the capex returned in the coming 2 years' time with quite a big certainty. Bitcoin mining has the certainty to get the capex back. And then with the larger and larger scale of their operation, they can also upgrade their mining sites to AI cloud computing. So I consider these two business is in one ecosystem, and it's not competing each other. It's just one plus the other. So that's my personal view.
In general, in DC, there's obviously a big focus on financial access and market structure for crypto and a bunch of these different firms. How does that kind of impact the large-scale mining operations in the U.S.?
You mean the Bitcoin price?
Well, no, not necessarily, but maybe the focus in DC on the front of like financial access, market structure, etc. How does that play a role in operations for major Bitcoin mining firms?
Yeah, I think it's extremely important for Washington, D.C. to make all kinds of policies related to our industry. For example, we do need the whole industry development with a very solid foundation for for law, like clarity, like all those things are very important for the industry development. So we are waiting to see more exciting moments in the coming months' time. And I think in this industry's leader is definitely the United States. U.S. should always keep going in the innovation and try to do a kind of regulation for the innovations and then make the leadership more solid.
So you guys have recently expanded into Texas as well.
Yeah.
Looking at sub 3 cents per kilowatt hour of power.
Yeah.
At that cost basis, are you guys still, are we still underwater on Bitcoin mining right now? I keep seeing charts on Twitter. Guys, this has been some of the longest time that Bitcoin mining has actually been unprofitable.
Yeah.
Where are you guys at? Has it been a tough quarter?
Are we making
what's
profit?
Your kind of,
Yeah. Are we
like
profitable?
what's the state of affairs?
Yeah.
Well, to be very honest, we are currently still profitable doing Bitcoin mining, considering the variable cost. And I think because of the energy cost is extremely low in Texas, like below 3 cents, we will continue to invest in Texas. And we will continue to commit to Texas and other United States, because the regulation here is quite consistent. You welcome Bitcoin mining, and you consider this is an important contributor to the grid. So if that continues, the leadership of U.S. mining will continue, and we will be part of that. We will continue to invest. I think profitability perspective, we look forward to future Bitcoin. The price could continue to go up. At that time, we will see our profit today is not a profit for future. It can be, maximized by the price going up.
How would you kind of compare the demand between the U.S. versus other markets like APAC, LATAM, et cetera, on the mining front? Is it regionally very similar or drastically different?
In the past, I think the U.S. occupies like a 40% global market. But recently, I think it can be bigger. It grows faster, especially after this new Trump administration, triggered a lot of new energy sources like nuclear. So we consider U.S. market is developing faster than elsewhere. We consider U.S. will continue to be the biggest market and even have bigger market share.
So I've also done some research and found that you guys are shifting towards self-mining versus hardware sales as part of the business strategy and economic strategy. What is the margin profile difference between self-mining and hardware sales for Canaan, and kind of how did that decision come to fruition?
Yeah, I think hardware selling is always depending on the price.
Of the ASIC or?
The ASIC and the Bitcoin is so linked. The price fluctuates, and sometimes we have a strong profitability, sometimes not. So if that's the case, that's the only business we have. The stock price could fluctuate together with the Bitcoin price. But if we add on the mining side, we can see accumulation of the assets, and we can see more stabilized. The profitability.
Almost 2,000 Bitcoin, almost 4,000 Ethereum. I think it is on your books now.
Yeah, it's 1,800 Bitcoins in our book now, and we are very proud of holding that for long term.
Canaan's been around since 2013, right? So it's been almost 13 years, give or take, and you've been with the company for 4 or 5, right?
Yeah.
How would you kind of characterize the changes in the market over the past 5 years, and then for the larger business over a decade? It's very uncommon for a lot of crypto companies to last that long, right?
Yeah, I think we started the business in 2013. At that time, nobody knows Bitcoin mining.
Exactly,
it's just a very small industry, and it's a new industry. But now, it's quite organized by a lot of institutions and also a lot of individuals. So it's a mixture with institutions and individuals joining the industry. So from our observation, the US take the leadership, and the global other countries also follows. It's closely linked to the energy business. I think 13 years ago, we didn't even think about the energy can be helped by Bitcoin mining. Now we know that because every location, if they have Bitcoin mining, they have certainty of consuming energy. And then the energy investor can invest in that location, even there is no other citizens to consume the energy. They have some certainty to invest. So I think now the industry is growing into a new level, but it's still in the early stage. That needs a lot of contribution from the manufacturers, like miners, everyone in this industry to help, to develop it into a kind of normal industry. Normal industry means we can be very profitable for a long time and be sustainable and to pay back to our shareholders.
When it comes to the self-mining part of your business, are you positioning this towards institutional players, or is it more for retail and like the OG Bitcoiners?
Yeah, I think currently the self-mining is more for institutions. But I think more and more individuals are having interest to joining this section. It's not only the OGs. Yeah, I think a lot of individuals in the United States, they showed a strong passion after the ETF has become common for everybody. Some of them, they like ETFs, but some of them, they consider the Bitcoins cannot be controlled by only a few institutions or giant guys. They should be owned by every individuals. Everybody has the right to protect their wealth against the inflation. So Bitcoin is a weapon for everybody. So that's why we developed a kind of retail, mining machines, and also a kind of heaters to help the winter time. The families can warm their bedrooms using that small machine, and they can generate Bitcoins at the same time. That's something we want to continue the philosophy of decentralization to make Bitcoin be held by everybody.
There you go, James.
Yeah.
James, I don't know if you remember, there was a pushback when Ethereum switched to proof of work because of the energy consumption of Bitcoin, and then already now Ethereum and other proof of work networks. It was this big kind of pushback around a lot from the Democratic Party, as well as just folks who are environmentalists, really just pushing away from Bitcoin and digital assets, kind of just saying that they don't really contribute much to the world, but they contribute a lot of the world's energy. That happened. AI came and blew the amount of energy required to do compute out of the water comparatively to digital asset mining.
Yeah.
Very ironic, because AI is kind of like everyone's on board with it. Very weird. Anyhow, that energy shift and expansion, the requirements and the increased demand have caused a ripple effect in adjacent kind of like industries where the price of SanDisk stock and memory has gone way up.
Yeah.
Copper, uranium, and then like gold and silver and kind of like some of these like precious metals too, slightly different. But there's a lot of these like different trades and different sectors really blowing up because of this energy and compute demand.
Yeah.
How do you think about this part of the investment thesis here? Not Bitcoin, not in the mining hardware itself, but the ripple effects of the demand for compute consistently increasing. What do you expect to see kind of in the broader market as we continue to increase the demand for hardware for compute?
Yeah, I think that's a very interesting question. I started my career as a demand planner for Johnson babies and for Mars bars for chocolate. So I know usually the consumption is not a bad thing. If you consume a lot of chocolate, the chocolate factory will be very happy to see that. So the energy, same thing. If you consume like energy, the grid will feel happy. And if you consume that energy in a kind of very organized, very certain way, that means your consumption can be calculated easily as a cornerstone of the grid. So the grid can invest more to those strand energy, like the natural gas well, nobody takes care of, nobody uses that natural gas. So in the earth, a lot of energies cannot be used in the past, but with Bitcoin mining, now they can be used. No matter in West Texas, like the wind in West Texas, like the natural gas in Indonesia. We entered a lot of energy sources human being never touched. So with that assumption, I personally consider energy consumption of Bitcoin mining is worse. It helped people to develop more energy sources, not only for today, but also for future when AI cloud computing needs a lot of energy as their food. So who helped the AI is Bitcoin mining as the early stage business to help them. And we will continue to help them. So from broader, market perspective, I consider the hardware is continue to be needed by the energy companies, by the energy source owners. So I have, strong confidence on that.
And then on the front of investors, what are they really interested in right now, and how are you kind of working with shareholders to really bring it to the next level? like all in, what are you talking about with investors right now on the front of shareholders and everything? Like, what is the feedback you're getting when you do the quarterly calls? What do they really want to see done, let's say, in 2026?
2026.
This year, yeah.
This year.
I think our shareholders, they have different views. Some of them, they want to have our liquidity stronger. They want us to sell all the Bitcoins.
Oh, sell all the Bitcoins.
They also mentioned to us, if you sell more, sell all your Bitcoins, that's also better for your value. But we had discussions internally, also in the board. We still want to hold some of the coins and to make sure we have long-term asset accumulated for our shareholders. I think different views, especially in the bear market, people have the emotion, like feeling tomorrow the Bitcoin price could continue to drop. But for us as a company, going through the past 4 cycles, we've been through the bear markets many times.
Yep.
So we know it's good thing in the bear market to accumulate more assets. So in the next bull market, you will come back stronger.
Yep. James Cheng, thank you for spending some time with Jacquelyn and I today. Best of luck as you guys finish this bear market, get into the next bull, and continue to expand into Texas where energy is cheaper, there's more opportunity, and continue to scale into adjacent sectors like AI, like cloud computing, and continue to mine Bitcoin. Thank you, James.
Yeah. Thank you, Andy. Thank you, Jacquelyn.
Thank you.
Great to see you.
Cheers.
You as well. Thank you.
Thank you. All right, guys, that's James Cheng. That's Canaan. That is Bitcoin mining. Guys, we're going to take a super quick commercial break. We'll be right back. Alrighty, guys, we are back live from DC Blockchain Summit Day 1. I'm here with my gracious special guest co-host, Jacquelyn Melinek.
Hi, I'm
What's up,
here. I'm
guys?
still here. Hopefully, you guys
Still
like
here
having
somehow.
me on because
And we've got Wasim Ahmad, live from DC Blockchain Summit, the co-founder of Vault 12. Wasim, welcome to the show. Welcome to DC.
Welcome on.
Thank you.
Yeah, okay, maybe starting at a high level, let's talk about like what Vault 12 is. We were kind of joking before we came on air that we're hoping that we don't die anytime soon, but kind of tell us the impetus for this and really why it matters today, even for us young people.
Well, I think especially for all, because all of the stories around people dying and then their assets not being available to their families are unfortunately young people.
Yeah.
So everyone from the Melon banker who did all kinds of stuff to make sure his crypto was secure. It was so secure that none of the family can get into the $200 million worth of crypto that he left. And he died very young. So yeah, I mean, the impetus comes from when crypto was first taking off with Bitcoin. My CEO was at Andreessen Horowitz. He was part of the blockchain team and helped do the deal with Coinbase to get them funded. And he realized at the time that if Coinbase was successful, there'd be all these consumers that would have to deal with security of their assets during their lifetime, but also what happens to their Bitcoin when they die. And so he founded Vault 12 10 years ago. It took us a little bit of coding work, and we launched in 2019 in the App Store. So we're in the Android App Store and the Google App Store.
Beautiful. And what does the kind of product suite look like now? Walk me through like what it looks like to join this product and kind of like what this means for somebody who wants to protect their assets, pass them down to their children or grandchildren. What does this kind of look like, right? Because in my mind, it's like ledger, private key, in a vault, buried. Like, just talk to me about what this looks like.
Well, so it's different for different kinds of people. So for
Right.
someone like you that's clearly been in crypto for a long time, it's all of the things that you described. But if you bury your ledger, who knows if anyone will be able to find it when they
Yeah,
need
where
it.
did you bury it, Andy?
Yeah. Look on our X, you'll see a little skit we did about burying ledgers. If you put it on a ledger, it can be stolen. If you use the backup services that many of these products have, they could change the business relationship with their cloud providers, and you're not able to access the private keys. So there are a lot of unintended risks of something that sounds super, super secure, but it isn't. And then the other type of customer is someone who, maybe their kids talk them into buying some crypto assets, but they're not crypto savvy in the way that you are. And they need a product or a solution that's very simple, straightforward, easy to use. We've all used MetaMask, and it's a horrible, horrible, horrible way of handling crypto. And hopefully that's all going to change with AI and all of those kinds of things in the future. So we set out to build something that was very simple and easy to use. We've revved it 3 or 4 times now. So it is very simple. It doesn't use any crypto jargon. You create a digital vault on your phone. You add in your crypto assets. You can make a video. You can do a riddle of what the seed phrase words are. You can put them in a structured way. You have many, many options. It doesn't have to be in any one format. That information, because it's just information at this point, is encrypted, split into pieces. So it could be 9 pieces. And you can send those pieces automatically to 3 family members, 3 friends, 3 business partners. And you can say, as long as 3 people out of that 9 say, okay, you can unlock the assets and use them and see the seed phrase of the private key. One of those people is going to be your beneficiary. So if you're incapacitated, which is what happened during the pandemic the year after we launched, or you're in jail, or you have indeed passed, someone can inherit the instructions and then pass them on to whoever's executing your will. And this is completely independent of what you sort out with your lawyers.
What about the art aspect? I saw on your site it's Bitcoin, crypto assets, and art.
Yeah, so a lot of people, I think with cryptocurrency, people buy a lot of different types of cryptocurrency. There's something new every year. and people go off and buy, there's new blockchains, they go off and buy those
Do
things.
you have Hyperliquid? That's the standard question they ask on this show.
I don't personally, but
oh my gosh,
but
these guys are struggling out here.
I think when NFTs were in vogue a few years ago, there was an emotional connection between whatever that type of artwork was. I have 4 pieces of a Banksy. I'm not selling those. It's not worth anything right now, but I'm holding on to that, and I want my niece and nephew to have those. And so those are registered on the blockchain, so they are in a wallet, and so they can be put into the vault in exactly the same way as Bitcoin or Ethereum or any other crypto asset.
Yeah. Wasim, do you guys offer like insurance as well? Like, what is kind of like my mind goes to life insurance, but I'm not sure if you guys do that as well.
We don't do life insurance. We are basically the transportation mechanism from the owner to the beneficiary.
Okay.
And we just focus on that, and that way you can have whatever law firm help you with your overall estate. But it makes it very easy to get the instructions to the right, maybe someone that's technically savvy.
Yeah. Last thing for me, when you guys are building out the kind of suite of products, the vault, the application, what is the kind of user reaction and growth story here? Like, you guys started with a product, and you said you kind of had a lot of iterations on it. What's been the traction in the user story as a result of the product iterations, and kind of where are you guys at from a numbers perspective?
So we have about 400,000 customers who've downloaded the app and are using it, which is great, but it's a drop in the ocean because we're not yet at the point where we have a wave of consumer crypto. We're waiting for this Clarity Act that everyone's talking about today, for that to come in, and then hopefully the banks will come in and give people bank accounts with crypto, mortgages with crypto, all of those kinds of things. And then people are going to start thinking about, but I've got to pass these on. How do I do that? And so that's going to be a complex problem with many different ways of doing it, but we will be right there to help people.
Beautiful. Wasim, thank you for joining us, man.
Of course,
Quick session.
thank you.
I appreciate that.
Thank you.
It's been great. Ladies and gentlemen, we'll be right back with another session with Adam, the head of public policy at Chainlink, coming to the end here, guys. Just about an hour left. Stay tuned. Stick with us. See you guys in a second.
All right, guys. We are back live here at day one, DC Blockchain Summit. We've got our lovely co-host, Jackie, stepping in for Andy. And we are back with Adam from this morning. Welcome back.
Thanks, man, and woman.
Gang.
Good to be.
We're all here.
We're all here. Good to be back again. It's been a really action-packed first day.
Yeah.
Awesome. Well, give us a bit of a recap on day one. We've been locked in here, so we haven't caught any of the panels.
We saw you schmoozing out there. What are you talking about?
A lot of energy. Great crowd here, cutting across all of crypto. Yeah, of course, have a lot of lawyers, a lot of policy types, a lot of people from the Hill, regulators as well. We heard from the comptroller of the currency, Comptroller Gould today. Very interesting. And then upcoming, we have remarks from Mike Seelig and Paul Atkins. I think that's why you're seeing such a big crowd stay so late, as you know, into day one of a conference. Big crowd still out here, so a lot of energy right now. I'd say in terms of things that are percolating amongst the crowd, not necessarily on stage, is I'd say some increased energy and chatter about a potential deal on market structure on yield. So I think that's something that everyone is hopeful for sometime this week, next week. So devil's in the details. Deal is in quotes because not sure who will support it, but at least potentially something to look at.
Yeah.
Which would be a huge accomplishment at this point.
Yeah. Well, that's incredible because this is something that, obviously has been on the table for a long time. Earlier we had Salman from Plume come on, tell us that, deals on yield are very, very close. There's still this question of the ethics that the Democrats are pushing back on. He gave the Clarity Act a 25% chance of passing overall.
Which percent?
25.
25.
That's
over
not
under
high.
over under 25.
I'm going to go over.
Over. Okay.
Now,
okay.
I mean, as you guys are probably hearing, like it vacillates intraday here. So right now, based on what I've heard, and just some of the discussions going on 505, Title III, the BRCA provision, I think I'm going to go 45, just under 50, but definitely feeling stock up on market structure right now. But I agree with you. I think outside of the substantive issues of yield, DeFi, 505, Title III, I think there's two mainly political issues, ethics and the commission appointments for both the SEC and CFTC that are a really important part of this, that aren't really something that it's not something we're discussing on the Hill. It's mainly in the political sphere on both of those. I think I put ethics there, as well as the potential appointments, the Democratic appointments to both.
What is the kind of energy you're feeling, or is there tension in regards to the stablecoin conversation on the yield front? Is it still tough? Because I've read reports in the past that it was kind of contentious in the room, and has it alleviated at all?
I think two things are happening. I think one, the White House is weighing in very, very hard on this issue to get this bill done. And I think two, there's fatigue. And I think we all feel market structure fatigue. I don't know how many more interviews can you guys do on market structure before your heads explode.
And then that's it.
So I think between White House pressure and some fatigue here, no one wants to be seen as blocking market structure, a White House marquee item here. So I think there's that. So I think the short answer is I think it is improving in terms of a dialogue, but the banks still seem like they want to hold on here and not compromise at all, which of course is odd to me, given that if we keep the status quo, exchanges can continue to pay yield on static USDC or stablecoin reserves. So.
Adam, you were on earlier. You set the tone for the day, and we had a string of really, really interesting conversations. I'd love to get your number one takeaway from day one. It sounds like something is brewing underneath the surface on Clarity. Anything else on day one? And then I want to get your expectations for day two.
I think having the comptroller of the currency here is really, really important. Bank regulators in general are key here, but the OCC on several fronts has become a critical player, both in terms of the charters they're approving under their national bank authorities, but also their proposed rulemaking on the Genius Act for how they propose to treat yield. So I'd say the OCC's involvement here today sticks out. They've really become a critical player on several fronts in the crypto space. Not something you normally hear from a bank regulator, usually maybe above the fray a little bit, but the OCC is squarely in it when it comes to crypto now, for better or for worse. I think we're seeing that on both sides, maybe approving a lot of crypto native charters. Yeah. On the other hand, putting forward a proposed rulemaking that in many ways prevents the payment of yield on stablecoins. So I'd say the OCC is a highlight for me.
Yeah.
Is there anything specific in market structure that is really important to Chainlink that gets across so that you guys continue to like grow to the next level?
Yeah. Chainlink's really we're effectively a software company that allows any entity to integrate with blockchain. So for us, we're not an exchange, we're not a layer one, we don't make mint NFTs, we're not a wallet. So we're really in the integration business. So for us, we're working with DeFi, which is kind of in our roots. We're working with TradFi, we're working with governments, we're working with CeFi. So for us, it's really just getting market structure done. Our view is that market structure is going to be a catalyst for the entire industry. So our hope is that this thing gets done and all boats rise here, and there's more work for everybody.
Yeah.
Last question for you, Adam. Day 2 coming up tomorrow. What are you most looking forward to?
I mean, a little bit kind of like playing in our own lane here. Our general counsel, Ben Sherwin, he's going to moderate a panel with Angela Alsobrooks, who is the key Democrat on the yield discussions, along with her Republican counterpart, Tom Tillis. He'll be moderating a fireside with her and Senator Haggerty, obviously a big player in several areas, particularly on Genius. So we can talk to him about Genius implementation and the OCC's proposed rulemaking. Tomorrow, definitely a much heavier Hill day. Today, I feel like you had the OCC, you have the SEC and CFTC coming on now. So I think really hearing from the Hill tomorrow is going to be where it's at.
Appreciate it, Adam. We know Atkins and Seelig are getting out there now, so we'll let you catch them.
Yeah, I'm going to go catch some of it.
Yeah.
Thanks for having me on again. You guys are great. Keep it going.
Well, thank you to Chainlink, and we'll see you again tomorrow.
Thank you all.
Thanks, Adam. Thanks. All right, guys. Jackie?
We're still partying.
We're still here. We're still chugging along.
I haven't been kicked off air yet.
No, you're still here.
I haven't said the wrong thing. I've only said the right things.
Not
right,
canceled
guys?
yet.
Not canceled yet.
We're gonna get our friend Teddy in just a few minutes. First, let's get Peter, who's working on making the Federal Reserve quantum resistant. Felt like this was pretty cool. And we were talking just a little bit behind the scenes. He's a new addition to the docket today. Okay. So we'll get Peter in for just 5 minutes or so, and then we'll get Teddy from Bitwise, and that'll be how we close up day 1. Jackie, Adam's the man from Chainlink, isn't he?
Yeah, he is.
Have you guys had a chance to chat before?
I know Adam. I've known the Chainlink team for a long time.
Adam's great.
Yeah, they're wonderful. Great. Yes.
Peter,
how are you?
So nice to meet you. Jacquelyn.
Peter, welcome to the show.
Thank you very much.
Absolutely. I just mentioned to Jackie, we were chatting a little bit behind the scenes, making the Federal Reserve quantum resistant. Maybe you could tell us a little bit about your background and how you ended up here helping the Federal Reserve with quantum.
Well, it's great to meet you both, and I'm happy to be here at the Digital Chamber. And I'm here with the UK-US Crypto Alliance. So we have members of the House of Lords and the House of Commons here from the UK Parliament. And as part of that also, I'm here as chairman of a board of a startup company that's focused on crypto security, cybersecurity against quantum computing. So that's a big threat coming up, in that quantum computing is going to invalidate all the current cryptography on classical computing. So companies are very worried about how to protect themselves against quantum computing cyber attacks. So what's happening now are bad actors all over the world, North Korea, other hostile countries are copying all companies' data, and they're storing it because once quantum computing comes into play, they're going to be able to break all of the cybersecurity things that have been put in place prior to that. So we've got a solution, and we're working with, or our goal is to work with the Federal Reserve and the Treasury Department and the SEC to work in their sandbox to test the solution so that they can help all of the companies that they work with, all of the clients that they work with, protect themselves against quantum computing cyber threats from these bad actors. So that's, and the solution uses a kind of a digital certificate. So we shard some of the technology and create like a digital certificate that's stored in a vault. So, and it's stored offline, not on the network where it can't be accessed and attacked by quantum computing. So that piece of it, and then when we want to release it to the network, we combine it with our digital solution to then release it to the network so that it can be exchanged between different countries, between companies, etc., to make the economies work. And it's very exciting to be here. We met with senators in the Senate about this earlier today, and we're looking forward to bringing this forward, again, to protect the United States especially, and all of our economy and our companies who are worried about the quantum computing cybersecurity threat.
Has this been a threat already to date, or is this more like a hedge to get ahead of the potential threats?
It's a great question. It's a threat in that bad actors are already copying data.
Right.
So they're breaking into networks and they're copying data from companies, from government agencies that have all been encrypted under classical computing models. So the threat is ongoing. As we saw, I think we saw recently Iran just attacked a company in the United States and wiped out all the computer laptops of this company, you know, what's going on. Yeah. So it is a current threat in that they're already getting ready, taking all this data and storing it so that when they do have quantum computing capabilities, they can unencrypt all of that data and then use it for bad purposes or dangerous reasons.
Is there a specific part of like blockchain technology you guys are using on this front, or how does it operate? Now, without getting too technical, but I'm just curious how that works on the back end.
So that's a great question, and the way we do it is the only way you can protect, or one of the most efficient ways to protect against quantum computing attacks, are to take some of the product keys and shard them and put them on a certificate, just like a treasury certificate, and it creates it offline. So it's not up in the cloud, it's not on the network, but it's in a vault as a certificate. So even if the quantum computing attacks what's online, they can't compromise it because part of that key is stored in a vault with the certificate.
Okay.
And then we have a technology that then combines that certificate with the digital asset to then move it back up to the network to allow the transfer of money and goods through the system.
That's interesting.
Last question that I have for you, Peter, is that obviously we know quantum security, it has the potential to make radical changes to the way that a lot of our system works, the entire world. The pushback is that we just keep kicking the can down the road.
Exactly.
This might be a 20 to 30 year thing. How quickly do you anticipate quantum security becoming a problem in the world? How quickly do you think that will happen?
That's a great question. So in the area of quantum computing, there are a few major players. Google is very advanced with their quantum computer. IBM is very advanced with their quantum computer. The US government, and also China. So it's a strategic arms race on quantum computing to see who can get there first. And obviously, different countries or different players are going to use it for different reasons. Some good, some bad. So the answer to your question is not exactly clear on an exact date, but what I can tell you is these big players, the scalers, if you will, just like they're scaling for AI, they're also focused on the area of quantum computing. So it's just as important and even more important. I mean, just to give you an example, with quantum computing, you can do a calculation that would take a classical computer 1 million years to do in a matter of seconds.
Right.
So, I mean, that's the exciting frontier that I'm very excited to be involved with
Absolutely.
these companies.
Peter, thanks so much for coming on.
Thank you very much.
Last minute edition. Glad we can make it.
Thank you again.
Peter.
Yeah.
Thank you.
We'll see you next time. Thank you.
Yes, thank you.
All right, guys.
Yeah.
Quantum. How much are you thinking about quantum?
I've written a few articles on it, but
Really?
I think I don't know it well enough. So maybe my questions are a little high level, but maybe the audience is also high level with me. Okay?
I think we're all high level when it comes to
Yeah,
quantum these days.
Yeah.
We're gonna get Teddy from Bitwise up on the show. He's gonna be our last guest of the day. Jackie, I think it's time that we have to bid you farewell.
All right.
Unfortunately.
You have fun with Teddy, and I'll cheer it on from the sideline.
Okay. We're gonna have your partner,
Yeah.
Eleanor, on the show tomorrow.
Yes.
Any closing thoughts for the audience before you go?
I think in general, we talked about this when I came on before, but like the energy in this room is very optimistic, very sophisticated. And in general, the guests we have brought on have brought in, I think, a new, fresh perspective in general. So overall, like, no notes, good stuff.
Yeah.
And we'll see how tomorrow pans out.
Let's keep it up. Day one success. Let's
Yeah.
finish strong. Jackie, thanks so much.
Thanks,
guys.
Robbie.
Quick break. Don't go anywhere. We'll be right back with our final guest of the day,
Yep.
Teddy, founder of Bitwise.
We get deep. We get deep. We get deep hard. You know we get deep.
All right, ladies and gentlemen, we are live. Day one of the DC Blockchain Summit. Our final guest, last but certainly not least, Teddy Fusaro, the president at Bitwise.
Yeah.
Rob, before we get into Teddy, how you doing?
I'm doing great. I'm excited to get into Teddy because we've had Matt, we've had Hunter, and it feels like we're completing the Bitwise trifecta, if you will.
Okay, so you're done with the policy conversations. You ready to talk some institutional flows?
I am ready to talk some institutional flows.
All right, let's do that, guys. We got Teddy in the building. Let's give him some love. Let's go, Teddy.
Teddy.
How you doing, man?
I'm great. I'm wondering how Rob is doing because I know that this is a very policy-heavy day, very policy-heavy event. And getting into some of those details can be, at times, tedious.
Rob loves
I'm having a great time. I actually mentioned earlier that there is more innovation happening in the policy world than I'm seeing from some crypto-native L1s out there. It feels like we have scalable, affordable, fast, secure blockchains. We're kind of like not done, but we did a lot of the thing. Now a lot of work and innovation is happening on the policy front. That feels like there's a lot of that's where the action is.
Yeah, I hear you. And look, it's important. It's very important. I mean, every year since Bitwise's inception, so starting in 2018, we've done a survey of financial advisors, thousands of financial advisors every year. And up until 2024, the main thing, the number one thing holding them back from investing client assets in crypto was regulatory clarity. So I think like there's a moment in DC in particular where we feel like we've kind of like gotten to the on top of some sort of plateau or crossed like a Rubicon of sorts because we've had so much progress on the regulatory front. But it really does matter. It matters not just in crypto, it matters in every industry. You need to be able to, particularly for early stage companies, you need to know what the rules of the road are going to be. So it's important to be here, and I'm glad you guys are here.
Yeah, absolutely. Teddy, president of Bitwise, carries a lot of gravitas, such a role. Could you tell us how you ended up as president of Bitwise?
Yeah, sure. Well, thank you. I think that's very kind of you. Very kind. My career, I started in traditional finance. So I spent a couple of years at Goldman before getting into the ETF business generally. And so I got into the ETF business in the early days of that industry, before ETFs were a thing. Like, I think it's easy for a lot of us to look at ETFs now. They're the building blocks of like almost all wealth portfolios now. They're, in some respects, ETFs are actually the biggest financial innovation, even a fintech innovation of the past 30 years. Think about how huge ETFs are. 15 years ago, it was not assumed that ETFs were going to be as dominant as they now are. And so I was sort of lucky enough to get early on the ETF trend. I spent better part of a decade in early stage ETF issuers. After selling one of the companies that I worked for in the ETF space was when I fell down the crypto rabbit hole, got bit by the bug. I met Hunter, who you guys had on the show, when Hunter was starting Bitwise, and I wanted to be in crypto. What I knew how to do was build asset management companies, asset management businesses, and that was in 2017. So I've been working with Hunter and Matt, who you guys have had on the show since then, on building Bitwise. So that's the story.
Well, Teddy, we brought you on today to just kind of have a general conversation about what's happening behind closed doors in the asset management and kind of capital allocation space. Let's just start super high level. There was a news report today that I think actually Frank tweeted about that said that institutions and banks and firms are now adjusting their crypto allocation from 2% all the way to 7% recommended from RIAs, other firms. Where are we at as far as asset management space in terms of recommendations of crypto exposure? Is that 2 to 7% what you're seeing? What are you hearing? What's the chatter kind of behind the closed doors?
Yeah, so the one thing I would say for starters, and I know that crypto people don't love hearing this.
Okay, great. Let's hear it.
But I talked about this on stage earlier. It's still very early in the process. Going back to the second half of 2025 was really when we started to see the large platforms that host most of the wealth that is advised in America. The second half of last year was really when those platforms started to approve Bitcoin and crypto ETFs to be available for their advisors to invest in on behalf of clients. And so, like you say, behind closed doors, this is a little bit of a window into how that works. Like, in order for a financial advisor who runs his or her business on Morgan Stanley or Merrill Lynch or Wells Fargo or UBS, think about the large broker-dealer platforms where most of the mass affluent wealth in America, the doctors and lawyers and dentists who have a financial advisor that works on one of these platforms, there is a centralized gatekeeping process at each one of these places. And unless and until a product goes through that gate, they won't be put into the portfolios of those clients. And I think that the second half of 2025, really the fourth quarter and the beginning of 2026, is really when that approval process started to really go through the process. And the reason I say crypto people don't love to hear this is that it's early on. Right. in that process. Like, it takes a while for these things to work their way through the system. And what is the blocking and tackling of this process looks like? It now means that for these platforms that have thousands of financial advisors across America, someone who manages a crypto ETF, a Bitcoin ETF, an Ethereum ETF, a Solana ETF, needs to go talk to each one of those advisors and say, hey, here's why having an allocation, like you talked about Frank's article from this morning, 2%, 1%, 5%, here's why having an allocation makes sense. And then the advisor is going to want to talk about it. They're going to want to study it. And so it takes, I think, years for this to really unfold. And I think we're in the beginning of that process now. So I think it's a long game.
Yeah. Is this the same way that the ETF innovation unfolded on mutual funds and ETFs? Did it start out 1%, 5%, 7%? How similar or different is the parallel of the ETF business to the digital asset business?
Great question. I think it's very similar. Mm-hmm. So, like, something that a lot of ETF aficionados, like Matt Hogan, who you all had on, our chief investment officer at Bitwise, was one of the leading lights of the ETF movement early on, before ETFs were widely accepted. At that time, in the early 2010s, there were people who said that exchange-traded funds were financial weapons of mass destruction. Mm-hmm. And it's very similar.
Sounds a lot like crypto,
right? Like, it's very similar, and it's not all that different from any new technology. Yeah. Frankly, right? Like the horse and buggy. Proponents of the horse and buggy said that automobiles were the most dangerous invention, right? Like, it just, people are resistant to this kind of change. And from a very early phase in ETF's adoption, you could see that they were eating mutual funds, but it was going to take a decade or two to actually occur. And so I think that this is the way. Like, I was on stage earlier, we asked the question, like, hey, what's next? I'm very excited about what's next, but I also think that we need to, as an industry, be aware that change, it's rapid, but it does take time for it to work its way through the system. And I think we're in the early innings of that, and I'm very confident, Bitwise is very confident that is what's happening. Yeah.
And so one of the ways that these, types of folks who are yet to be exposed to the digital asset market get their information is through RIAs, through their advisor. And as you said, we have a process here with kind of the advisors actually studying, learning. making a pitch, being confident in it, and then actually going and implementing that with their clients and building a portfolio. One of the other ways that these folks get their information is through kind of like mainstream media. Wall Street Journal, Bloomberg, Yahoo Finance, these types. Over the last 2 weeks on the weekend, these news sources had a completely new story. Oil futures trading 24/7 on the weekend on this platform called Hyperliquid. And so for the first time ever, these folks are reading about this idea of 24/7 tokenized commodities trading. I can't imagine what they're thinking. Have you had any conversations with folks in this kind of camp who are like, did they call you up and say like, what's happening? Like, I'm just curious.
Yes. So it's kind of funny actually. Most Friday nights when I'm not quite wrapping up work for the week, I'll look down and it'll be like 6 o'clock at night and I'll tweet and I'll say, and some of the followers that I've had for a while will get a kick out of this. I'll say, it's 6:30 and the stock market has been closed for 2.5 hours. In crypto, it feels like it's the middle of the day, right? Bitcoin is still trading, the blockchain is never down, Ethereum is still trading, Coinbase is still ticking, Kraken's still ticking, we have people who are still putting orders in. It seems crazy to me, and it has, once you work in crypto for a long enough time, I've been at this since 2018, it seems crazy to me that the global financial markets shut down mid-afternoon, late afternoon on Friday, doesn't it? What are we doing here? The internet doesn't shut down. The stock market shuts down. Why? Because like people have to sign off from work. It's banks closed for the weekend, and it takes longer to send money. It's just not like the financial infrastructure has not caught up to the reality of the available technology. And so for a long time, I've had this view that it's just kind of crazy that this is what happens, that things just stop. And now if you want to trade risk on a Saturday night, the only thing you could trade was Bitcoin. And I think with Hyperliquid and the substantial progress that they've made with listing new things like oil futures, that obvious future is starting to become recognized by the rest of the world. The Wall Street Journal, Financial Times is like, oh, you can trade oil futures on Hyperliquid on a Saturday. And the answer is yes. And it reminds me of your question, Robbie. Is like, well, like, is this going to take a long time to develop or what? And like, as a like entrepreneur and technologist, I feel very impatient that it hasn't happened yet. But it also seems very obvious to me that like the future's here, it's just not evenly distributed, right? Like this is happening. It's just not happening as quick as we think it should.
Another thing that I wanted to throw your way was this valuation conversation. So I think a lot of the industry went through this kind of era, like let's call it 2017 to kind of 2025, where the valuations were not effectively compared to traditional markets, public equities, or other companies. It was kind of like we're living in this Metcalfe's law, L1 network effect, where there's this user growth, we have these transaction fees on these base layers, they're powering the future of the internet. Ethereum's trading right now, I think like 400 to 500 billion or something in that range. Bitcoin obviously quite a bit higher. And so you've kind of got these little carve-outs for Ethereum and Bitcoin, but the rest of the market, the valuation hammer is being struck on them because they're looking at Hyperliquid, but really they're looking at traditional equities and they're being compared on a revenue basis, on a PDE earnings ratio kind of framework, and it's new and it's different for crypto. When you're talking to institutional investors, clients, high net worths, are they thinking about crypto assets in the similar bucket as traditional equities and traditional companies? Has that kind of shift happened in their mind? Or just kind of talk us through what that valuation puzzle looks like from your perspective.
Great question, important, comes up, as you can imagine, in many of our conversations with financial advisors. I think the best person to follow on this, I'll talk my own book, is Matt Hogan, who's written eloquently and at length on these things. I would say that Bitcoin sort of stands alone in this category for the time being. Bitcoin in the professional investor set, financial advisors, institutional allocators, pensions, foundations, endowments, it sort of has its own story that it can be differentiated from the other blockchain tokens and assets. I think the emerging store of value, digital gold, supranational asset that can play this role of existing outside and on top of the existing financial system, sort of gives it this unique position where it is digital gold is not an analogy that a lot of people love, but the idea of being a digital store of value or emerging storehold of wealth is the narrative and valuation framework that gets applied the most. And I think in that light, the most reasonable thing that we see people do is compare it to the market cap of gold.
Right.
And so you're still in a high single digit relative to the total store of value market for gold. And I think that is the best that we've seen and the one that is most evenly applied. It's also interesting that you can look at that and look at what the gold market cap was when gold ETFs launched in 2004, and you can extrapolate some pretty ambitious potential growth numbers for Bitcoin. If you assume that the store of value market is going to continue growing the way it has in the last 20 or so years, and you also assume that Bitcoin is going to continue expanding the percentage of the pie that it gets, you can get to some very bullish price assumptions for Bitcoin.
Definitely.
And so anyway, we'll set Bitcoin aside. I think for things like Ethereum and Solana, I think is where you see more additional work being done, but still not as mainstream as Bitcoin. And I think there you see investors consider it as like, you have to think about it as almost a high growth software, high growth technology. And you do want to look at things like fees earned by the protocol. Staking rewards is also very interesting. Obviously, Solana and Ethereum are both proof of stake blockchains. So you have some sort of baseline that you can earn if you stake your assets, which I think investors find very compelling. But then taking those metrics, so fees earned, throughput, transactions, applications, you have like a little bit more of a venture lens that you can look at it through, but then a tech software investor lens that you can look at it through. It's not perfect, but you do have revenues or something comparable to revenues when you look at on-chain fees. And that's where we see, away from Bitcoin, the other blockchains, there's some more of that type of financial analysis being applied.
Yeah. There's a very provocative headline that gets tossed around, which is that there's more than 21 million Bitcoin. With an asterisk. The asterisk is that there's synthetic products, ETFs, derivatives, digital asset treasury companies where you're laying out a valuation heuristic that is very compelling. People want exposure to these things. When you are talking to asset managers and speaking about the institutional capital flows into this industry, where do you see those flows landing? Is it primarily in the spot assets themselves? And if it's not, if it's in this synthetic derivatives category on top of the spot assets, how dilutive to the spot assets are those contracts on top? If we're putting into a treasury company or an ETF, how complementary or dilutive to the overall industry of that asset is that derivatives product? Where are you seeing the institutional capital flows?
Yeah, it comes up a lot, primarily commentators who have spent a lot of time in crypto and in Bitcoin, but have not spent a lot of time in financial products. And so what I see, as I told you off the top, my background was initially in traditional finance. I spent a lot of time in derivatives, product manufacturing. Some of the derivatives that I worked on were options, futures, total return swaps, volatility swaps. And what I really see is the financialization of Bitcoin through the ETF. And what you have is you have Bitcoin entering the traditional financial system. And what you need for an asset to be in the traditional financial system is you need the participants in that ecosystem to be able to hedge risk. So hedging risk is usually being able to go long or short with a variety of different instruments. And so when you want to buy Bitcoin, there may not always be someone who wants to sell it to you at exactly the right time. So a market maker may need to step in to sell you that Bitcoin. That market maker doesn't want to get short Bitcoin, so he wants to hedge that exposure. He or she wants to hedge that exposure at the same time. So you need these dynamic abilities to go long and short at the same time so that liquidity can be provided to people who want it for these assets that exist in the system. I think that ultimately, though, the thing that people miss is that if you have more people buying Bitcoin than you have selling Bitcoin, the price is going to go up. If you have more people selling Bitcoin than you have buying Bitcoin, the price is going to go down. And the times at which we hear the most complaints, or dare I say conspiracy theories about paper Bitcoin and the derivatives market being too large, it's not when the price of Bitcoin is going up. Of course not. It's only when the price of Bitcoin is going down. And the reality is Bitcoin is emerging as a potential store of value asset. It's a fixed supply. It's whenever there's more sellers than buyers, it's going to go down. And we believe, and our investors believe, that there will be continued volatility in the market. Bitcoin will draw down periodically, as it has over the past 6 months. And we just think that that's a natural part of the process.
Yeah. Thanks for debunking our bear market, more than 21 million Bitcoin thesis.
Yeah, that thesis got tossed around a bit.
You mentioned the emerging volatility that's been happening in the digital asset space for a while. Robinhood actually makes about $4 billion on their options product per year. They offer options to traders. They do a lot of really insane options. Robinhood basically fills their orders, buys puts, sells calls, does intricate options market making basically. The crypto and digital assets options market, though, is kind of dominated by a couple players and also significantly smaller. What is Bitwise's plan to bring the options market as a core product for your clients and for your business line, and to capitalize on that? If Robinhood's doing $4 billion, there's no reason why you guys can't be chipping away at that in the digital asset space. What's the plan there?
Yeah, congrats, Vlad. $4 billion. Nice.
Yeah, it's nuts.
We actually have a growing part of our business is a separately managed account business where we have investors who have an existing large exposure to primarily Bitcoin, but sometimes other crypto assets, and they want to work with us to develop an options strategy around that core holding. And so those investors could have a variety of different financial goals relative to their Bitcoin. So they may have I'll use round numbers, $100 worth of Bitcoin, and they may want to hedge their downside risk. So they may say, okay, I'd like to work with you, Bitwise, so that you could create a downside hedging mechanism so that if Bitcoin drops below $85,000, sorry, I say below, we'll take it to current prices. We'll say, if Bitcoin drops below $65,000, I want you to limit my downside risk there. We may have other investors who say, hey, I've been long this Bitcoin for a very long time. I'd like to sell some options. I'd be comfortable selling my Bitcoin if it rises up to $90,000 again, and I'll sell call options to earn some premium on that in the meantime. And that's just like a small sample of what you can do in the options markets, and a little flavor of like the kinds of strategies that investors are interested in having developed for them that Bitwise can help them with. It's one of the fastest growing parts of our business.
Cool.
And one in which Bitcoin investors are becoming increasingly sophisticated in thinking about how to do these things. The other thing I would say is that this market is now, we talk about like the financialization of Bitcoin via ETFs. This market is now increasingly liquid in the traditional financial markets, because the options on Bitcoin ETFs are deep and liquid as well. It can be a little harder, or has historically been a little harder, to get this exposure on a spot basis in the US at least, because you need to trade on these derivatives trading venues like Deribit. But now under the new administration, I think those are coming to the US soon. And so there's a variety of ways that you can work to implement these, but there's also a lot of different tools that investors are interested in using options to hedge or manage their exposure.
As we financialize this asset class and it grows in maturity, and we tokenize more of these assets so that they become composable with these mechanisms and these tools, Matt Hogan was very excited about this vault complex.
Yeah.
I'm curious how important the vaults are to Bitwise's business going forward. And because we're in DC, what are you looking forward to from regulators, if anything, in order to fully support vaults in the next few years as a primary mechanism for this asset class?
Yeah, it's a big question, but I think it's an important one. I think that we're in the early innings. So the things that you asked about specifically was vaults. But I would extend that out a little bit to vaults, tokenization, perps.
Yeah.
All of these things, when you think about them bigly and you remix them together, they can replace a lot of the existing financial infrastructure. And I separate these two things a little bit. Like, we talked a lot about Bitcoin hedging, investing in Bitcoin, we talked about Ethereum, we talked about Solana. Those are the assets that you can invest in, that I am bullish on, that Bitwise is bullish on. We think there's a long-term bull market play there for the prices of those assets, and they're worth considering as an investment in your portfolio. This other topic, I think of as slightly different. This is technology based on the underlying blockchain along which those assets ride and reside, right? And I think that technology as a financial technology is 10x better than what we currently have.
Yeah.
And I think that, like, the scale of disruption is only starting to be realized. Like, vaults, when you think about it, can make programmatic and replace a lot of what is done in asset management right now. Yep. It's not going to happen tomorrow. Like, I'm not like a doomer, like an AI doomer, like we're all going to lose our jobs because of AI. But like, if you really like take out a notepad and start like scribbling around with what this technology can do, can simplify ETFs, can simplify mutual funds, it can make them transparent in terms of how returns are calculated. Hedging with perps, tokenizing exposure, getting leverage with perps, that disrupts Wall Street in a big way. Like Wall Street banks, prime brokerage businesses are $40 billion revenue a year business. Yep. Forget the 4 that Vlad does with the options, 10x that, right? And that's largely leverage and shorting. Now you can replace all that with perps and tokenized equities. Yeah. So it's a big topic.
Yeah.
And I don't know how deep we want to get into vaults. We're going to wrap up here, but I think RIAs and curators of vaults look very similar, and I think there's going to be some issues there because they look so similar and they operate in a very, very similar capacity. Yeah. The SEC is kind of starting to get involved, but they haven't quite figured it out yet. Still a bit of regulatory arbitrage left, but the vault curator who sets the parameters of the strategy that the assets get deposited into, they're very similar to an investment advisor.
Yeah, it's a good point. I think, we sort of started the conversation by saying we're not going to veer too much into regulatory policy because it's a little dry.
Here we are.
But I think this is part of where it's actually interesting, right? And I think that's part of why everyone who's building in crypto is so excited about the current administration. We're sitting outside of a room right now where the chair of the SEC and the chair of the CFTC are giving a joint panel right now.
We should probably close out.
I wonder if that's ever happened before.
They just issued guidance 2 times in the past week where they're working together on initiatives relative to crypto. In the prior administration and in the one before that, there was actually there was an antagonistic turf war between the agencies about who would be responsible for jurisdiction over these things. These are These are new technologies that are complicated, that have, don't fit neatly within the rules that were written 75 years ago. And what we need regulators like the ones that we have now that are really interested in actually creating solutions to the new issues that we have based on the new technologies.
Teddy
Fusaro,
thanks so much, man.
Thank you for joining us.
Thank you
First
for
time
having
on the Rollup, not the
Absolute
last.
pleasure.
Enjoy the rest of your time here in DC.
Thank you for having
sir.
me on the Rollup.
Thank you, sir.
See you again
All right,
soon.
guys.
Enjoy the rest of your time.
Thank you.
Thanks, Teddy.
Alrighty, guys. I think that about wraps us up for the day. It is 4:36 p.m. This has been nearly a 6-hour go around here. Thank goodness for Jacquelyn, for Rob, for all of our amazing
Thank goodness
guests.
for you too, buddy.
Day
Great
2 is
day
tomorrow.
one, successful day one, plenty of takeaways. We heard from Clarity. We heard about so many things. Apparently, Clarity, there's pending things that could happen as soon as tomorrow.
Yep.
We could get some news. There's work
I know
being
you love
done
that policy talk,
in
Rob.
that room right now.
Let's go, Rob.
Love that policy talk.
All right, Rob.
All right, guys. We'll see you guys tomorrow. Live here at DC Blockchain Summit, day 2. Thanks for tuning in. Bye.